Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So, I wish you guys are doing your preparation for the CMA inter examination in a very perfect manner. Everything is going on as planned and as expected. So, through a series of videos, I'm going to cover the content of the customs. So, Customs Act, we are going to discuss over a series of the videos. But before that, let me give you one caution. This customs related discussion, whatever we are going to have, this is relevant only for those students appearing for CMA inter examination. If you are a student appearing for CA inter examination, you have nothing to do with this lectures. You can simply ignore it. Why? Because this is not forming part of your syllabus. But if you are a student appearing for CMA inter examination, yes, then customs is also there as a part of your taxation paper. So that customs related discussion, not very large amount of discussion, very limited discussion. So the syllabus itself is very limited at the CMA inter level. That limited syllabus we are going to discuss over a series of videos. Okay, right. So these videos are going to be relevant only for CMA inter examination. CA inter students have nothing to do with this. So as you all are aware, as a part of our CMA inter, we have a taxation paper. Now in that taxation paper, we will be learning direct taxes also. We will also be learning indirect taxes. DT also will be learning, IDT also will be learning. So DT constitutes 50% of the weightage. IDT also constitutes 50% of the weightage. And when it comes to indirect taxes, at the CMA inter level, we have two parts. One is GST and the other one is customs. So total IDT constitutes 50 marks. Out of that, GST constitutes 40 marks and customs is going to constitute for 10 marks. Customs is going to constitute how many marks? 10 marks. So that 10 marks related discussion has been pending that we are going to discuss as a part of this videos. Okay, right. So now what exactly we are going to learn in the customs. So guys, if you are all aware, if you have watched the GST and introduction chapter and all, we have seen that in India, we have two kind of taxation system, which is a direct taxation and we have indirect taxation. So under direct tax, we have something called income tax. And one of the major indirect taxation which is prevailing in India is GST. GST is the most prevalent indirect taxation system in India. See, prior to the GST regime, we call it as pre-GST regime. Earlier, we used to have so many indirect taxes. We used to have something called central excise. We used to have something called VAT. CST we used to have, service tax we used to have. So like that, multiple indirect taxes used to be there. And along with that, customs duty also used to be there. Customs duty is also there even in the pre-GST regime. But what happened is, once this GST has come into picture, the GST has subsumed most of the indirect taxes. So like this, central excise is no longer there, VAT is no longer there, CST is no longer there, service tax is also no longer there. So this we all call it as all these taxes are subsumed into GST. What do we call it? All these taxes have become subsumed into GST, which means once GST has come into picture, these taxes has no role to play. But this Customs Act or customs duty, and broadly we call it as customs and FTP we call it. So whatever this customs duty is there, before pre-GST regime, whatever customs duty is there, even after GST regime also, this customs duty is still there. So what do I mean by this is a customs duty is not subsumed. This customs duty is not subsumed into GST. This has not been absorbed by the GST. Customs duty is there even after GST regime also. So that customs duty, that customs act, a few provisions we are going to learn here. A few provisions. Once again, let me give you a caution here. See, customs is a very broader concept. In customs, we have in customs act, we have so many things to cover. Like the way we have learned in the GST, what is the charging section, what is a taxable event, how to value, what is the rate of taxes, how to calculate the amount of taxes, what do you mean by assessment, penalties, so like that. Like GST is a very huge topic. Customs is also a very huge topic. But at the CMA inter level, we are not going to get a complete understanding of the customs. So you will not get such a comprehensive understanding. As you got a comprehensive understanding of GST as a part of our lectures, that level of comprehensive understanding we are not going to have for customs. Why? Because that much volume of the syllabus is not there. So only we are going to get to know what is what in customs. So when customs will be levied, what is the taxability, how to do valuation, how to calculate the duty. So minimal provisions we are going to cover. Okay. And once again, if you look from the weightage perspective also, it is hardly 10 marks. It is concentrating only for 10 marks. And the questions also will come from selected topics. And even if you open the CMA inter study material also, you will have somewhere around 68 pages. You have customs related content of amounting to 68 pages of content only will be there. And one more problem here at the CMA inter level is that they give a lot of things which we can't go deeper. They will try to introduce everything, but we will not be able to have complete understanding. Why? Because that things will make sense when we have an in-depth understanding. But that in-depth understanding of the customs is not required at the CMA inter level. But still, here and there, they will try to touch upon a few things which I can't go deeper and explain. Why? Because if I have to go deeper into that concepts, I have to go deep into the customs. If I go deep into the customs, that will take a lot of time, but that is not relevant for your examination. So our objective is to first clear the examination, that in-depth concepts we will learn at the CMA final level. Okay, so that caution I wanted to give here. So quickly we will try to cover the concepts of the customs. Will not take much of a time. So we will take like this material has also been prepared. So you will find some material. So whatever study material is there of the CMA inter that we have presented here in an easily understandable format. We did not cut out any content. So we have somewhere around 30 pages of the material available here. This 30 pages, if we complete, 10 marks will be there with you. Okay. And hardly it will take some 5 to 6 hours. In the 5 to 6 hours, we will try to wind up entire customs part. That will be enough for your examination. Okay. So you need not have any second thought. So we will start learning now. Having said all this introductory things, we will try to go into the concepts of customs now. Shall we proceed ahead, everyone? Let us do it now. So since we got familiar with what and all we are going to cover, so let me now dig deeper into the concepts of customs. So first of all, let us try to understand when customs duty will be imposed. Guys, if you remember the discussion whatever we had in the GST, what is the taxable event under GST? When GST will be imposed? So we had a dedicated chapter where we have seen that the taxable event under GST is supply. Whenever supply takes place, either that could be supply of goods or supply of services, that is a triggering point. That is the taxable event. That is a triggering point which will cause the government to come and impose a GST on that supply. So the taxable event under GST is supply. Whenever supply of the goods takes place, whenever supply of the services takes place, it will trigger the government to come and impose a GST. Okay, sir, we understood GST will be imposed when supply is taking place, but when customs duty will be imposed? When customs duty will be imposed. So customs duty will be imposed whenever import and exports of the goods takes place. When customs duty will be imposed? In case of imports and exports of the goods. Basically, when we people of our country, when we engage in international transactions, when we engage in international transactions of the goods, then the customs duty will be imposed. So how a person in India, if I'm a person in India, how can I engage? What are the different manners? What are the different forms in which I can engage in the international transaction? Say, for example, I'm a person, I'm a manufacturer, or I'm a trader of some goods in India. So what I could do? So how I can engage in the international transaction is, number one, I can export. I can export my goods to other countries. Say, for example, I'm a manufacturer of electronic items. In India, I'm a manufacturer of electronic items. So I came to know that some another country, like for example in Dubai, they need these electronic items. So what I have done is I have sold my goods to the customers who are there in Dubai. So what I have done there, I have done an export. See, first I'm trying to set the base for the entire customs in common language, in very simple language. Technical things will come back to that later. So first I'm setting the foundation for the entire customs. So I'm building up the basics. Okay, so please focus. I will keep as simple as I could. So this is one way where I can engage in the international transaction. I can export my goods to other countries. Or what else I can do is, say for example, I'm into manufacturing of electronic devices. Okay. For the purpose of manufacturing my electronic devices, I need some chips. Electronic chips I needed. So what I have decided is, let me try to import the chips from US. I need electronic chips for the purpose of manufacturing my electronic devices. For that purpose, I need the chips, and that chips I wanted to purchase from US. So I found one vendor who is there in the US, and I purchased that goods. I purchased that electronic chips for the purpose of my manufacturing of electronic devices. So this I call it as imports. I have imported the goods. So these are the two common forms for any person to engage in the international transaction. Either they will sell to the people outside of the country, or they will buy the goods from the persons outside of the country. Now what will happen is, whenever imports and exports are taking place, there the Customs Act has a role to play. there the Customs Act will have a role to play. There they will have a right to collect the customs duty on the imports and exports of the goods. Now, first of all, we will focus more on imports. We will focus more on imports. We will have very limited discussion on exports. Why? Because let me tell you one simple logic. See, it is unavoidable. Any country will have, from any country, they will have imports. They will import the goods from other countries. You take, for example, India. India is also not an exception. In India, there are various people who will import the goods, and there are various people who will export the goods. Tell me which one is favorable for the government, because of imports or because of exports. A country will get benefited. The country will get benefited because of exports. A country will always get benefited because of exports. If you are able to export the goods from your country to other country, it will add up to your foreign exchange reserves. But when a country is importing more, it will lead to fiscal deficit. It will lead to that foreign exchange deficit, and it will have a bad impact on the that currency of that country. So if a country is importing more than exporting, that will not be that favorable condition for that country. But what is encouraging for the country? If the country is doing more and more exports, then that will definitely become a very prosperous thing for that country. So that's why even what government also says is, on exports, generally duties are all exempted. Why? Because it will add up to the foreign exchange reserves of the country. But when you are importing, that is a discouraging thing for the government. They want to discourage the imports. Any country, if you take, they want to discourage the imports. They want to promote their exports, because that will strengthen their economy, that will strengthen their exchange rates, that will strengthen their local currency. So that's why even in the customs part also, whatever we are going to discuss, we are going to concentrate more on imports. We are going to concentrate more on imports. Why? Because on imports, customs duty is primarily levied. In most of the cases, customs duty on exports will not be collected except in a few certain circumstances. So we are going to concentrate more on the imports part of the international trade in customs. Exports, we are going to concentrate very less, very limited discussion we are going to have. So now let us come to imports. Sir, why there is a need for taxing imports? Why there is a need for importing customs duty? Why there is a need for importing customs duty in the country? So very simple, guys. Say for example, there is one manufacturer, or let me take for example, I'm an electronic device manufacturer. Okay. For the purpose of my manufacturing, I needed some chips. I needed some electronic chips, not the chips which you get. That electronic chips will be there. No, that chips I need for the purpose of manufacturing. Now these chips, whatever I need for the purpose of my business, I can procure them from India also. There are local manufacturers of electronic chips. There are some vendors who are in US also. These chips are getting manufactured in India. These chips are also getting manufactured in US. See, why we prefer foreign countries? Why we prefer imports? Why any person in India would like to import goods from another country? Number one, main reason, if it is not available in our country. If the goods are not available in our country, that could be one reason why a person can import that goods from the foreign countries. Another reason why any person will prefer imports is when they are cheaper. When they are cheaper in foreign countries. So now say for example, if chips are manufactured in India, I'm an electronic device manufacturer, I need chips for the purpose of my manufacturing. For that purpose, if I procure that chips in India, each chip is going to cost me 100 rupees. Each chip is going to cost me 100 rupees. But in US, if I am able to purchase the same chip in US, I can get it only at 60 rupees only. Because might be, since it is a developed country, there could be economies of scale which you might have learned in your economics and all. They might have some advantages because of their plant and machinery, because of their labor availability, whatever it is. The chip manufacturing cost in US is only 60. So if I procure a chip in local market, I have to pay 100 rupees for each chip. But if I purchase the same chip from US, I have to pay only 60. Now just imagine there is nothing called customs and all. Just imagine for the time being now. So just create a scenario where there is nothing called customs duty, where you can import the goods without any payment of taxes. If that is the case, what will happen? So any person in India, if any person who needs that chips, what will happen is he will stop buying the goods from the Indian market. He will buy all the electronic chips from US only. He will buy all the electronic chips from US only. Any person will prefer, no, wherever he is able to get the product at a better pricing, as a prudent businessman, you will always prefer to choose that option only. So even myself as a businessman, if I have to purchase the chips, if I came to know that in India that chip is costing me 100 rupees, but if I could procure the same chip from US, I could get it only at 60 rupees. Why would I buy in our Indian market? what I will do, I will every person whoever is in need of these electronic chips, he will try to import that goods from US only. Now you tell me, if everybody starts importing that goods from US, what will happen to the Indian manufacturers? What will happen to the Indian manufacturers? They will not have any demand for them in their own country. And when there is no demand for that goods, what will happen to all these manufacturers? They will go bankrupt. They have to shut down the factories. They have to shut down their factories. If they are shutting down their factories, employment opportunities will come down. Employment opportunities will come down. So it will lead to unemployment in the country. If it is leading to unemployment, it will increase the poverty in our country. It will increase the poverty in the country. And because of that, wealth gap increases. So all these are affecting the economy. Yes or no? All these are affecting the economy. So if the people start preferring more imports than buying the local manufactured products, what will happen? This is how an economy is going to completely get shaken. So that's why what the government want to do, they want to make the Indian products also competitive. They don't want the people in India to prefer imports just because they are cheap. They want to make that imported goods also at a par with Indian products, so that Indian products can compete with the foreign products and the imports can be discouraged to some extent. Imports can be discouraged to some extent. So how can they make the Indian products competitive when compared with the foreign products? So what the government will do is, okay boss, let us do one thing. If you purchase the goods from US, how much you have to pay? 60 rupees. We will do one thing. We will impose something called customs duty. We will impose something called customs duty. So we will import customs duty at the rate of 40 rupees on each electronic chip. So now if you have to import the customs duty, if you have to buy the electronic chip from US, you have to pay for that product 60 rupees. And since you have imported, the government will come and impose on you something called customs duty. 40 rupees of customs duty they will impose. You have to pay this customs duty also. Now the net cost for the importer, that will also become 100. That will also become 100. So now if you pay close attention, in India, if you purchase a product, you are required to pay 100 rupees. If you are required to purchase a product from US, then also you are required to pay 100 rupees. Now both are at par. Both are at par. Now there is a fair ground for the Indian products to play. Now there is a fair competition. Now any person will not unnecessarily prefer the foreign product. He will also analyze which products are better. Whether in India he can procure or he can procure from the US. Now he will think. But if the price is less, if there is no concept called this customs duty, what will always happen? Any manufacturer will try to prefer importing from US only, but by imposing the customs duty, he will think, now if I buy the same product in India, then also it is costing me 100 rupees only. Why unnecessarily I have to import? Let me buy it from the Indian market only. And logistics issues and all can be avoided. Yes or no? So that has been the whole purpose of the customs, to make the Indian products competitive when compared with the foreign products, so that our country also can prosper. So if that competitive things are not maintained, if our Indian products are not made competitive with the foreign products, with the imported goods, I have already told you how and all it is going to affect our economy. How and all it is going to affect our economy. So that has been the ultimate purpose of customs duty. And this customs duty is oldest law, oldest taxation law. It is not something newly introduced after income tax, after this GST, after these other indirect taxes. Customs is from ancient times as well. Customs, first and foremost kind of taxes which are levied in our country is customs. After the customs have been imposed, then these extra other taxes have come into picture. So customs is as old as history in India, not just in India, in all other countries. So the same kind of policies you will have in all other countries also. Like the way India is importing, India is imposing customs duty and all, US also will have customs duty. If anybody from US is importing the goods in their respective country, US government also will impose customs duty. That's what the recent trade wars are all about. Recently, if you might have heard about it, Trump, this tariff rate, it is creating a lot of issues in the global economy. So Trump has declared the tariffs on India, on China also he has declared the tariffs, on many other countries and many other developed and developing nations he has started imposing tariffs. Sir, what are all the tariffs? Tariffs are all nothing but customs duties. Tariffs are all nothing but what? Customs duties. So Trump was very discouraging for imports in their respective US country. So what he has told, if anybody is importing any goods from India, 50% tariff will be there. That means that person in US, if he imports the goods from India, he has to pay higher taxes. So in order to encourage the local products in the US, Trump has come up with this tariff rates and all, and which has created a lot of chaos in the global markets. So like that, customs is going to play a very crucial role for any economy to either prosper, to either break down the economy. So the crucial thing is this customs duty. Able to understand? So this is what regarding imports. So if we have a brief introduction regarding this customs and all. So if you pay close attention here, customs plays a crucial role in economy as it is a major source of revenue for country. One of the main sources of revenue for the country is customs. The term customs comes from the word custom, which means a repeated practice or action in similar circumstance. So this word has been derived from some common phrase called custom. What do you mean by custom? A routine practice, a regular activity, repeated practice, we call it as custom. Custom tradition, we say, no, right? So collection of revenue through customs in India has existed since ancient times only. It is not something which is new now. It has been there since ancient times only. Modern taxation system, including customs, was introduced during British rule itself. It started in 13th century England under King John, and local sheriffs collected protection money for foreign traders, which later become state revenue. From the British Empire itself, these things are there. Then after that, other major forms of revenue like excise, income tax were introduced much later. The other indirect taxes or direct taxes are levied much later. But first and foremost kind of taxes which are levied are customs only. And the Sea Customs Act, various acts related to customs have been introduced, like something called Sea Customs Act was introduced in 1878. Then after that, something called Land Customs Act was introduced in 1924. Indian Aircraft Act has been introduced in 1934. And after independence, India continued with these British era laws until 1963, when the Customs Act 1962 was passed, repealing all previous enactments. That means until 1963, we are following the rules which are imposed on us by British government only, but our own customs law came into effect from 1963 by way of introduction of this Customs Act 1962. So this is what regarding brief history of the customs. Not that important from the examination. They will not ask you a descriptive question from here, but they might ask you some blanks, fill in the blanks, or MCQs they might ask. So that's why better you go through this once and remember the dates and all. Okay, clear and comfortable everybody? Right. So now before we proceed further, let us try to understand what is the process. What is the process of customs? What is the process of imports? We will try to understand how the imports will happen. Say for example, we have Indian territory we have, no? Right. So Indian territory we have. Just give me 1 minute. Right. So this is the Indian territory, right? So this is all our India. Now, when I say imports, how imports can happen? Imports means what? From a foreign country, if you are buying the goods. From outside of India, if the goods are coming into India, that we call it as what? Imports. Okay. So now, the goods can come from another country into India through multiple ways. Through land, it might come. Say, for example, the goods are coming from here to here by way of a truck. The goods can come by way of land. Or the goods can come by way of air. How the goods can come? The goods can come by way of air. So I don't know how to draw an aircraft. So I assume this is an aircraft. The goods can come by way of air. Or even the goods can come by way of a vessel also. The goods can come by way of a vessel. So the goods can come by way of a vehicle. The goods can come by way of air. And the goods can come by way of vessel. And one of the most common way by which the goods will be traveled in the through international transactions is through water. Why? Because this is the cheapest. This is the cheapest. So water fare and all, if you are transporting the goods through water and all, so the fare will be small when compared with the other modes of transportation. So many cases, the goods are going to get imported or exported by using the waterways. But whatever it is, 3 modes are available. So the goods can come by way of air, the goods can come by way of water, the goods can come by way of vehicle also. By land also they can come. Now say for example, India wants to import some goods from US. There is one person in India, he wants to import some goods from US. Now say for example, that goods are coming in a vessel. There is one vessel. In that vessel, that entire goods are loaded and that goods are coming to India. Now say for example, this is all the coastal line, no? This is all the coastal line of India. Now through this coastal line from any place, coastal line is very bigger. Kilometers of coastal line we have in India. Now this person can bring that goods. So ship is coming, that ship can come to any coastal point and it can come inside the country. But what the government is saying is, if you are importing the goods, you have to pay customs duty. Sir, but just I'm saying one example of the water only, but the goods can come from many other ways. Now you all might get it out. Sir, government is saying when our goods are imported, you have to pay customs, but the coastal line is very, very bigger. How the government will be able to know when the goods are imported, who is importing the goods, what goods are getting imported, how the government will come to know? You can't expect the government to appoint the guards or this government officers throughout this coastal line. Throughout the coastal line, they can't appoint the guards. No. Yes or no? So there need to be proper mechanism. Government needs to have proper procedure. They should implement some proper procedure where they can identify which goods are getting imported, when they are getting imported, who is importing them, and how much amount of tax has to be collected. They need to have one procedure. If they don't have proper procedure, what will happen? Like I have told, this person will bring a vessel containing all the goods. Some coastal line he will found where there are no guards, no monitoring and all. Through that, he will bring the goods into the country and he will start selling it. Then the entire objective of the customs itself will be lost. So that's why government needs to have one proper structure. They need to say one proper structure. Okay, if someone has to import the goods or if someone has to export the goods, they have to follow one particular procedure. So what is that procedure? Let us try to understand it. So what is that procedure is, for the purpose of the customs, what the government has done is they have built some custom stations or custom ports also, you can say. So you can say either airports or this water ports, sea ports, ocean ports, whatever are there, those have been established. Say for example, since I'm talking from the waterways perspective, so at Mumbai, here they have kept one port. Okay, so now they have another port here. They have some another port here. They have some 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 port here. So what the government will do is they will establish ports. That could be airport, that could be ocean port, whatever it is. So government will establish some ports. So, and what the government has told is, if you want to bring the goods into India, if you want to import the goods from outside of India to a place inside India, the goods must come through this ports only. The goods must come through this ports only. So wherever ports are there, so through that ports only you have to bring your vessel. So now they will establish the ports. Here they will appoint the government officers. They will have proper infrastructure. They will have some checking mechanism. So all the things they have set up. So if you want to import the goods into India, that importing should take place through these ports only. Now what will happen? Say for example, there is one person, he is importing the goods by way of a vessel, but he did not touch any of these ports. So what he has done is he found some place where there is no monitoring and all, as I have told, and he brought the ship here, unloaded all the goods into India, and he has started selling it. This is what we call it as smuggling. You might have often heard this term, smuggling, and smuggling has happened, smuggled goods. You might have often heard that. So what do you mean by smuggling? This is what the meaning of smuggling. If you are bringing the goods into the country other than by way of authorized custom ports or airports, by illegal means, if you are bringing the goods into India without paying the customs duty and all, that activities we call it as smuggling activities, which is a very bigger crime. If a person is caught doing the smuggling and all, he has to face so many consequences. He has to face imprisonment, penalties and all, a lot of consequences he has to face. So that's what the government has told. If you want to bring goods into India, we are establishing some airports or you are establishing some ocean ports and all. You have to bring the goods through that mechanism only. To bring the goods through that mechanism only. Now, say for example, there is one person. There's a person, Mr. A. Assume myself, I'm the manufacturer. So I wanted to import some chips. I wanted to import some computer chips for the purpose of manufacturing of electronic devices. So I asked a person from US, boss, you do one thing, you load all the goods in the vessel and you send it. I don't want to do smuggling. What I wanted to do, I wanted to get that goods through all the custom clearances. Now what will happen is this vessel has come. This vessel has come to this airport here. Say for example, this is a Vizag airport. At the Vizag airport, this vessel has come. Now here customs authorities will be there. Custom officers will be there. Now what these custom officers will do is they will receive that ship. That ship will come to the custom station. Then all that goods will be unloaded at the port. At the customs port, all the goods will be unloaded. Now, what I am supposed to do? Is we have to go to that airport. Sorry, you have to go to that customs port, and you have to go and say, "Sir, I am the owner of this goods. I am the person. I am the importer. I am the person who has imported the goods. I am the person who placed the order for the purpose of these goods, and you please hand over the goods to me." So I will go to this Vizag airport and I will say, "Sir, I am the owner of this goods. I am the importer who actually imported these goods from the US. So please give me my goods. Please give me my goods." So now you have to prove your identity. You have to prove it to that customs authorities that you are the true owner. You have to prove your title to that goods to the customs authorities. For that purpose, you will submit a document called bill of entry. What do we submit, guys? We submit something called a document called bill of entry. Bill of entry is something which is nothing but the document which proves that you are the actual importer, you are the person who is having the ownership of the goods. So you have to give to the government something called bill of entry. If you give to the government something called bill of entry, then the customs authorities will do the assessment. What the customs authorities will do? Customs authority will do assessment. What do you mean by assessment? Now they will determine, okay, what goods you are importing. So they will determine how much quantity of the goods you have imported, what is the value of the goods you have imported, that they will determine. Then they will determine what is the duty rate, what is the rate of customs duty. Say for example, you imported 1 crore worth of goods. So customs authorities will determine, okay, you have imported 1 lakh worth of goods. Now they will determine what is the rate of customs. Say for example, the goods, whatever you have imported, they attract the customs at the rate of 20%, customs duty at the rate of 20%. So 20 lakh rupees will be your customs duty. So now this customs authorities will do that assessment. They will determine, okay, 20 lakhs worth of customs duty you are required to pay. Now what you have to do is you have to make that payment of the customs duty. Whatever this 20 lakh rupees of assessment of customs duty has taken place, that 20 lakh rupees of customs duty you have to pay. And once you have paid that customs duty, then you can clear that goods from the customs port. From this customs station, you can clear that goods. Then now you can bring that goods inside the country and you can do whatever you want with that. When I say whatever you want with that, you can either use them for the purpose of manufacturing or you can use them for the purpose of trading, whatever it is. First clear your dues at the customs port, then they will give you clearance. Once you have got the clearance, then you can bring that goods into India and you can use it for your own purposes. So tell me, what is the entire customs procedure? First, the goods will if you want to import the goods, that goods have to come through customs port, either customs airport or customs ocean port or seaport. Then you have to show your identity. You have to go to the customs authority, show your identity that you are the true owner of that goods. You are actually importer, you are the true owner of the goods. How you can prove your identity? You can prove your title of the goods by submitting one document called bill of entry. Now, on the basis of that, customs authority will do the assessment. What do you mean by assessment? They will determine what kind of goods you are importing, what is the value of the goods, what is the quantity, and they will determine what is the rate of customs duty, and they will determine what is the amount of customs duty you are required to pay. You have to make the payment of that customs duty, then they will clear the goods. That we call it as clearance for home consumption. That we call it as what? Clearance for home consumption. See, some terms we have to become very, very familiar here. So what I'm trying to say, clearance for home consumption. So what and all terms I have used till now? Come on. What and all terms I have used? Number one, I have used something called custom station. Custom station. Then I have used something called bill of entry. I have used something called bill of entry. Now I am saying that clearance for home consumption. All these terms are very, very important, guys. So once you become familiar with all these terms, the further discussion looks very, very smooth. If you don't understand these basic terms, the discussion sounds very complicated. Clearance for home consumption, I have told you now. So what do you mean by clearance for home consumption? After making payment of all the customs duty, the customs authorities will release an order. Okay, you can clear that goods from the customs station. You can bring inside India. So that we call it as clearance for home consumption. Now, sometimes what will happen is, say for example, once again, the goods have come here. So you are a person. So once again, let me draw the diagram here. So you are a person, you have imported the goods, that goods came to port, that goods came to customs port. Now you don't want the goods immediately. So if you want the goods immediately, what you should do? You should go to the customs authorities, submit the bill of entry. Once you have submitted the bill of entry, they will do the assessment. They will determine what is the amount of customs duty you are required to pay. Once you pay that, they will clear it for home consumption. So what else you can do is, if you don't want the goods immediately, you can do something called, you can request the customs authorities to do the warehousing of that goods. To do the warehousing of goods. Sir, what do you mean by warehousing? That means you are telling to the customs authorities, sir, I don't want the goods now. Please keep it in the warehouse. Sir, which warehouse? Customs warehouse, we call it. What do you mean by customs warehouse? Customs warehouse means customs authorities will give license to some warehouse operators to operate as customs warehouse. So say for example, here we have some warehouse. So if you submit one application, so that we call it as bill of entry for warehousing. Into bill of entry also we say, you need not get into all that terminology. So as an importer, what you can say to the department, what you can say to the customs authorities is, sir, I don't want the clearance. I don't want to bring the goods inside country now only. So what I want to do is, whatever goods which are there at the customs station, please keep it at the warehouse Which warehouse? Not this importers warehouse. There will be some places called customs warehouse. So I will request this customs authorities to move that goods to the customs warehouse by submitting one bill of entry for warehouse, not for clearance. For warehousing, I will submit one bill of entry, and what this customs authorities will do is they will move my goods and keep it in the customs warehouse. Keep it in customs warehouse. See, these customs warehouse are also under the control of the custom authorities only. These warehouses also will be under customs authorities only. Okay, your goods are kept in the customs warehouse. Sir, when the goods are getting moved from customs station to the custom warehouse, am I required to pay customs duty? No, you are not required to pay any customs duty. You are required to pay customs duty only when you are clearing for home consumption. When you are clearing the goods for home consumption, then only you are required to pay the customs duty. So here what is happening? So you are clearing the goods from the customs authorities for warehousing. That means you are not taking the control of the goods and you can use it for whatever purposes you want. Just you kept it at the warehouse of the customs. Now after a certain period of time, what will happen is now you will go to that customs warehouse. Then now you want it cleared for home consumption. Now what you should do is you should go to the customs warehouse, then submit the bill of entry for home consumption, clearance for home consumption. Now what will happen from the warehouse? Now if you when you go to the warehouse and submit an application for clearance for home consumption, at the warehouse they will do the assessment. Now when you are clearing for home consumption, then they will do the assessment, then they will determine what is the value, what is the quantity, what is the rate, what is the customs duty that they will determine, and that amount of customs duty you have to pay. After paying that customs duty, then your goods will be cleared for home consumption from the warehouse. Cleared for home consumption from the warehouse. So one point what I want to make here is you will be liable to pay the customs duty only when you are clearing that goods for home consumption. When I say home consumption, not for the purpose of your personal consumption. Home consumption means you are bringing within the India and you are using it for whatever purposes you want. That could be for manufacturing, that could be for trading, whatever it is. So that we call it as clearance for home consumption. So point which I want to make it very clear. As a dear student, you all have to note this point. You are liable to pay the import duty or customs duty only when the goods are cleared for home consumption. So what do you mean by this? I have introduced one more concept here. So once again, if I tell you summary, if you are a importer, importing the goods, you can do two things. You have two options. One is from the customs station, directly you can clear the goods for home consumption. Directly you can clear the goods for home consumption. Directly you can do it. Okay. Or else what you can do by submitting one bill of entry for home consumption. Or else if you don't want the goods immediately, what you can do warehousing. You can warehouse the goods at the customs warehouses. When you are making the warehouse, when you are causing the movement of the goods for warehousing, at that point of time, are you required to pay customs duty? No, you are not required to pay customs duty. You will execute something called bond. One bond you will execute, and under that bond, your goods will be moved from the customs station to the warehouse. And later, from the warehouse, what you will do? From the warehouse, you want to clear your goods for home consumption. So from the warehouse, when you are clearing for home consumption, then the customs duty you are required to pay. So if you are directly clearing for home consumption, you submit a bill of entry and pay the customs duty. If you are warehousing first, for the purpose of warehousing, you are not required to pay any GST. But from the warehousing, when you are clearing for home consumption, then assessment will happen. Then the customs duty will be required to pay. Understood? Clear and comfortable, everybody? So one more term which we have understood here is warehousing. Warehousing of goods. Warehousing of goods. Understood? So four terms I have explained. One is customs station, then have explained something called bill of entry, then have explained something called clearance for home consumption, and also warehousing of the goods. Understood? Clear and comfortable, everyone? Now, going forward. Right. Exports. Now, if we talk about exports, similar, more or less the same thing will be there for exports also here. So what will happen is, if you are a person, if you want to export your goods outside of India, like in the manner of imports, in the exports also what we do is we go to the customs station. There we have to submit some documents. There we will go and hand over all the goods which we want to export and all. And after handing all the goods at the export at the customs authorities and all, that verification and all checks and all will happen. Here you have to generate one document called shipping bill. For imports, we are generating something called what? Bill of entry. But if you want to export the goods, more or less the same procedure. You have to take all the goods to the customs station. There all the checks and verifications will happen. They will determine what goods you are importing, what goods you are exporting, what quantity you are exporting, what value you are exporting. Generally on exports, you are not required to pay duties. but in exceptional cases, you will be required to pay some duty and all. So their customs authorities will determine all your assessment, what is the duty you are required to pay on the customs and all. On exports, generally you are not required to pay. Once again, I am saying, after all the clearances, you have to submit one document called shipping bill. Once you submit that shipping bill, now the goods will go from this customs station to outside of India, to the respective destination it will go. So this is what the procedure for exports. So tell me, what are the documents which are getting generated? For imports, we will generate a document called bill of entry. For exports, we will generate a document called shipping bill. And everything has to happen to a authorized custom station. Clear? Comfortable, everyone? So this is what a basic introduction. This is what the basic terminology underlying the customs concept. So with this understanding, we can go to the material and we can start reading it. Okay, right. So now with this background thing, let us start reading the material. So as we all are aware, some basic things are there here and there. So like if you see, any tax can be levied. In the GST introduction also we have seen, if a government has to levy tax, they can't do it unless that tax has been imposed under some law. And the constitution, in the constitution we have if we have entry number 83, there we have seen three lists. List 1 contains those matters on which the central government can impose the taxes. List 2 contains some matters on which a state government can impose the taxes, and we have list 3 where simultaneously central government and state government both can impose the taxes. So able to remember this? All we had an introduction this all discussion we had in the chapter introduction to GST. So similarly, if the government is imposing customs, in the constitution they should have power. So where that power is there for the government to impose that customs. So if you see here, entry number 83 of the list 1, so empowers union government to legislate and collect duties on imports and exports under section 12 of the Customs Act 1962, effective from 1st of February 1963. So there is entry number 83 in the list 1. So as a part of that entry in the constitution, the government has reserved the power. Which government? That to central government. So customs duty is something which is imposed and levied and collected by the central government. So central government, by way of entry number 83 list 1, they have reserved the power to collect the to import customs duties on imports as well as exports. Okay, next, sir, what is the sources? See, all these remaining things, we'll come back to that later. What is the source of custom law? Basically, whatever provisions we are reading, that we are reading from 2 acts. When I say we are discussing the customs, that customs provisions have been taken from 2 acts. Sir, what are the 2 acts? One is Customs Act and the other one is Customs Tariff Act. So you can find it here. When I say we are reading customs related provisions, that customs related provisions are taken from 2 laws. Number 1 is Customs Act 1962 and the other one is Customs Tariff Act 1975. See, Customs Act talks about all the procedural formalities like what is import, what is export, what is the procedure, how to value, how to do assessment. So like that, all the procedural formalities, valuation related things, everything has been explained under Customs Act. But what does Customs Tariff Act deal about is, Customs Tariff Act talks about rates. What is the rate of customs duty? That will be determined by way of Customs Tariff Act. So if I put it in simple terms, Customs Act will talk about all the procedural formalities and valuation related things. But what is the rate? For example, if I'm importing electronic devices, what is the rate of customs duty? If I'm importing plastic related items, so what is the rate of customs duty? If I'm importing some machinery, what is the customs duty? If I'm importing some vehicle, what is the customs duty? Similarly, if I'm doing exports and all, if I'm exporting certain product on which customs duty will be imposed, what is the rate of the customs duty? That rate of the duties and all will be covered under Customs Tariff Act. So 2 acts we are going to learn. When I say we are reading custom provisions, we are actually reading the provisions of 2 acts. Number 1 is Customs Act 1962, which is going to talk about import and export duties imposed on import and export of the goods. Then what does Customs Tariff Act deal about? Customs Tariff Act deal about rates of customs duties which is levied on imports as well as exports. It talks about custom duties which are imposed on rate of duties which are imposed on imports and exports. In that also we have 2 schedules. The first schedule is talking about rates of duty, rates of the customs duty on imports, rate on imports, and second schedule talks about what will be the rate of duties on exports. So once again, if I put it here, in the Customs Tariff Act, we have 2 schedules. First schedule will talk about rate of duty on imports, and we have second schedule. Second schedule is going to talk about rate of duty on exports. So simply you remember, Tariff Act will talk about what is the rate of duty which you will be required to pay. So apart from these two acts, Customs Act 1962 and Customs Tariff Act 1975, we have so many rules and regulations also. Sir, what are that rules and regulations? Like if you see here, list of rules is also given here. We have something called Customs Valuation Rule, Determination of Value of Export Goods Rules 2007. Nothing but if you are making value, if you are making exports, how to determine the value of exports. Like in the GST chapter, like in the GST section, we have understood value of supply. No, there we have seen section number 15, how to determine value of supply. So like what is includable in the value of supply, what is not included in the value of supply, what is the treatment of discounts, pre-discount, post-supply discount, all the things we have covered, right? So like the way section 15 is talking about how to determine the valuation under GST, similarly we have some valuation rules. We have custom valuation rules for determining valuation of exports, and also we have custom valuation rules for determination of value of imports. If you are making exports, how to determine value of the exports? If you are making imports, how to determine the value of the imports? And along with that, we have something called baggage rules. See what is basically baggage. For example, if you are a person traveling, you will have your luggage. That luggage we call it as baggage. So on baggage also customs will become applicable. That is not there as a part of our CMA inter level. That will be discussed at the CMA final level. But we have something called baggage rules and re-export of imported goods. For that also, like we have duty drawback goods and all. So like that, we have various rules also there. Along with the two acts, we have various rules. But at the CMA inter level, we are only going to mainly concentrate on custom valuation rules, that to imports. Exports also, we are not going to concentrate much. At the CMA inter level, we are going to discuss how to determine the valuation, that too in the case of imports. That valuation rules we are going to focus more. Understood, everyone? Right. Next. And one more thing, when the customs is getting imposed, the customs, the duty can be imposed either as specific duty, or it could be a ad valorem duty, or it could be a specific cum ad valorem. So this point also I will try to explain here. Customs duty can be imposed in three ways. Either it could be a specific duty, or it could be ad valorem. All these terms we need to be very specific here. Please try to understand. And the other one is specific cum ad valorem. Sir, what is this? First, I will explain what do you mean by ad valorem duty. Ad valorem duty means the customs duty will be determined on the basis of value. If I put it in simple terms, say for example, if you are doing imports, you made 1 CR amount of imports. So what is the value of the imports that will be determined? Say for example, it has come to 1 CR. Now on that, government will say on these items, whatever you are importing, 10% of customs duty will become applicable. Now how I will calculate that customs duty? 1 CR into rate of duty 10%, which will come to 10 lakh rupees. 10 lakh rupees will be my custom duty. This kind of imposition of customs duty, we call it as ad valorem basis. That means first you will determine value. On that value, you will multiply the applicable rate. Then you will get the duty figure. So that we call it as ad valorem. Then we have something called specific duty. This specific duty is something on the basis of quantity, you can say. So basically, if I put it, say for example, I'm importing a motor vehicle. I'm importing a car from abroad. The government has told that for each car you are importing, you are required to pay 50,000 rupees of customs duty. It's not on the basis of value. They will say a specific amount. If you are importing car, for each quantity of the car, you are required to pay 50,000 rupees of customs duty, irrespective of its value. Or say for example, I'm importing some machinery. The government told if you are importing machinery, for each quantity of the machinery you are importing, you are required to pay 1 lakh rupees of customs duty. Here you need not determine what is the value of the goods you are importing or exporting. They will tell you a specific amount. On each quantity, this much a specific amount you are required to pay. That I call it as specific duty. What is ad valorem? You will determine value. That value will multiply a percentage. You will get a customs duty. And in some cases, the government can impose a customs duty on a specific cum ad valorem basis. That means sometimes government can say for example, I'm importing some machinery. Government says that on every machinery you are importing, you are required to pay 10,000 rupees of specific duty. Along with that, 5% of value also you are required to pay. Which means, say for example, I'm importing 1 lakh worth of machinery. The government is saying that on that machinery, 10,000 rupees of specific as well as 5% on the basis of value. So on this machinery, 10,000 rupees of specific duty I have to pay, and on that value I have to multiply 5% also. If I do that, the amount will come to 5,000. Total 15,000 rupees of duties I will be required to pay. This I call it as specific cum ad valorem duty. So when the government wants to impose customs duty, it can determine that customs duty amount in three different ways. Either that could be a specific duty, or that could be a ad valorem basis, or it could be a specific cum ad valorem basis. Clear? So this discussion also you have in the background of your at the back of your mind. Next. So this I have already told you, we have rules for valuation of imports, we have rules for valuation of exports also. But as I've told at the CMA interlevel, we are going to focus mainly on how to determine the value for imports. Next, now let us come to the most important part, the most important discussion we are going to have now, levy of customs duty. First of all, Customs Act is applicable to what? What is the applicability of the Customs Act? They say that Customs Act 1962 extends to whole of India, including its territorial waters. What they have told? So, very similar thing we have read in the GST, more or less the same thing they will try to say. Customs Act 1962 will extend to whole of India, including its territorial waters. Including its territorial waters. Now we need to understand what is the meaning of India. What is the meaning of India? We need to understand. So once again, if I take the map here, if I take the structure here, so Customs Act extends to whole of India. Sir, what do you mean by whole of India? This entire landmass is there, no? This entire landmass. So this entire landmass will be called as India. All this will come under India definition. Okay. Not just that, they say that Customs Act will extend even to territorial waters. What also it will extend to the territorial waters also Customs Act will become applicable. Sir, now what is territorial waters? They say here from the coastal line. If you take coastal line, if you go up to 12 nautical miles, if you go up to 12 nautical miles, all that water we call it as territorial waters. More or less the same thing we have seen in GST. See, 1 nautical mile is equal to 1.852 kilometers. So from the coastal line, if you go up to 12 nautical miles, that I call it as territorial waters. So Customs India will become up, India will include this territorial waters. Even up to this 12 nautical miles also will fall under India definition only. Now, they have defined the term territorial waters. If you see, India includes territorial waters. Now, what is territorial waters? Territorial waters extends up to 12 nautical miles from the baseline, including any bays, gulf, harbors, creeks, creek means all small rivers and all tidal rivers, everything within the 12 nautical miles, that could be bay, that could be gulf, that could be harbor, that could be creek, tidal rivers, everything within that 12 nautical miles will come under territorial waters. And India has sovereignty over its territorial waters, and Customs Act applies here also. India has sovereignty. That means what? India will have supreme power in this nautical miles, in this up to 12 nautical miles, whatever that waters are there, on that supreme powers are there with India only. They can only decide what can happen in that 12 nautical miles. They can only make rules regarding that 12 nautical miles. In that territorial waters, India will have exclusive power to make the rules and regulations. And not just that, it includes both surface waters and seabed, subsoil and airspace above it. So when I say territorial waters, it just doesn't include only the territorial waters. Below that seabed, whatever is there, below that whatever soil is there, that also will come under territorial waters. Not just the soil, above that whatever airspace is there, that also will come under territorial waters. Now I should have one definition here. I should have one diagram here. So like if you see, so if this is the baseline, so see here, if this is the baseline, if this is the coastal line, from this coastal line, if you go up to 12 nautical miles, so this is up to 12 nautical miles. If you go up to this 12 nautical miles, this will become territorial water. This is also forming part of India definition only. And when I say territorial waters, it just doesn't include this water. So below this soil is there, no? This seabed is there, no? This seabed subsoil is there, no? This also will come under India definition. And above that, whatever airspace is there, above that territorial waters, above that whatever airspace is there, this also will form part of India definition. Over this airspace also, who will have sovereignty, who will have supreme power to make the rules and regulations? India has. Okay. And not just that, if you read it further, so what they have told first, so they have told first India includes landmass and India also includes territorial waters. Not just that, India also includes something called exclusive economic zone and the continental shelf. Exclusive economic zone and also continental shelf will also form part of India definition. So what do you mean by exclusive economic zone? Nothing but the act says that from the baseline, if you go up to 200 nautical miles, how much? If you go up to 200 nautical miles. So from here, if you go up to 200 nautical miles, so till here also it is forming part of India only. On that also Indian government will have power. But up to 12 nautical miles, that we call it as territorial waters. From 12 nautical miles till 200 nautical miles, whatever water is there, that we call it as exclusive economic zone. What do we call it? Exclusive economic zone. Exclusive economic zone. And below that, whatever seabed is there, below that, whatever landmass is there, that we call it as continental shelf. That we call it as what? Continental shelf. That means even in this exclusive economic zone and on this continental shelf also, the government will have power. Sir, what power it will have? What generally will happen in this 200 nautical miles is you might have found oil rigs. You might have seen in the movies or YouTube videos and all, there will be something called oil rigs. So this kind of thing. So these oil rigs will be there, no? These oil rigs generally will be installed for the purpose of exploration of the oil and natural resources. Okay, so say for example, here someone wants to set a oil rig. Who will have the power to do that exploration of oil and all? India only will have the right to do the exploration of oil, exploration of natural resources in these exclusive economic zones also. This will exclusive economic zone in continental shelf. This also will form part of India. This also will form part of India. And not just that, in these exclusive economic zone and in these continental shelf, the government will have supreme power. India will have sovereignty. India will have supreme power. Sir, what power they will have? What they can do in that exclusive economic zone and in this continental shelf? What they can do? What powers Indian government will have in this exclusive economic zone and continental shelf? So if you come here in the exclusive economic zone and the continental shelf, what power India will have is in the exclusive economic zone, the union, that is the central government, the Indian government will have the right, sovereign right means supreme power for exploration, exploitation, conservation, management of natural resources, including energy production from tides, winds, and currents. Nothing but from here, within this exclusive economic zone, the government will have extreme power to do exploration of resources, natural resources, that could be wind, tides, and all. Nothing but they can generate electricity, they can explore the resources. The government will have supreme power. Exclusive rights for construction, operation of artificial islands, offshore terminals, and other structures. Once again, rigs, if they want to construct any island there, in that exclusive economic zone also, who will have power? The Indian government will have. Exclusive jurisdiction to regulate and control scientific research. In this exclusive economic zone and this continental, in this exclusive economic zone, the government will have the power to conduct scientific research also. And not just that, they will also have exclusive jurisdiction to preserve and protect the marine environment and control marine pollution. The Indian government will have exclusive power to control the pollution and anything other things there, and any other rights recognized by international law. So in the exclusive economic zone, in these waters, the government will have sovereign right to do exploration of resources, to construct any structures, to do scientific research, and also to control and prevent the pollution and any other things which can be recognized by international laws. And not just that, even in the continental shelf, below this water, whatever landmass is there, in that landmass also, the Indian government will have powers. What powers government will have in that continental shelf? The same powers, sovereign rights for exploration, exploitation, conservation, and management of all resources. They can construct any structure, artificial island, offshore terminal, and other structures. They will have jurisdiction to regulate and control scientific research. They will also have right to preserve and protect marine environment and control marine pollution. Basically, whatever powers are there in the exclusive economic zone, all that powers will be there even in the continental shelf also. Even in the continental shelf also, they will have that exclusive powers. Clear, everyone? Able to understand? So what will come in India definition? India will include all the landmass. These are territorial waters. When I say territorial waters, up to 12 nautical miles. Below that, whatever seabed is there, that is also India. Above that, whatever airspace is there, that is also India definition. Whereas if you go up to 200 nautical miles, that water, we call it as exclusive economic zone. And below that, whatever landmass is there, that will also become continental shelf. Here the government will have exclusive power to do the exploration of resources, construction of the structures, doing scientific research, and also controlling the pollution and all. For these purposes, these exclusive economic zone and this continental shelf also will become India definition. But if you pay close attention here, the airspace above EEZ, the airspace above exclusive economic zone and the airspace above continental shelf, that will not form part of India definition. That will be an international airspace. Only up to 12 nautical miles, whatever airspace is there, that only will form part of India definition. Above the exclusive economic zone, above the continental shelf, whatever airspace is there, that is not forming part of India. That is an international airspace. That is an international airspace. Clear, everybody? Able to understand? So this is what regarding India definition. Now, what is the significance of this definition is? What is the significance of this definition is? Here, there are a few more things which we need to understand. Say for example, here in 200 nautical miles. Up to here 200 nautical miles is there. Listen, very important point I'm trying to say here. Very, very important point and very, very interesting point also. Listen carefully. So till here, say for example, up to 1200 nautical miles, it will come here. So here what the government has done is, here they have installed one oil rig. Here what they have done, they have installed one oil rig. So just give me 1 minute. So they have installed this rig here. The government has installed the rig. Okay. So now here in this rig, what is happening is exploration, oil exploration has happened. Say for example, oil has been extracted and mineral oil, petroleum, crude, whatever it is that has been extracted. So now from here, oil has been extracted and from here it was taken to India. It was taken to the landmass. Can this be called as import? Can this be called as import? In the 200 nautical miles, they have installed one oil exploration rig, and in that rig, oil and gas has been produced. That gas which has been produced in this oil rig within the 200 nautical miles, that has brought to India. Can that be called as import? No, that will not be called as import. On that customs duty will not come, on that excise duty will come. Why? Because up to 200 nautical miles, these exclusive economic zones are also forming part of India definition. No? This will also form part of India definition only. So from this oil rig, if oil is going into the landmass, that will not be considered as import. That is not from any other country. Why? Because this oil rig also will be considered a part of India definition. So on that excise duty will come. Similarly, from India, say for example, here some repair has to take place. Here one spare part is required. From the landmass, someone has supplied that spare part to that oil rig. Can that be called as export? No, that will not be called as export. Why? Because this is also forming part of India definition only. This is also forming part of India definition. So if anything has been moved from here to the landmass, that will not be called as import. From the landmass, it has come to here. That will not be considered as export. Why? Because that is also forming part of India definition. Say for example, at this oil rig, one machinery was needed. One machinery was needed. That machinery was imported from US to this oil rig. That machinery was brought from US to this oil rig. Will this be called as import? Yes. On that, will customs duty will be there? Yes, customs duty will be there. From this oil rig, whatever oil that has been manufactured, that was taken outside of India. That was taken outside of India. Will that be considered as export? Yes, export. Will export duty will be there? Will customs duty will be there? If applicable, it will be there. If it is exempted, it will not be there. But whatever it is, from outside of from any other country, if something is coming to this EEZ or continental shelf, then that will be considered as imports and exports. But however, from this EEZ, if something is going to India and something is coming from there, that will not be considered as import and export. Clear? Able to understand? So this one thing we have to keep it in mind. Okay, and one more thing. This exclusive economic zone and continental shelf, they often call it as customs water. Indian customs waters, they call it. What do they call it? Indian customs water, they call it. So when they say Indian customs water, what do they mean by that? Exclusive economic zone and continental shelf, both put together, we call it as Indian customs water. So ignore all this, whatever other things are there in the diagram, you can ignore this. Just you have to remember what is the meaning of territorial waters, what is a exclusive economic zone, what is continental shelf. Okay, right. Okay, so all these things we have covered. So extension of Customs Act 1962 and Customs Tariff Act 1975. That means Customs Act 1962 and Customs Tariff Act 1975. It will also be applicable to designated areas in the continental shelf and in exclusive economic zone, and the whole of exclusive economic zone and continental shelf for prospecting for mineral oils in the continental shelf and EEZ, and supply of goods related to mineral oil or production. That means in these exclusive economic zones, in these continental shelf, if activities of oil exploration is happening, then whole of that EEZ and whole of the continental shelf will be considered as India definition, and for all of that, Customs Act will become applicable. If any other activity is performed apart from oil exploration, if other activities performed in exclusive economic zone or this continental shelf, if any other activities are performed here apart from oil exploration, then only some areas are designated, only to that designated areas the Customs Act will become applicable. So what do I mean by this is, once again, if I take the help of this, say for example, we have 200 nautical miles, up to 200 nautical miles. So within this 200 nautical miles, that means within the EEZ and within the continental shelf, if oil exploration is happening, for the purpose of oil exploration, entire exclusive economic zone and entire continental shelf, for entire EEZ and continental shelf, Customs Act will become applicable for the purpose of oil production or for providing any parts or something related to oil production. If any other activity is performed apart from this thing, if any other activity is performed For those activities, there are some designated areas mentioned. In these 200 nautical miles, some designated areas are mentioned. For that designated areas only Customs Act will become applicable. So you need not go into this much detail, just you simply remember Customs Act will even extend to exclusive economic zone and continental shelf. This summary you remember. Next. So what are the implications? These implications I have already told you. Goods bought from other countries to EEZ or continental shelf for mineral oil exploration activities are treated as imports under Customs Act 1962, subject to the duty. Additionally, mineral oils produced in EEZ or continental shelf are considered produced in India only, and they will be subjected to central excise duties under Central Excise Act 1944. That's what I have explained, right? So from this reg, if the things are going here or from here, so these transactions will not be considered as imports and exports. They are within India, on that customs duty will not come. In fact, excise duty will come there. Fine. So this is what regarding India definition and extent and applicability of Customs Act. Clear, everyone? Right. So let us now proceed further with our discussion. So what and all we have discussed till now, if we have a quick recap of what and all we have discussed till now. So basically we have understood what is the meaning of India, the major component of the discussion, whatever we had in the previous session, that is all revolving around the applicability of the Customs Act and Custom Tariff Act. So I told you a few things like, so why customs duty has come into picture, like to make the Indian products competitive with the global products. This that was the main objective behind this introduction of the customs duty. And when I say we are reading customs duty, we are actually reading two laws. One is Customs Act 1962 and the other one is Customs Tariff Act. So Custom Tariff Act also we are discussing. So Customs Act will basically talk about all the procedural formalities like valuation, procedure for import, procedure for export. All the procedural formalities will be covered under Customs Act. Whereas what is the rate of duty which you are required to pay? So that will be mentioned by Customs Tariff Act. In that also two schedules will be there. One is first schedule, other one is second schedule. First schedule will talk about rates for imports and all, and the second schedule will talk about rates for exports and all. And as I've told, on imports, we are going to focus more. Why? Because on imports, the government wants to impose the duties. Whereas when it comes to exports, exports are a favorable thing for any economy. If the company is doing more exports, that means it is prospering more. Its foreign exchange reserves also will be very high. So government will never want to discourage the exports, but they want to discourage imports. So that's why there will be various kinds of customs duties on imports comparatively with exports. So generally on exports, there will not be any duties unless specified, but on imports, there will be a hell of a lot of customs duties. And apart from that, we have seen what is the meaning of the term India. So India includes all its land mass. Along with that, it also includes the territorial waters. What do you mean by territorial waters? Up to 12 nautical miles, we call it as territorial waters. Not just that, not just waters, that the seabed and subsoil below the territorial waters and airspace above the territorial waters also will form part of India definition. And it also contains exclusive economic zones and continental shelf. So what do you mean by exclusive economic zone? Up to 200 nautical miles from the coastal line, that we call it as exclusive economic zone. Below that, whatever landmass is that we call it as continental shelf. Even the Customs Act extends to exclusive economic zone and the continental shelf also. And also I have told you in the previous session, what are the powers of the Indian government with regard to the exclusive economic zone? What powers Indian government will have with regard to the continental shelf? That also we have covered. So this is what a brief summary of the things we have discussed in our previous session. Now let us proceed further. So now we will talk about the further sections. We will talk about now chargeability. So what is chargeability? Nothing but charging section. Like we have seen in the GST, what is a taxable event? What is a chargeable event? I told that in the case of GST, whenever an activity called supply takes place, whether that could be supply of goods or that could be supply of services, then GST will be triggered. GST will come into picture only when there is a taxable event called supply. Whereas what is a taxable event for customs duty? If for customs duty to become applicable, customs duty in fact will become applicable for either in case of import, either a transaction of import has taken place or a transaction of export has taken place. That too, whenever import of goods and export of goods is happening, then only customs duty will come into picture. So what is a taxable event under Customs Act? The taxable event is either export or import. So that's what they say here, or that's what even charging section number 12 also says. Levy of customs duty. Duties of customs are levied on goods imported into or exported from India. So when customs will come into picture, either for that goods should have been imported into India or the goods should have been exported from India. Those are the taxable events. And at what rate? At the rate as specified under Customs Tariff Act 1975 or any other applicable law. So as I have told, Customs Act will say when customs will become applicable, whereas at what rate customs will be applicable, that rate has to be determined as per Customs Tariff Act 1975. And one more thing here, customs duty is levied on goods, not on the person importing or exporting them. See, as we all know, customs is an indirect tax. Customs will be imposed on goods, no matter whoever is importing. Say, for example, I am the person who is importing the goods. So whenever I import such goods, on that goods customs duties will be levied. Even on GST also, no, GST will be levied on goods and services. But if you take direct taxes like income tax is not a tax on goods or services. Income tax is a tax on the person making the income. Able to understand? So GST is also a tax on goods or services. Customs is a tax only on goods, not on the person importing or exporting. Whereas if you take the direct tax like income tax, that is a tax on a person, not a tax on a transaction. Basically, what they are trying to say here is customs duty is an indirect tax. That is what the meaning of this phrase. Next, the goods must be imported or to or exported from India. So once again, this also we have covered in the previous section number 12 only. For customs duty to get imposed, either the goods must have been imported or the goods must have been exported. And the rate of duty will be specified as per Customs Tariff Act 1975. So there is a Custom Tariff Act. In that Customs Tariff Act, the rates are specified. As per that rates, the customs duty will be collected. Now they are giving a few definitions here. Not all definitions are important from the examination perspective. Just we'll quickly give a glance. They try to define a few important terms here. Quickly, we will go through the definitions. So talking about goods, sir, what is included in the goods? So here they have given an inclusive definition. I have already explained in the GST what is an inclusive definition, what is an exhaustive definition I have covered. But in the customs, they have defined goods in an inclusive manner. What and all will be included in the goods? So if you see here, what and all will be included in the goods here, it includes vessels, it includes aircrafts and vehicles, stores, baggage, currency, negotiable instruments, or any other kind of movable property. Basically any kind of movable property, which includes vessels also, aircrafts also, vehicles also, stores also, even your baggage. As I've told, if you are carrying any baggage and all, baggage means the luggage of the people who are traveling. So all that will form part of goods definition. Next, sir, what do you mean by import? Import means bringing goods into India from a place outside India. So is there anything specific to know here? No. We all know it. What do you mean by import? From a place outside of India, you are bringing goods into India. That transaction, we call it as import. Sir, what is imported goods? Goods brought into India from a place outside India, excluding the goods cleared for home consumption. Sir, what they are trying to say here? So what they are trying to say here is, say for example, there is one person who is importing. There is one person in India. He's an importer. Okay, so he is bringing some goods from US. From US, say for example, the goods are coming in a vessel. So these goods were loaded in this vessel. Now these goods will come to this port. Say for example, at the Vizag port, he's getting them unloaded. So the goods, till the time they stay at that customs station, or till the time they stay at that warehouse. I told you about warehousing of the goods and all also in the previous session. Till the point of time they are cleared for home consumption, they will be called as imported goods. They will be called as imported goods. But till at which point of time? Till the point of time they are cleared for home consumption. So at certain point of time, what will happen? This importer will file a bill of entry and he will clear that goods after making payment of the customs duties and all. He will clear that goods for home consumption. The moment the goods are cleared for home consumption, they no longer will be called as imported goods. They form part of normal goods. You can do whatever you want with that. Either you can resell them or you can use it for your manufacturing, whatever you want, you can do it. But we call these goods as imported goods only till the point of time they are cleared for home consumption. The moment they are cleared for home consumption, they will no longer be called as imported goods. Clear? So these definitions, once again, are not that important from the examination perspective, but since I have given in the material, so I'm explaining that to you. Next, after that, dutiable goods. Sir, what do you mean by dutiable goods? Goods which are chargeable to duty, on which a duty has not been paid. So basically, you have imported some goods. On that imported goods, they are dutiable. That means on that customs duty is leviable. But on that goods, it has not yet been paid. Whatever customs duty is there, it has not yet been paid. Those are dutiable. They are subjected to levy of the customs duty, but that duty has not yet been paid. Those goods we call them as dutiable goods. Next, sir, who is an importer? Importer includes any owner or any person holding themselves out as the importer, even if they are not the actual importer. Which means what? So what does that definition say? Say for example, once again, I will use the same example here. So there is one person, Mr. A is there. Now this person, Mr. A, he ordered for some goods from USA. There is one vessel. This vessel was loaded with all the goods, and this has come to the Vizag airport. This has come to the Vizag, customs port. It has come. Now these goods are not yet cleared for home consumption. These goods are not yet cleared for home consumption. So that means they are still lying with the custom authorities only. Before that clearance only, before that goods are cleared for home consumption, what this person, Mr. A, has done is he sold goods to Mr. B. So once again, I am telling the goods are sold even before clearance for home consumption. Say for example, this person is receiving the goods from US. Mr. B wants to buy this goods. He approached Mr. A. He told, boss, I want some 1 lakh quantity of the goods. Say for example, some 1 lakh quantity of electronic devices are coming. Now this person, Mr. B, went to Mr. A and told, I also want to buy 1 lakh quantity of that electronic goods. Now this person told, sir, the goods have not yet received. The goods are still at the customs authority. I did not clear them for home consumption. But I will do one thing. I will sell all that goods to you. I will sell all that goods to you. So say for example, he sold all that 1 lakh quantity of the goods for 1 CR. Now what this person will do is, now this person will go to that customs authorities and he will present himself as an importer. Who is actual importer? Mr. A is actual importer. But what he has done, he has sold that goods to Mr. B. Now what Mr. B will do is, he will present himself as an importer. He will submit the bill of entry proving his ownership of the goods, and he will make the clearance of the goods for home consumption. So now even Mr. B also will be considered as importer only, even though Mr. A is the original importer. But since Mr. B is presenting himself as importer to the customs authorities for clearance of the goods for home consumption, even Mr. B also will be called as importer. So that's what they try to say here. It includes any owner or person holding themselves out as the importer, even if they are not actual importer. Now, what do you mean by export? So export, it is exactly going to be opposite definition of import. So what do you mean by export? They say that export means taking the goods out of India, to a place outside India. So from India, you're taking the goods to a place outside of India. So that we call it as exports. Next. Sir, what are exported goods? Goods which are to be taken out of India to a place outside India. Once again, same meaning. So that we call it as export goods. Now, who is an exporter? It includes the owner or any person holding themselves out as the exporter during the process of the export. Same like importer definition only. Next, garment goods. Sir, what if the garment is doing import or export? The same provisions will become applicable. Say for example, if I'm a normal person, I'm not a garment, I'm some individual person, I'm some businessman in the country. If I'm importing some goods, government is saying I'm required to pay some GST. Sorry, I'm required to pay some customs duty. Sir, if the government is importing some goods, will they also be liable to pay the customs duty? Yes, the same provisions also will become applicable for the government also. But however, in some cases, customs duty will be exempted. But in normal terms, whatever normal provisions for custom duty are applicable for a common person, even if the government is also importing the goods or exporting the goods, whatever provisions are applicable for a normal person, all that provisions will be applicable even in the case of government goods also. So that's what they say. Provisions apply to goods belonging to government also. However, imports by Indian Navy, Police, Ministry of Defense, these are exempt from duty under specific notifications. Generally, all the provisions will become applicable. But however, if the government is importing goods which are relating to Indian Navy, which are relating to the police, which are relating to Ministry of Defense, these are all nothing but these are something to protect our country, right? These are all essential things for a government. So that's why if the government is importing these kinds of goods like the goods which are related, which are imported by Indian Navy, Police or Ministry of Defense, they will be exempted from duty. Next, sir, what is a taxable event in imports? So we already know it. Import commences when the goods cross the territorial waters and completes when they become part of the mass of the goods in India. For goods cleared for home consumption, the taxable event occurs when they reach customs barriers and the bill of entry is filed. So here there are few things which we need to understand. So once again, let us take for example, this is the coastal line. Now we all know in the coastal line up to 12 nautical miles. Up to what? Up to 12 nautical miles. We call it as territorial waters. So whatever waters are there here, these are all territorial waters, right? So these are all territorial waters. Now say for example, one vessel is there. I'm a person importing the goods. One vessel is there. The moment this vessel has entered, the moment this vessel has entered the territorial waters, import will commence. Import has started. So when import will commence, the moment the goods have entered territorial waters, import will commence. But will a person be liable to pay customs duty here only? No. See, import is commencing the moment the goods enter the territorial waters. But when import will be paid, when customs duty will be paid, so at the customs station, when bill of entry has been submitted and when the goods are cleared for home consumption, at that point of time you are required to pay the customs duty. At that point of time you are required to pay the customs duty. So import commences the moment the goods enter the territorial waters. The moment the goods have entered the territorial waters, import has commenced, import has started. But at this point of time, you are not required to pay customs duty. When you are required to pay customs duty, when they reach the customs authorities, when you are filing the bill of entry and clearing the goods for home consumption, at that point of time, you will be required to pay the customs duty. So here, this is the taxable event. This here, when you are clearing the goods for home consumption, then the taxable event will come into picture. But import, when it will commence, when the goods have entered the territorial waters. Clear? Next. So what is a taxable event in warehousing? See, warehousing, I have already told you yesterday in the previous session. I have told, like, the moment once they have reached the customs authorities, once the goods have reached the customs authorities, like customs port, it has reached, there will be two options available. As an importer, you can immediately clear the goods for home consumption and pay the customs duty. Or instead, what you can do is you can send that goods to the customs warehouse. So their warehousing will happen. After a certain period of time, what you will do, from that warehouse, you will submit a bill of entry, then clear the goods for home consumption. So here, when you are moving the goods from the customs authorities to the warehouse, to the customs warehouse, for the purpose of warehousing, at this point of time, you are not required to pay customs duty. No customs duty for warehousing. But from the customs warehouse, when you are submitting a bill of entry for clearance for home consumption, at that point of time, you will be required to pay the customs duty. If you are, without sending it to warehouse, if you are directly submitting a bill of entry for clearance for home consumption, you will be required to pay the customs duty. However, if you are not directly clearing for home consumption, first you are sending that goods to the customs warehouse. After that, you will submit a bill of entry and clear the goods for home consumption. Whenever you are actually, so one point you have to remember here, whenever you are submitting a bill of entry for clearance for home consumption, then the customs duty will be imposed. Then the customs duty will have to be paid. So that's what they say. Import occurs in case of warehousing. Import occurs when goods are cleared for home consumption from a warehouse. Now, what is a taxable event in exports? Export is complete when goods crosses the territorial waters. If goods sink in territorial waters, export is not completed. Nothing but exactly opposite definition of imports. So what did we say in imports? When import will commence, the import will commence when the goods reach the territorial waters. Then what about exports, sir? What exports, when exports will commence is, if you are a person, if you want to export the goods, what you will do is, you will hand over the goods to the customs authorities and you will submit something called shipping bill here. If you are an exporter, if you want to send the goods outside of India, you will submit all your goods with all the documents to the customs authorities and you will submit shipping bill. The moment you submit the shipping bill, export will start. Export will start. But export will come to an end. The export process will come to an end. So up to 12 nautical miles, we have this territorial waters, no? So the moment this vessel, for example, this vessel was loaded with all the goods which you want to export, the moment this vessel crosses the territorial waters, export has completed. Export is completed. Export has been completed. Sir, there is one vessel is there. This vessel has been loaded with the goods. I want to export the goods and all. I submitted a shipping bill. But what happened is, before they could cross the territorial waters, within the 12 nautical miles only, this vessel has sunk and all the goods have been gone inside the ocean. So now, is the export completed? No, export has not been completed here. Export did not complete here. So when I said export will get completed, export transaction will get completed only when the moment the goods have crossed the territorial waters. So import will commence when the goods enter the territorial waters. Export will complete when the goods cross the territorial waters. So if the vessel is sinking in the territorial waters, then there is no export has taken place. Okay, right. Next. So what is the objective of the act? So what is the objective of this Customs Act and all? The act taxes goods that become part of the mass of the goods in India. If international goods are becoming a part of the goods of India, then this act wants to tax them. So what are rates and duties? I have already told the rate of duties of import. Import related duties are contained in the first schedule to the Customs Tariff Act, whereas export related duties are specified in the second schedule to the Customs Tariff Act. Understood. Apart from that, some other important definitions. Adjudicating authority. At various places, you might come across this term called adjudicating authority. Sir, who is that adjudicating authority? Authority competent to pass orders. Nothing but that authority, whoever is passing the orders or whoever is taking the decisions under this act. Under which act? Under Customs Act and Custom Tariff Act. Excluding the board, council, commissioner appeals and appellate tribunal. That means these three people will not come under adjudicating authority. Who will not come under adjudicating authority? The board, the commissioner appeals and appellate tribunal. These people, even though they are taking decisions, even though they are passing orders, they will not form part of adjudicating authority. Apart from these three, if anybody else is having the power to pass orders or take decisions under this act, they all will get covered under adjudicating authority definition. Sir, what do you mean by assessment? So what do you mean by assessment? This also I have told you in the previous session itself. What do you mean by assessment? Assessment means nothing but determining your what is the amount of customs duty you are required to pay. What is the value? How much value you are? What is the value of import? What is the value of export? What is the rate of duty? What is the amount of customs duty? That determination has to happen. No, that process of determination we call it as assessment. So assessment means determination of dutiability of the goods, determining whether goods are dutiable or not. If they are dutiable, what is the amount of the duty? What is the amount of tax? What is the amount of cess? Or any other sum payable, including factors like tariff classification. What should be its classification? What should be its value? Whether it is exempted or not? Where, from which country? What is the origin of the goods? From where these goods are coming from? So all this determination, this process of determination, we are going to call it as assessment. This term is not new for us. We have already seen it in income tax and GST also. Next. Baggage. I've already told you luggage. So luggage of the person, whether it is accompanying the bag, whether it is accompanying the passenger, or even it includes unaccompanied baggage also. See, baggage can be accompanied or baggage can be unaccompanied. See, sometimes what will happen is you are a person, you are traveling in Indigo Airlines. Say for example, you are traveling from abroad to India. So along with you, you are also bringing one luggage. So you are also bringing one luggage. This luggage is coming along with you in the same flight. So this will come under baggage definition. Sometimes what will happen is because of the international connecting flights and all, luggage will reach before the passenger. Luggage will reach even before the passenger. That is unaccompanied baggage. That means luggage is not traveling along with the passenger. Either it is coming earlier or it is coming later. It is not simultaneously coming with the passenger. That we call it as unaccompanied baggage. That also will form part of baggage definition. Next. Beneficial owner. Sir, what do you mean by beneficial owner? Very common definition. Person on whose behalf goods are imported or exported, or who exercises effective control over the goods. Whoever is having the effective control, ultimate control over the goods, that person we call them as beneficial owner. Sir, what is bill of entry? Bill of entry is a document for customs clearance presented electronically for goods entering India. This I've already told. If you want to clear the goods in India, if you want to bring that goods in the Indian territory and Indian mass, you have to submit one document called bill of entry proving that you are the owner of the goods, and that document we call it as bill of entry. So what is bill of export? So I told shipping bill, we can also call it as shipping bill, or we can also call it as bill of export, whatever it is. It is a document for goods being exported. It also presented electronically in a prescribed format. Now, what do you mean by board? At various places they use the phrase board. So what do you mean by board? To which board they are referring to? So whenever they say board, they are referring to Central Board of Indirect Taxes and Customs, CBIC, which is established under Central Boards of Revenue Act 1963. So what do you mean by coastal goods? There is one more term called coastal goods. Sir, what is coastal goods? Say for example, we have here India. Okay, here we have Vizag. Here we have Chennai. So some goods are traveling from Vizag to Chennai in a vessel. In a vessel, some goods are traveling from Vizag to Chennai. Can we call this as imported goods? No. Why? Because they are not coming from outside of India. Within India, between two ports, if the movement is happening, those goods we call them as coastal goods. Those are not imported goods. Those are coastal goods. On that also will customs duty be levied? No, on that customs duty will not become applicable. Customs duty will be applicable only on imports. In case of coastal goods, they are not coming anywhere from outside of India. There is a movement within India only. So that we call them as coastal goods. On that customs duty will not become applicable. So that's what they say. Goods other than imported goods transported between two ports in India by a vessel. That we call them as customs goods. Sir, what do you mean by conveyance? Conveyance means a vehicle basically. It could be a vessel. If it is by way of water, what is the conveyance? Vessel. If it is by air, it will be aircraft. If it is by land, any kind of vehicle. So now what do you mean by vehicle? Somewhere they say, what is the meaning of vehicle also? Is it there? Okay, not there. So vehicle means it could be anything. It could be a truck, it could be a bus, it could be any kind of thing. Next. Customs station. Sir, what is customs station? Any customs port or customs airport, international courier terminal in the airports which you find it, foreign post office or land customs station. These are all the places basically wherever this all custom clearances will happen. So all of them we call them as custom station, we call them collectively. Sir, you told customs airport. What is customs airport? An airport designated under section 7A to be a customs airport, including air freight station. Basically, the government will specify out of all the airports, they will specify which will be a custom airport. See, for example, in India, at small places, we have some airports. Their custom clearances and all will not happen. So their custom clearances will not happen. Why? Because that airport was not designated by the government. So government will identify out of all the airports, they will designate at which airport custom clearances should happen. Those are designated airports, we call them as customs airport. Next, customs area. What is customs area? The area within a customs station or a custom warehouse, including areas where goods and imported goods are kept before clearance. Basically, that custom airport, that warehouse, all that places collectively, we call it as customs area. Then what do you mean by customs port? Basically, airport means, customs airport means those airports which are designated. Customs port means they're talking about this naval ports and all. So a port which is designated under section 7 here to be a customs port, including inland container depots. Now, what is foreign going vessel or aircraft? The definition itself says not important. The term itself says the vessel which is leaving India to a place outside of India, that we call it as foreign going vessel or aircraft. So any vessel or aircraft engaged in carriage of goods or passengers between India and outside, including naval vessels, fishing vessels also will form part of foreign going vessels. Next, arrival manifest or import manifest. Sir, what is this? The manifest or report required for a vessel, aircraft or vehicle carrying imported goods to be delivered to the proper officer. So what does that mean is, see, I told if the goods have reached the customs port, if you want to clear them for home consumption, you are required to submit a document called bill of entry. Now, say for example, from a foreign country, a vessel is coming. This has come to one. Come to one customs port. Now, these goods are required to be unloaded. These goods are required to be unloaded at that customs port. So, if the customs authorities have to permit you to unload the goods here, for that you have to submit something called import manifest. For that you have to submit something called import manifest. Basically, the in charge of the conveyance will do it. Whoever is the in charge of the conveyance. For this, a ship master will be there, no? So that master has to submit something called import manifest. Then only they will allow the unloading of the goods. If it is an aircraft, that pilot of the aircraft will be there, no? So he has to submit that import manifest. So only when that import manifest has been submitted, then only they will allow you to unload the goods there. Right. So the manifest or a report which is required for vessel, aircraft, or vehicle which is carrying imported or exported goods to be delivered to proper officer. Who has to deliver that to the proper officer? Whoever is the person in charge of the conveyance. Sir, who will be that person in charge of the conveyance? Like a master of the vessel. If it is a ship, there will be a master. If it is an aircraft, commander or pilot in charge. If it is a train, conductor of a train. Or if it is any other conveyance, generally a driver. Next. Prohibited goods. Sir, what are prohibited goods? Goods whose import or export is prohibited under this act or any other law, except if conditions for import or export are met. Sometimes what the government will do is the government will completely ban. These goods should not be imported. These goods should not be exported. So that we call them as prohibited goods. Say for example, sometimes government says that if you have to import some goods, if you are importing some goods, you are required to fulfill some conditions. If you don't fulfill that conditions, import will not be permitted. Can we call that also as prohibited goods? No, those will not be called as prohibited goods. Why? Because if anybody can fulfill the conditions, they can happily import that goods. No, so those will not be called as prohibited. So unconditionally, without putting any conditions, if the government is saying so and so goods are prohibited for import or so and so goods are prohibited for export, without putting any conditions, they told unconditionally these goods should not be imported, these goods should not be exported. That we call them as prohibited goods. If they have attached some conditions, if you fulfill that conditions, then only export will be permitted. If you fulfill certain conditions, then only imports will be permitted. Those we can't call them as prohibited goods. Why? Because if you can fulfill the conditions, you can do the import and export. Next, stores. Sir, what do you mean by stores? Goods for use in a vessel or an aircraft, including fuel, spare parts, equipment, whether or not for immediate use. Basically, when you are traveling in a vessel, you need some spares, no? For that ship, sometimes some spares might be required. So they carry all that repairs, even fuel also they carry in the ship so that they can use it as a part of their conveyance. So all that things which are going to be used in a vessel or aircraft, including fuel, spare parts, equipment, whether or not for immediate use. Either you are immediately using it or you want to use it if any breakdown happens. So all that will form part of stores definition. Then we have something called transit, transshipment. we have something called transit of goods and transshipment of goods. This definition, this difference also we have to understand. So two terms here, transit and transshipment. Sir, what is the difference between the two? So we'll take a little time here and try to understand what is the difference between transit and transshipment. Then after that, we'll proceed further. Right. So what do you mean by this? Say for example, there is one vessel. There is one vessel. Okay. So this vessel is containing so many goods. So in this vessel, say for example, some 1 lakh quantity of goods are there. 1 lakh quantity of goods are there. So this vessel is coming from outside of India. Say for example, this vessel is coming from USA. Okay. So now it has come to the India. This vessel has reached India. So at Mumbai airport, this vessel has come. So at the Mumbai airport, what has happened is these 60,000, or let us take it for example, some 70,000 quantity was unloaded here. 70,000 quantity of the goods was unloaded at the Mumbai airport. Now remaining 30,000 quantity is there, no? That 30,000 quantity was not unloaded in the same conveyance. It has gone to some another country. The same conveyance, say for example, that has to go to Australia. So what this container has done is, it has come to Indian airport, Indian customs port. 70,000 quantity was unloaded. The balance 30,000 quantity in the same conveyance. The balance 30,000 quantity, the balance is same 30,000 quantity, in the same conveyance, it has gone to Australia. This we call it as transit. So now you tell me, on this 30,000 quantity of the goods also, will customs duty be liable? No, customs duty will not be liable. But this we call it as transit. So what is transit? In the same conveyance, they have gone to some another country. After touching the Indian area, it has gone to, in the same conveyance, it has gone to another country. So this we call it as transit. Let me give you one more example. Now we'll try to understand transshipment. Once again, let us extend the same example. So there is a vessel. So in that vessel, 10,000 quantity or 1 lakh quantity of the goods are there. So now what happened is, out of this 1 lakh quantity, as I have told, 70,000 quantity was unloaded at the Mumbai airport. And the balance 30,000 quantity, the same vessel, it has gone to another country, Australia. So what do we call this? This we call it as transit. On the transit also, are you required to pay customs? No. Now 70,000 quantity was unloaded here. No. Out of that 70,000 quantity, some 30,000 quantity, has to go to Nepal. It was not meant here. It has to go to Nepal. So now what they have done is, out of that 70,000 quantity, so that 30,000 quantity, which was not meant here, which was meant to Nepal. Not Nepal. Nepal is not having a coastal line, no. So let us do one thing. Okay, so that 30,000 was meant to some another country. So what they have done is, so in another conveyance, not in the same conveyance, here conveyance has changed. Some another vessel is there. In that vessel, they have loaded this 30,000 quantity. They have sent it to another country. So this we call it as transshipment. So what is the difference between transit and transshipment? Transit, in the same vehicle, it will go to another place. But in the case of transshipment, what is happening? The conveyance is changing. Or let me give you one example. Okay. Out of the 70,000 quantity, 30,000 was loaded in another ship and it was sent to another country. On that, you will be required to pay customs duty? No. Why? Because it was meant for another country. Balance, how much quantity is there? 40,000. Out of that, 20,000 quantity was not meant for Mumbai. It has to go to Chennai. So now what they have done is, they have taken one more conveyance. They have taken one more vessel. In that 20,000 quantity, they have loaded, and this vessel will go from Mumbai to Chennai. This we also call it as a transshipment. So now you tell me, when this vessel containing 20,000 has left from Mumbai to Chennai, on that, are you required to pay customs duty? No. On this also, you are not required to pay customs duty. But from Chennai, they will be cleared for home consumption, no? A bill of entry will be submitted and it will be cleared for home consumption, right? So at the Chennai port, when the bill of entry was submitted and when these goods are cleared for home consumption, at this point of time, customs duty will become payable. Clear? So we got to know what is the meaning of transit. We got to know what is the meaning of transshipment. Very simple, guys. If the goods are not meant at that place and they are going to some another place in the same conveyance, that we call it as transit. If the conveyance itself is changing, then we call it as transshipment. So basically, whether it could be transit, whether it could be transshipment, customs duty will be payable only when the goods are cleared for home consumption. Whenever you are submitting the bill of entry and when you are clearing the goods for home consumption, then only you are required to pay customs duty. So as long as you are not clearing the goods for home consumption, you will not be liable to pay the customs duty. Understood? So that is what we have tried to explain it here. So we'll be able to find here the meaning of what is a transshipment, what is a transit. This I have tried to explain with the help of one example. Clear? Comfortable till here? Right. So proceeding further with the subsequent discussion. So now we'll try to understand section number 19, which is talking about determination of duty in case if multiple articles with different rates are imported. See, this is somewhat similar to the concept of mixed supply and composite supply, which we have understood in GST. So something similar to that, very similar to that. Say for example, there is one importer. Okay, so now this importer has imported some 5 products. Product A, B, C, D, E. 5 products he has imported. So, and each product, each article, whatever he has imported, each article is having different rates of customs duty. Article A will attract 10% of customs duty. Article B will attract 15%. Article C will attract 5% only. Article D will attract 20%, and Article E will attract 30%. So different articles he has imported. Now, say for example, all these 5 articles, whatever he has imported, the total value is at 10 lakh rupees. How much? The total 5 articles, whatever he has imported, the total value for that is 10 lakh rupees. Now what has to be done? So now this on this entire 10 lakh rupees, at what rate customs duty will be levied? See, here we have to check is separate value for each item is available. The total value is at 10 lakh rupees, but is it able, can we find out? If you are able to find out, see, even breakup is also available. Say for example, whatever duty he has, whatever products he has imported, out of that A constitutes some 2 lakh rupees, B constitutes some 1 lakh rupees, C constitutes some another 2 lakh rupees, D is 3 lakh rupees, and E is 2 lakh rupees. So we have a proper breakup of that 10 of that all the 5 articles. So if we have a proper breakup, what we will do? So for this 2 lakh rupees worth of product A, we will impose 10% of customs duty, which will come to 20,000. On this 1 lakh rupees, 15%, which will come to 15,000. On this 2 lakh rupees, 5%, if you calculate, which will come to 10,000. On this 3 lakh rupees, 20%, which you calculate, it will come to 60,000 rupees. And on that 2 lakh rupees, 30%, once again, if you calculate, it will once again come to 60,000. The total you have to calculate it here: 60, 60, 120, 130, 150, 165. 1,65,000 rupees of customs duty will be payable when you are able to determine the value of each and every article. But say let us say an example, you have purchased you have imported total 10 lakhs worth of goods, but what is the individual value of each article? You are not able to find it out. What is the individual article of each? What is the individual value of each article? You are not able to find it out. Then what has to happen? Then what has to happen is whatever rule they have told in the mixed supply, the same rule they have told it here. In case if you are not able to bifurcate the value, you have to impose customs duty at the highest rate. Among all this, whatever highest rate is applicable, that rate you have to multiply. So highest rate is 30%. If you are not able to determine on the entire 10 lakh rupees of value, 30% if you multiply, which will come to 3 lakh rupees. Now this importer will be liable to pay 3 lakh rupees of customs duty. Clear? Able to understand everybody? Right? So that's what they say here. Now sometimes what will happen is, say for example, you are importing 5 articles, A, B, C, D, E. So 5 articles you are importing. I told, if you remember in the introductory session, I have told import duty can be either a specific duty or it could be a ad valorem duty. So here whatever we have calculated, this case is a ad valorem duty where you are determining the customs duty on the basis of value. But sometimes what will happen is the duty will be imposed, which is a specific duty. That means they will say for each product, if you are importing one article, one quantity of article A, on every article 500 rupees of excess duty you are required to pay, 500 rupees of customs duty you are required to pay. So here, say for example, these 5 products are subjected to specific duty. We can also call it as quantity based duties. Specific duty also you can say, even you can say quantity based duties. So say for example, that specific duty is for product A, for each quantity imported 500 rupees. For product B, for each quantity imported 200 rupees. For product C, each quantity imported 100. For product D, each quantity imported is 200. For product E, each quantity you have to pay 50 rupees of customs duty. If that is the case, if the duty is on the basis of quantity, then you will know quantity. then you are not determining it on the basis of value. You know the quantity, right? If you are importing, so here you need not pay any attention to the value. You can determine quantity, say for example, some 100 quantity of product A, 500 quantity of product B, 700 quantity of product C, 50 quantity of product D, and 1000 quantity of product E is getting imported. You can find out the quantity. Now it becomes very easy to determine. So what you have to do is you have to multiply each quantity with the amount of duty for each quantity. So you will get the total figure, that much amount of customs duty you are required to pay. See, this problem will come only when the duty is on ad valorem basis. If it is a specific duty on the basis of quantity, you can determine the quantity and accordingly you can determine that amount of duty. Understood? Say for example, you are importing some goods. Once again, A, B, C, D, E. 5 products you are importing. Product A will attract 10%. Product B will attract 15%. Product C, nil, 0. Import duty is exempted on that. Nil rated exempt customs duty. Then product D, we have 20% of customs duty. Product E, we have some 15% of customs duty. Guys, sorry, at various places I was using excise duty instead of customs duty. So sorry for that. So, but please understand my intention. The objective has been to mention the term customs duty. Okay. So 5 products are getting imported. On that, one of the product on which the customs duty is nil, 0. So then what about it? Here also total 10 lakhs worth of products have been imported and the duty is also ad valorem. Now what will happen? Now also same rule will apply. Whatever highest rate is there. What is the highest rate here? 20%. So on this entire 10 lakh rupees, 20% will be applied. The customs duty will come to 2 lakh rupees. This much amount is liable to be paid. Understood? So that is what section number 19 says. Duty on goods containing articles with different rates is determined based on following. If articles are liable to duty on the basis of quantity, it will be charged on the basis of quantity. This is what I have told about specific duty. If it is a specific duty, it will be charged on the basis of quantity. No confusion here. If articles are liable to duty on the basis of value, if it is the ad valorem duty, if all the articles are having same rate, say for example, if you are importing 5 articles, all the 5 articles are having a same rate, every article is liable for customs duty at the rate of 10%, then there is no confusion only, then at that one single rate, you will multiply with the value. So in case if different rates are there, then it will be charged at the highest rate. If articles are not liable to duty, say for example, if some of the articles are not liable to duty at all, then also same logic will apply. Out of the entire value, highest rate we will determine, and 20%, in our example here 20%, that 20% will multiply the resultant customs duty the person is liable to pay. Understood? So this is what section number 19 says. Apart from that, few other clarifications have also been given. Accessories and spares. Say for example, I'm importing some plant and machinery. This plant and machinery will attract total, this plant and machinery is costing me 10 lakh rupees. And this plant and machinery will attract 30% of the customs. Along with that plant and machinery, I'm importing some important spare part also. Essential spare part of that machine also I'm importing. Say for example, for that value, that spare part value is 2 lakh rupees. But this 2 lakh rupees separately, if you are importing, that will attract 40% of customs duty. But since I am importing this spare part, which is an essential component of this plant and machinery, even this 2 lakh rupees also will attract GST at the rate of 30%. Sorry, customs duty at the rate of 30% only, not 40%. Not 40%. So that's what they say here. If you see, accessories, spare parts, or maintenance tools for any article are charged the same duty as the main article. Example, if a machine is charged at 30%, its repair implements will also be charged at 30% only. Able to understand? Next, evidence for duty calculation. Say for example, if you have some other proof, say for example, customs officer is saying your product will attract 30% of customs duty. But if you are able to submit some evidence to the custom officer saying that, sir, actually the products which I have imported, that will not attract 30%, sir. The products will attract only 20% of the customs duty, sir. If you have evidence, if you can convince that customs officer, he will do the reassessment and determine the amount of customs duty. That's what they say. The importer may provide evidence regarding the value of an article to the proper officer for accurate duty calculation. Then section number 20 will talk about re-importation of goods which are exported. Re-importation of goods which are getting exported, which means, say for example, there is one person, Mr. A. There is a person, Mr. A. This person has manufactured some, what will say on my table, what example I have. Say for example, this person has exported some goods. He's a manufacturer and he exported some electronic devices, keyboards. In front of me, I'm able to see the keyboard. That's why I'm using. So he exported some keyboards to the US. Now there is another person, Mr. B. Now there is another person, Mr. B. Now what this person has done is whatever goods which were exported by Mr. A, the same goods he has imported once again from US vendor. He has imported the same goods here. It is not sale return, guys. It is a re-importation of exported goods. Whatever goods that have been exported previously, those are getting re-imported into the country once again. Now, for these re-importation of exported goods, will there be any special rules for determination of customs duty, or they will be treated as normal imports and normal provisions only will become applicable? So the section clarifies that even in the case of re-importation of exported goods also, the same provisions, they will be assessed to customs duty as in the case of normal imports only, no special provisions, nothing will become applicable here. So that's what they have clarified. Goods imported into India after being exported are liable to duty and subject to the same conditions as similar goods imported for the first time. No special provisions, nothing. Then we have a few new terms here, some new terminology you will be able to find it here. Something called derelict, wreck, jetsam, and flotsam. So four things they are using here. What do you mean by that? Derelict, wreck, jetsam, flotsam. Sir, what do you mean by this? What are the meaning of these terms? These terms are something sounding like Latin and French for us. What is the meaning of this term exactly? So first of all, what do you mean by derelict? Derelict means abandoned property in the ocean. Abandoned property in the ocean. Say for example, there is one vessel. There is one vessel in the water. So in that vessel, some goods are there. Some property is there. And this property, either the vessel altogether or the property on the or the goods in the vessel, they have been abandoned. They have been left out in the sea only. They have been left out in the sea without any hope of recovery. They have just like that left it out. Whatever maybe the reason doesn't matter. Some abandoned property in the ocean, that we call it as derelict. That could be altogether a vessel, that could be goods on the vessel, doesn't matter. That abandoned property without any hope of recovery, that we call it as derelict. Next. Then what do you mean by wreck? Wreck means property cast ashore after shipwreck. Say for example, some ship is there. This ship has been damaged because of some reason. It might have a hit with something or whatever may be the reason. Some ship has been damaged, and this has floated. What do they say? It has cast ashore after shipwreck. Some ship damage has taken place, and from that some property has flown to the shore. That we call it as wreck. Then we have something called jetsam, goods thrown overboard to lighten the ship. So sometimes what will happen is when the wind is not favorable, ship will not move. So in order to have the smooth movement, what they will do is these vessel operators and all, they throw the goods into the ship to lighten the ship. They throw the goods from the ship into the ocean to lighten the ship in order to facilitate the further movement. That thrown goods from the vessel to lighten the ship, that we call it as jetsam. And flotsam, goods which are separated from the ship by some calamity, some peril. Peril means some calamity or something has taken place. Because of that, some goods have fallen into the ocean. That we call it as flotsam. So derelict. So these terms you have to understand. Derelict, which means what? Abandoned property in the ocean. Wreck, property cast ashore after shipwreck. Jetsam, goods thrown overboard to lighten the ship. And flotsam, goods which are separated from the ship by some peril, by some calamity. Now say for example, so what they are trying to say here is, let me take an example of that jetsam only. Okay. So now say for example, there is one vessel. This vessel is facing some huge trouble. Heavy wind is there. So there is a risk of this ship getting sunk. So what this person in charge of the vessel has done is, he has thrown one container containing the goods. He has thrown some container in the ocean in order to lighten the ship. Now this thing, whatever he has thrown into the ocean, now after a certain point of time, he wants to bring that into India. Inside the India, he wants to bring it. Say for example, this container has flown to the shore. Now he wants to bring that inside that. India, and he wants to use it. Now what they are trying is, even on these derelict, shipwreck, or jetsam or flotsam, if these goods you are bringing into India, they will also be subjected to the same kind of customs duty. See, if that doesn't happen, what will happen? So people are very smart here when committing the frauds. Intentionally, they will throw some goods into the ocean, and when they float to the shore, now they bring it without paying any customs duty. So that's why what the government has told, it's even if it is a derelict, wreck, jetsam or flotsam, if they are getting brought inside India, they will also be liable for customs duty. So that's what they say here. Goods found at sea, including derelict, wreck, jetsam, flotsam, are treated as imports only. Duty-free admission may apply if the PO is satisfied that the goods are entitled to be duty-free. Basically, if you feel that whatever that goods are there which has flown to the shore, either by way of wreck, derelict, or jetsam or flotsam, but if you have proper evidence to prove to the proper officer that these goods are duty-free, that means on these goods customs duty will not be payable if there is some exception or some exemption or something, whatever is there. If you are able to prove it to the satisfaction of the proper officer, then he will exempt. If there is no such exemption and all, then even these four things also will be liable for customs duty like any other imports. Understood? So these are the few cases. We have covered three sections. Section number 19, when articles with the different rates are imported. Then we have seen re-importation of the goods which are exported previously, and duty on derelict, wreck, jetsam, and flotsam. Understood? Clear and comfortable? So going further with the discussion, now we are going to see four cases where there will be no duty. Now we are going to see four cases where there will be no duty. One is section number 13. In case of pilfered goods, there will be no duty. Then we have something called reduced duty on damaged goods. Then we have 23 subsection 1, which is talking about remission of duty on completely destroyed goods and relinquishment of title on the goods. So four cases are there where there will be no customs duty. So what are they? Case number 1, pilfered goods. Case number 2, reduced duty on damaged goods. Number 3, remission of duty on destroyed goods. And number 4, relinquishment of title on the goods. So let us try to understand each case. First, we will talk about pilfered goods. Sir, what do you mean by pilfered goods? Pilfered goods means pilferage means what? Petty theft. Small theft is there. Say for example, you imported some 1 lakh quantity of the goods. They are unloaded at the customs warehouse. At the customs station, they are unloaded. Before they are cleared for home consumption or before they are moved for warehousing, goods are just unloaded. Say for example, so here port is there. So there is a vessel which contains some 1 lakh quantity of the goods, and these were unloaded. All these things are unloaded at this port before they could get cleared for home consumption, and even before they are cleared for warehousing. Even warehousing is also not done. Even they are not cleared for home consumption. Just they are unloaded and lying at the customs port. So at this point of time, say for example, some 50 quantity was stolen. Some theft has happened, or some reason other than mistake of any importer or his agent or his employee. There is no mistake from importer. There is no mistake from agent. There is no mistake from his employee. So because of no mistake from the importer, 50 quantity was missing. Now you tell me, will this 50 be cleared for home consumption? No. If 50 quantity was missing, how much quantity will be cleared for home consumption? 9,99,950 quantity. 99,950 only will be cleared for home consumption. So on what amount he will be required to pay the customs duty? He will be required to pay only on 99,950 quantity. On that 50 quantity which has been pilfered, which has been stolen, on that you are not required to pay any customs duty. Later, if the customs authorities find that 50 quantity, customs authorities find that 50 quantity and they have restored to the importer, they are giving it back to the importer. Now he will clear that extra 50 quantity for home consumption. No. So then he will be liable to pay customs duty on that 50. If it is not restored, if it is pilfered, if the petty theft has happened, and if it is not getting restored, if it is not found out, and if it is not given back to the importer, then there is no liability on the importer to pay that customs duty. So this is what section number 13 says. So what does section number 13 says? No duty on pilfered goods. So what do they say here? Customs duty is not leviable on pilfered goods under following conditions. What are they? Goods are imported. Goods must have been imported, and after importing they have been pilfered. And pilferage should occur after unloading, after the goods are unloaded, but before clearance by the proper officer, either for home consumption or for warehouse deposit. The goods are just unloaded. They are neither cleared for home consumption. They are neither cleared for warehousing also. Then, and pilfered goods are not restored. Whatever goods which are stolen, those are not restored. See, pilferage means a small theft, guys, not complete theft. If entire 1 lakh quantity has been stolen, that is altogether different case. That we will cover it under section number 23 subsection 1. Section number 13 only talks about pilferage. Pilferage means petty theft, small theft. Okay, so three conditions where duty will not be levied, where goods must have been imported, after that pilferage should have taken place, and after unloading but before clearance by the proper officer, either for home consumption or for warehouse deposit, and pilfered goods are not restored, they are not given back to the importer. Then the importer is not liable to pay duty on that pilfered goods.
What do you mean by pilfer? Pilfer refers to petty theft or stealing of small items and does not include total destruction or complete loss. If the goods are completely stolen or completely destroyed, that will get covered under 23 subsection 1. That will not get covered under section number 13. Liability if restored. If the pilfered goods are restored to the importer, if they are found and given back to the importer, then they will be liable to pay the duty. So what is the principle lying behind it? The principle behind this provision is if the goods are not under importer's control, they are not liable to duty. That is a simple logic. So what are the situations which are not covered by section number 13? When section number 13 will not become applicable? Number one, goods are completely lost or stolen. Lost or destroyed. When the goods are completely lost or destroyed, as I have told that we will cover it in 23 subsection 1. Section number 13 only talks about small thefts. Next, goods pilfered before unloading. Even before unloading, that means when the goods are in a vessel, when the goods are in an aircraft, even before unloading only if the pilferage happened, then also section number 13 will not become applicable. Goods pilfered after clearance, order for home consumption or deposit in a warehouse. In case if the petty theft is happening after they are cleared for home consumption or after they are cleared for warehousing, then also section number 13 will not become applicable. So section number 13 will become applicable only the pilferage should have taken place after unloading and before clearance for home consumption or even before clearance for warehousing. Then only pilferage should have happened, then only section 13 will become applicable. And they say one more line here, section 13 will not become applicable when section 23 subsection 1 does apply. So what do you mean? Section 13 is applicable when section number 23 subsection 1 does not apply. Sir, what is section number 23 subsection 1? When the goods are completely lost or completely destroyed, then 23 subsection 1 will become applicable. Then section 13 has no role to play. But what is the section 23 subsection 1? We are going to see it shortly. Just we have to keep this in mind. Either section 13 will become applicable or section 23 subsection 1 will become applicable, not both. Now, so if you come to 22, section number 22. So what does 22 say? What does section number 22 say? Abatement. Abatement means reduction. Reduction of duty on damaged or deteriorated goods. Sir, which means what? Say for example, some vessel is there. This vessel containing the goods has reached the customs station. But what happened is, say for example, 1 lakh quantity of the goods have been unloaded. But these 1 lakh quantity of the goods are damaged or they are deteriorated. They are damaged or deteriorated before clearing for home consumption. They have been damaged or deteriorated. Say for example, this 1 lakh quantity, each item was 100 rupees. Total 1 crore worth of goods are imported. But because of some damage, now the value of the goods have been reduced. Obviously, when the goods are damaged, when they become inferior, value also will fall. Now the value of the goods is only 60. So you have imported 1 crore worth of goods, but now because of the damage or deterioration, it has become only 60 lakhs worth of value. Now on what value you have to pay GST? Sorry, on what value you have to pay customs duty? Will you be liable to pay customs duty on 1 CR or will you be liable to pay customs duty on the 60 lakh rupees on the reduced value? You will be liable to pay customs duty only on 60 lakh rupees, not on 1 CR. Not on 1 CR. But what are the conditions? When your customs duty will get reduced, what conditions are required to be fulfilled under section number 22? So circumstances. Duty is reduced if the following conditions are met. What are they? Number one, goods damaged or deteriorated before or during unloading. See, in section 13 I have told pilferage. Section 13 will become applicable only when the goods are stolen after unloading. But section 22 will become applicable when the goods are damaged or destroyed either before unloading or even after unloading. Even before unloading also, if the goods are damaged or destroyed, still your duty will be reduced. But in case of section 13, in the case of pilferage, to impose section number 13, pilferage should have taken place only after unloading. But section 22 will become applicable if the goods are damaged or destroyed either before or after unloading. Or goods other than warehoused goods damaged after unloading but before examination due to an accident, not due to the importer or his employee or agent fault. Or the goods are unloaded but before they could be inspected, then only some damage has taken place. Or when also section 22 will become applicable is the goods are sent to the warehouse. The goods are sent to customs warehouse, but before clearance for home consumption, at the warehouse goods are destroyed. Then also section 22 will become applicable. Then also it will become then also the customs duty will be reduced. So there are some differences, guys. Section number 12, section number 13, sorry, pilferage will become applicable only when they are stolen after unloading, but before clearance for home consumption, before clearance for warehousing. But section number 22 will become applicable if the goods are damaged or destroyed, number one, before unloading or after unloading. Even at the warehouse also, if they are damaged, they have been cleared for warehousing, at the warehouse they have been damaged or destroyed, then also you can reduce your duty. So one simple example, like the way whatever I have told one example. So you have imported 1 CR worth of value, but because of the damage and all, now the value has become only 60 lakh rupees. You will be liable to pay duty only on 60 lakh rupees. Next. Methods to ascertain the value of the damaged goods. Sir, you are telling on the reduced value only I'll be liable to pay customs duty, but how to determine that value, sir? How to determine that value of the damaged goods? The value of the damaged goods will be determined by proper officer. You can't determine what is the value, what is a value for customs duty. The proper officer himself will determine. Or what else he can do is he can sell the goods at auction. In case if you say I don't want this destroyed goods, for example, goods are completely destroyed and all, goods are destroyed or these goods are damaged or deteriorated, you told no sir, I don't want damage of goods. Now what even the proper officer can do is he can conduct an auction, he can conduct a tender, and in that auction or tender he will sell that goods. So he will determine how much value those goods are able to fetch. Say for example, those goods are able to sold at 20 lakh rupees. These 20 lakh rupees will be given to the importer, but they will give you only after payment of customs duty. So selling the goods at auction or tender with the owner's consent and using the sale proceeds as a value. So basically proper officer will determine how to the proper officer will determine what is the value of the damaged goods. Then they have given one difference between damage versus deterioration. Sir, what do you mean by damage? Damage refers to physical harm, making the goods unfit for their intended purpose. Damage means something has happened to your goods because of which you are not able to use it for whatever purpose you have you have the intention of using it. Deterioration refers to reduction in the quality due to natural causes. Deterioration means reduction in the quality. Some quality has reduced, but damage means that has become unfit for your intended purposes. Not so important from the examination perspective. So we have covered section number 22 also. So we covered two sections. Section number 13, which is talking about pilferage. Section number 22, abatement or reduction of duty in case of damaged or deteriorated goods. Then we are going to see 23 subsection 1, which is talking about remission of duty on destroyed goods. Goods are completely destroyed. Goods are completely destroyed or goods are completely stolen. Like as I've told, 1 lakh quantity you have imported, entire 1 lakh quantity is gone. Able to understand? Or complete 1 lakh quantity has been completely destroyed. Say for example, some fire accident has happened. So you have unloaded the goods, kept it at the warehouse or whatever it is, you kept at the customs station. There a fire accident has happened. Your complete goods are burnt. Before you could clear them for home consumption, your complete goods are burnt. Zero value they are available. So now what will happen? Now also you will not be liable to pay any customs duty because goods itself is not there. No, you're already crying because your goods are all completely lost or destroyed. Can you expect the custom authorities to come and ask the customs duty from you at that point of time? No, you will give a tight slap to that customs authorities, right? Because you're already in pain because all your goods are lost or destroyed. So that's why the government also says we don't want any customs duty in that case. Even if you have already paid that customs duty, they will give it back. So that's what they say. Circumstances if the goods are lost other than due to pilferage. If it is minor loss, minor theft and all, 13. It is not because of pilferage, completely lost or completely destroyed. Or destroyed before clearance for home consumption. That could be at the warehouse, that could be at the customs station, wherever it is. So before you could clear them for home consumption, if the goods are lost or completely destroyed, assistant commissioner or deputy commissioner may remit the duty. If you have already paid the duty, they can give it back to you. Remission of duty applies only when there is a total loss or loss is irreversible, such as goods are destroyed in a fire before clearance. For pilfered goods, section 13 applies instead. Now they are giving a few differences between section 13 and section 23 subsection 1. Section 13 is talking about pilfered goods. 23 subsection is talking about destruction or loss, complete destruction or loss. What are the differences? Meaning, pilferage means petty theft or stealing of the goods in small quantities. Then section 13 will become applicable. When 23 subsection 1 will become applicable, when there is a loss or destruction, which refers to a complete loss or loss that is forever and which can't be recovered. Duty liability. The importer is not liable to pay duty on the pilfered goods. Whatever petty thefts are there, on that you are not liable to pay customs duty. But if the goods are restored, if the goods are given back to you, if the goods are found and given back to you, then you are required to pay the customs duty. I told you this, no? But in the case of 23 subsection 1, goods are completely lost, completely destroyed. The loss is not reversible. The loss is not reversible. That's what they say. The duty paid on lost or destroyed goods should be remitted to the importer. So whatever duty, whatever customs he has paid on completely lost goods or destroyed goods, that has to be given back. Time of occurrence. The goods must have been pilfered after unloading but before clearance. As I've told, it should be after unloading but before clearance. Whereas before clearance, either for home consumption or for warehousing. Whereas 23 subsection will become applicable when the goods have been lost or destroyed at any time before clearance for home consumption. Even if the loss happens at the warehouse also, 23 subsection will be one will become applicable. But if the goods are lost at warehouse, if the pilferage happened at warehouse, then section 13 will not become applicable. Next, warehouse goods. That is the next point. Section 13 does not apply if the goods are pilfered after warehousing, whereas 23 subsection 1 will apply even if the warehouse goods are completely lost or stolen. Burden of proof. No burden of proof is cast on the importer under section number 13. That means if there is any petty theft or something, there is no burden on you to prove that there is a pilferage and all. Whereas under section 23 subsection 1, the importer must prove to the assistant or deputy commissioner that the goods have been lost or destroyed before clearance for home consumption. Here there is a burden of proof in the case of 23 subsection 1, whereas there is no burden of proof in section number 30. Then we have one more case, 23 subsection 2. So what is this 23 subsection 2? 23 subsection 2 talks about relinquishment of the title on the goods. Relinquishment means what? Giving up. So you have ordered for the goods are received, the goods have been unloaded at the warehouse, but you don't want to clear it for home consumption. You are saying, I don't want this goods anymore. I don't want this goods. You are leaving that goods. You don't want to clear them for home consumption. You are relinquishing your right. You are giving up your right. You are giving up the possession and right of that goods. Maybe, sir, why a person will give up his right? Why he will just like that give that goods, give away that goods? Why he will not claim them? There could be multiple reasons. Might be the customer or the importer did not send the goods whatever you have asked for. Some different goods he has sent. So you are very much fed up and you told, I no longer want these goods. I am giving up this right. You told the customs authorities, you do whatever you want with this. I no longer want these goods. So whatever may be the reason. In some cases it will happen because of some, I can't disturb the circumstances, but in some cases, depending on the facts and circumstances, sometimes importers get very much worried and they will relinquish their right. They will give up their right for the goods and they will leave it at the customs authorities. Since you are not clearing for home consumption, you are giving up the right on that goods and all. At that time also, you are not required to pay any customs duty. So that's what they say. Owner of imported goods may relinquish their title, may give up their ownership of title to the goods before the order for clearance or warehouse deposit. Even before they are going to warehouse, even before they are cleared for home consumption, you are relinquishing your right. In such cases, the owner is not liable to pay duty on these goods. Relinquishment. Sir, what do you mean by relinquishment? It means to withdraw, abandon, or surrender any right of the goods. This should be done unconditionally. Without any conditions, you are saying, I no longer want this goods, do whatever you want. You are giving it to the customs authorities. So when relinquishment can be made, option to relinquish can be exercised before the order for clearance for home consumption or warehouse deposit has been passed. That means goods are just unloaded. They are neither cleared for warehousing, they are neither cleared for home consumption. If you want to give up, at that point of time only you have to give up. So you can't say for example, you have cleared the goods for warehousing. You have submitted one bond for warehousing, you have sent the goods to the warehouse. After you have sent the goods to the warehouse, then you can't come and say, I no longer want these goods. If you want to relinquish your right, you have to do it even before clearance for home consumption or even before clearance for warehouse deposit. Exception: relinquishment is not allowed after goods involved in offences under Act or other laws. Now you can't say for example, you are a importer, you are importing drugs and all. Prohibited goods you are importing drugs. Now you are caught, you have committed an offense. Now you can't say, no, I no longer want these goods, I don't want to face any consequences. Can you say that? No. So if you have imported any goods and you have committed any offense under the Customs Act, you can't say, no, I no longer want these goods, I want to escape all the punishments and all. You can't say. If you have imported these kind of narcotics and all, then you can't relinquish. You have committed an offense, all the consequences you have to face. Then situations for relinquishment, goods. So they are giving a few examples when the goods might be relinquished. Goods not meeting the specifications. If the goods, whatever you have ordered, but whatever you have received, they are not matching the specifications, or during voyage they have been damaged, or the recipient, the importer, has breached the contract. So these are a few examples where the relinquishment of title in the goods will happen. Then we have rule number 24, which says that power to make rules for denaturing or mutilation of goods. Sir, what do you mean by this? Is this I will give you one example of alcohol. Say for example, there is one importer. This importer is importing one alcohol. See, alcohol can be used for human consumption also. Alcohol can be used for medicines also. Alcohol can be used for medical purposes also. If the alcohol gets used for human consumption, it will attract highest rate of customs duty. But if it is getting used for medicinal purposes, then it will have low rate of customs duty. Say for example, if the alcohol is for human consumption, the customs duty is 30%. If the alcohol is for medicinal purposes, the customs duty is at 10%. So there is one importer, he imported alcohol. but he can take this alcohol and use it for home, he can use it for human consumption also. He can go and use it for medical purposes also. But the customs authorities don't know. No, customs authorities don't know this person is importing alcohol, but will he use it for human consumption or will he use it for medicinal purposes? Customs authorities don't know. But this importer is saying to the customs authorities, sir, I am using the alcohol for medical purposes only. I will pay customs duty only at the rate of 10%. But the customs authorities are not sure whether he will take this alcohol, and he can even have an option to use it for human consumption also. He can use it for human consumption also. So he should have paid 30% of the customs duty, but instead of that, he conveyed to the customs authorities that he will use it for medicinal purposes and paid only 10% of customs duty. So now here customs authorities are worried. Now what they can do, so what they will do is, they have given a power to the customs authorities, and they said, okay boss, you want to use it for medicinal purposes, let us do one thing. If you want to use it alcohol for medicinal purposes, in that you have to use some components, like for example you have to use something called ethanol, and you will mix some chemicals, if you so that it can become fit for medicinal purposes. So what customs authorities can do is, okay, you want to use alcohol for medical consumption, let us do one thing. So in order to use this alcohol for medical consumption, you have to mix some chemicals, bring that chemicals. They will ask the importer to bring some chemicals. They will mix the chemicals in that alcohol so that it will become fit only for medicinal purposes. It will no longer become fit for human consumption. It will no longer, that means even after mixing that chemicals, if this person takes this alcohol after custom clearances by paying 10% of the customs duty, since the chemicals are already mixed in that alcohol, he can no longer go and use that for human consumption. He has to compulsorily use for medicinal purposes only. So this activity, whatever custom authorities have done, this we call it as mutilation or denaturing of the goods. Whatever customs authorities have done here, that we call it as what? That activity we call it as what? Denaturing or mutilation of the goods. So that's what they say. Central government can make rules to allow denaturing or mutilation of imported goods to make them unfit for certain uses. Duty is charged based on the denatured or mutilated form of the goods. Since these customs authorities have mixed the chemicals and all, they have converted this alcohol to be fit only for medical consumption, and they will collect customs duty at the rate of 10% only. Okay, right. Then section number 25, exemptions from customs duty. So sometimes what will happen is, keeping in mind the public interest, like the way in GST government has granted exemption, even the government can consider the same thing for imports also. If any essential products are getting imported, if they are very much required for public, so keeping in mind the public interest, even central government can exempt certain categories of the goods from customs duty if it is necessary in the public interest. And that exemption can be a general, by way of a general condition. Either that could be absolute, without any condition they can grant exemption, or even they can grant conditional exemption also. That means if you fulfill some conditions, then we will grant you exemption. So that we call it as conditional exemption. Sometimes they will give absolute, without any conditions. They will say this product is always exempted. So that exemption can be by way of a general notification, either absolute or conditional, or even that exemption could be by way of a special order. In any manner they can give exemption. So exemption conditions. An exemption from duty on goods may be granted by levying duty at a different rate or method than original. However, the duty should never exceed the original duty. So what even sometimes government can do is, instead of granting whole exemption, what they can do is, say for example, one product is attracting 10% of customs duty. So what government can say is, let us do one thing, you pay only 5% of customs duty on this. You pay only 5% instead of 10%. So like that, even the government can grant exemption by giving you a concessional rate, by giving you some different method of valuation and all. And duty is not collected if it is less than 100 rupees. This is important for the MCQs and all. If after assessment, if it was determined that customs duty is less than 100 rupees in total, then they don't want to do all this miscellaneous activities. They don't want to waste that, or the government doesn't want the customs authorities to even fight for that 100 rupees also. So what the government told is, if after doing all the assessment and all, if the customs duty amount comes to less than 100 rupees, don't collect it, ignore it. You have many other important activities to take care of. Don't fight for that 100 rupees, leave it out. That's what the government has told. Then, see, whatever goods you are importing, whatever goods you are exporting, if they have to attract customs duty, that rate of customs duty will actually depend on classification. You have to classify the products. That classification is nothing but HSN classification, harmonized system nomenclature, whatever we have seen in the GST. So that kind of classification we even follow it here. So first we will classify the goods into proper classification, HSN code we will identify, and according to that HSN code we will find out what is the rate of the customs duty. So same like HSN classification, whatever we have seen under GST, the same thing will get repeated here. Like if you see classification of imported or exported goods, the import and export of goods require classification to assess the duty, which may include an assessment of even nil duty also. So whether a product will attract positive rate of duty or a product is having nil duty, that all depends on the classification. The classification means categorizing the goods under specific headings or subheadings under the Customs Tariff Act. Sir, why classification of the products is very, very important? Why? Because correct classification is important for following reasons. Number one, you can determine what rate of duty has to be paid. That will depend on classification only. Determining eligibility for exemption notification, whether the product which you are importing or exporting, whether that is exempted or not. That also you can find out only when you know the classification of the product. For applicability of other duties, anti-dumping safeguard, this will sit in the next class, and even for applying any restrictions or controls. So for all these reasons, proper classification is very, very important. And scheme of classification, in the first schedule we have goods which are chargeable to import duty. Second schedule we have goods which are chargeable to excise duty, export duty. This we all know. So the goods are arranged in a fixed pattern in the tariff schedule, which with the duty rates is specified. So if you look at the first schedule includes a description of goods chargeable to import duty. It uses the HSN code as we have seen in the GST, which is developed by World Customs Organization. And there are 21 sections here, 98 chapters we have, and goods are categorized by 4-digit heading will be there, 6-digit subheading, and 8-digit tariff item. Same like GST only, guys. In the charge of GST chapter, whatever classification we have seen, the same thing they are trying to say. Similarly, second schedule will contain description of goods which are chargeable to excise duty. Understood? So this is what regarding this chapter. So basic introduction we have seen. So next we have to proceed further with what are the various types of duties we have to see it in our next session. Yeah, so let us resume our discussion with the further concepts and the customs. So in the previous session, we have completed a few basic things regarding the customs. So like we have understood when the customs will become applicable, what is the charging section, and also we have understood few definitions, what are some important definitions that also we have seen, and why customs has been imposed to make the Indian products competitive with the global products. That has been the main intention by the Customs Act is there. And we have seen in order for customs to be levied, what is the charges, what is the taxable event under customs. Like in the case of GST, the taxable event is supply, whereas in the case of customs, the taxable event is either import or export. And I have told that we are going to concentrate more on imports. Why? Because in majority of the cases, whenever you are doing the export, you are actually contributing to the growth of the country in balancing its foreign exchange reserves. So that's why in case of export, there will be so many relaxations. In many cases, you are not required to pay any duty and all. But in exceptional cases, even on exports also, you will be able to find some duties. So we are going to concentrate very less on the exports part, but we are going to concentrate more on the imports. Our discussion is 90% of our discussion is going to revolve around imports only. Okay, right. So this is what all the basic discussion we had. Now we are going to start our next topic, which is regarding various types of duties. What are the different kinds of duties, or what are the various kinds of taxes which will be levied under customs? All that we are going to see. Okay. So here also we are going to concentrate more on import duties. As you could see, in case if you are importing, as we all know, the first schedule of the Customs Tariff Act will talk about import duties, whereas second schedule of the Customs Tariff Act will talk about export duties. We don't have many things to discuss under exports, but we have a lot of duties. There are various kinds of duties which are imposed if you are importing the products into India. So all that duties, different kinds of duties, especially on imports, as you could see here, the list is never ending. We have something called basic customs duty, we have something called protective duty, we are going to have something called safeguard duty, countervailing duty, anti-dumping duty, IGST, GST compensations. It's like that we have multiple kinds of duties whenever you are importing the products into India. And I told you the logic also why on imports the duties are getting levied. Why? Because if you don't have any kind of duties on imports and all, what will happen is, for people who are residing in India, for the foreign products become more favorable. So what people in India will do is, if there is no customs, what people in India will do is, instead of giving the preference for the locally manufactured and produced products, they will start using the foreign products, which will be a threat for the entire domestic industry, which will be a lot of, there will be a lot of setbacks for the Indian manufacturers and all. And overall, on a very large scale, if you look at, it will lead to less employment opportunities, more poverty. This I have all told in the introduction itself. So all that problems will face. So that's why on imports, there will always be various duties. The government always wants to discourage the imports and they want to encourage the exports. Okay, so in order to achieve that objective, there are so many kinds of duties which are getting levied. All that duties we are going to understand. And once again, we are going to concentrate only on import duties, not on the export duties. So as you could see here, multiple things we are going to see. We have various kinds of duties like something called social welfare surcharge, basic customs duty, IGST, and not just that, we have something called compensation cess also will be levied, and in some cases some extra duties in the form of safeguard duty. We also have something called countervailing duty on subsidized articles. We also have something called anti-dumping duty. So like that, multiple duties are there. All this we'll try to understand. So first I would like to start my discussion with basic customs duty. First we'll try to understand the first category of the duty, which is basic customs duty. We'll try to understand BCD also we call it. So BCD, basic customs duty, is levied as per section number 12 of the Customs Tariff Act 1975, and it provides the rate. The goods can be subject to either a specific duty or it could be a ad valorem duty. So I have already told you this. So whenever you are going to import the goods, whenever you are going to import the goods into India, so you are a person in India, from outside of India, you are importing the goods. Okay. So whenever you have imported the goods, what will be happening is, after, if you want to clear that goods for home consumption, the first thing what you are supposed to do is you have to determine the value. A value under section 14(1) or 14 subsection 2 of the Customs Tariff Act. How to do that valuation and all, that we'll see it in the subsequent topic. How to determine the value, that we will see it later. But first, what will happen is whenever you have imported the goods, the customs authorities will determine the value. Say for example, the value of the goods which you have imported is 1 CR. 1 CR worth of goods you have imported. Now on this value, which has been determined as per applicable provisions of the Customs Act, and how to do that valuation, we are going to see it later. I'm not going to focus on how to do that valuation. I'm only going to talk about how to calculate the duties. So somehow, applying some rules and all, the value of that imported goods will be determined. On that value, first what we will be required to pay is basic customs duty. What will be required to be paid? Basic customs duty will be required to pay. And this basic customs duty can be specified in two ways. Either it could be a specific duty, like as I have told you in the introduction, specific duty means they will say for every 1 kg, for example, if you are importing a motor vehicle, for every 1 motor vehicle you have to pay a fixed amount of 1 lakh rupees as duty. So but this specific duty also will mean limited cases. In majority of the cases, basic customs duty will be levied on the basis of ad valorem basis. Sir, what do you mean by ad valorem basis? On the basis of value. So that means there will be certain percentage. There will be certain percentage which will be specified in the Customs Tariff Act, and that percentage will be determined. That percentage will be multiplied on the value whatever you have determined under the Customs Act. Specific duty are not required to do any calculation. Specific duty, there will be a list for every item. This much amount of specific duty you have to pay. There will be no headache there. But when the calculation part will comes into picture is when the basic customs duty is charged on ad valorem basis. Say for example, I'm importing some electronic goods. Now, when I look at the Customs Tariff Act, on the electronic goods, the rate of customs duty, basic customs duty applicable is at 10%. What is the basic customs duty rate applicable? 10%. So now what I will do is, on the value whatever I have determined, I will multiply that rate of duty as per the Customs Tariff Act, which will come to 10% here. So if I multiply that 10% on the value, my customs duty, my basic customs duty will come to 10 lakh rupees. So this basic customs duty I have to pay to the customs authorities. Once I pay that customs duty, then only they will give me the permission for clearance for home consumption. Then only I'll get the permission for clearance for home consumption. So this is how you are supposed to calculate the basic customs duty. Even the same provisions you will be able to find it here. So the first and foremost duty which you are required to pay on imports is basic customs duty. So that's what section number 12 of the Customs Tariff Act says. So which says that it could be basic customs duty can be either a specific duty or it could be a ad valorem duty. And also there will be different kinds of basic customs duty. Either it could be a standard rate. Like for example, I have told here it is 10%. I'm importing electronic goods and the standard rate of customs duty on electronic goods is a 10%. Or in some cases, what could happen is even it could be a preferential rate. That means a concessional rate for goods imported from preferential areas from only if certain conditions are met. Say for example, India is having some good terms with Russia. So now government has given you some relaxation. If you are importing the goods, if you are importing electronic goods from Russia, and if you satisfy certain conditions, government also will give a list of conditions. If you fulfill that conditions, even though the import of electronic goods, we have a rate at 10%, but what government can do is government can offer you to pay the customs duty at discounted rate. That means, say for example, government has given one notification in which they have told that if you are importing electronic goods from Russia, and if you fulfill some 5 conditions, you are not required to pay 10% of the customs duty, basic customs duty. You will be required to pay only 5%. Concession they are giving. So like this, government can sometimes even give you an option to pay tax at concessional rate also, provided if you are importing the goods from preferential areas and also you are satisfying some conditions. Clear, everyone? So this is what the first kind of duty. So what is the first kind of tax which you are required to pay? You are required to pay something called basic customs duty. Now, apart from that, not just basic customs duty, you are required to pay one more kind of taxation under customs on imports, which is something we call it as social welfare surcharge. Government will also collect from you one more kind of tax called social welfare surcharge. Sir, what is the social welfare surcharge? How to calculate that social welfare surcharge? Guys, in all this, what is most important is the calculation part. On which value we are multiplying percentage, that is very important. Once I explain all the kind of different duties, I will give you a table, a order in which you have to calculate the taxes and all. That is very important. That is where the questions will be tested. That I will explain it later. But let us first get familiar with different kind of taxes. So we have something called social welfare surcharge. In order to maintain the social welfare in the economy, in the country and all, the government will collect from you one more tax in the name of social welfare surcharge. Sir, how to calculate that? On what value it will be multiplied? Very interesting here. Listen carefully. Social welfare surcharge is levied at 10%. The rate is fixed here. See, basic customs duty, the rate will differ depending on the item which you are importing. But social welfare surcharge is fixed rate, which is how much? 10%. And this 10% is not on the value of the goods you have imported. This 10% is on customs duty. Whatever customs duties you are paying, on that total customs duties, you are required to pay something called what? 10%. Excluding certain duties, all this I will come back to that later. This part I will come back to that later. It is not applicable on export. Social welfare surcharge is once again applicable only on imports. It is not applicable on exports. So how? What they are trying to say here? Say for example, once again, I am importing goods. The value of the goods which I have imported is 1 CR. 1 CR is the value of the goods. Okay. Once again, take for example, electronic goods only I have imported. Just now I have told on electronic goods, the rate of basic customs duty is 10%. So now on this value, what I will do? Basic customs duty I will add. So how much? 10%. If I multiply that, it will come to 10 lakhs. And now, in addition to that, government will collect something called social welfare surcharge. At what rate? At the rate of 10%. Sir, this 10% on what? This 10% is not on 1 CR. This 10% is not on 1 CR of value. This 10% is on the customs duties which you are paying. You will pay the customs duty, no? On that customs duties, 10% will be multiplied. So on what value? What is the value of this social welfare surcharge here? So 10 lakhs is the value of the customs we are paying, customs duty you are paying. On that 10%, if you multiply, the value is going to come to 1 lakh rupees. The value is going to come to how much? 1 lakh rupees. So now you tell me, what is the total cost of these goods? By the way, you get for clearance for home consumption. What is the total value here? So 1 crore 11 lakh rupees. Able to understand? So basic customs duty is something which will be paid on the value of the goods which you have imported, which is determined under Customs Act. In addition to that basic customs duty, you are required to pay something called social welfare surcharge at the rate of 10%. But this social welfare surcharge will not be calculated on the value. This social welfare surcharge will be calculated on the basic customs duty and other duties whatever you have paid under the Customs Act. So on all that duties, 10% will be multiplied. So here I have paid only basic customs duty. So 10 lakh rupees into 10%. If I multiply, social welfare surcharge will come to 1 lakh rupees. So this basic customs duty of 10 lakh rupees I have to pay. 1 lakh in the name of social welfare surcharge also I have to pay. Understood? Next. And they say something here, social welfare surcharge is not applicable on something they are trying to say. This I will talk about it later. This we will see later. Why? Because all this we are yet to understand what is safeguard duty, what is countervailing duty, what is anti-dumping duty. All this is going to come further. So now we don't know meaning of all these terms. Just remember till here, value, on the value basic customs duty, on the basic customs duty, social welfare surcharge at the rate of 10%. Okay. Apart from that, what else the government is saying? Government imposed surcharge or cess. Government sometimes, in addition to basic customs duty, in addition to social welfare surcharge, they will also collect from you some extra taxes in the name of surcharge or cess. But this is not for all articles. If you have imported certain category of articles, even they have mentioned on which articles you will be required to pay that surcharge and cess. Like if you see here, the government may impose specific surcharges or cesses such as road and infrastructure cess on motor spirit and high-speed diesel, health cess on medical equipment. So this surcharge will not be there on every item. It will depend on the products you are importing. Like for example, if you are importing motor spirit and high-speed diesel, then government will impose, in addition to basic customs duty, in addition to social welfare surcharge, they will collect from you something called road and infrastructure cess. If you are importing medical equipment, they will collect from you something called health cess. So it all depends whether cess and surcharge will be there or not. It all depends. But what things will always be there? Basic customs duty will be there, and along with that, social welfare surcharge also will be there. Okay, so till now, what and all different duties which we have understood? Number one is basic customs duty. Then we have understood something called social welfare surcharge. Then we have understood something called surcharge or cess, depending on the products which you are importing. Next, in addition to that, you will also be required to pay something called IGST also. You will also be required to consider, you will be also required to pay something called IGST. Sir, why IGST? Why IGST? See, even imports is also considered as interstate supply, and on the value of imports, you are required to pay IGST also. Why? Because, sir, why IGST on imports also? I will tell you. Say, for example, there is a person in India. He wants to purchase one product A he wants to purchase. So that product, if he purchases in the Indian market, the price is 1000 rupees. The price is how much? 1000 rupees. Now the same product A is available in China. If you buy the product from China, it will cost you 700 rupees only. It will cost you how much? 700 rupees only. Now what government will do in order to make the Indian products competitive? So what they will do is, they will collect from you customs duty. They will collect from you basic customs duty, social welfare surcharge. All this they are collecting in order to make them at par with the Indian products. Say for example, government has imposed these duties and all. So now the price of this product is 1000. If you import, if I add the customs duties and all, 1000 rupees you have to pay. But there is one more thing here. If you buy the product from Indian manufacturer, IGST will be GST will become applicable. No, this product today in India we have GST. So if you buy the product in India, you will be required to pay GST or not. That will be a supply. Say for example, this product attracts 18% of GST. So if you buy this product in India, you are required to pay 180 rupees of GST also. Now, if you don't compensate, if you don't charge GST on imports, then what will happen? It will be costly. If an Indian person purchases from India, he will be required to pay 1,180,000 for the product and 180 rupees in the name of GST. If you don't impose GST on imports, what will happen? Once again, this will become cheaper, no? So what is the main purpose of the customs and all? To make the Indian products competitive at par with the foreign products. But if you don't attract these, if you don't bring this customs also, if you don't bring this imports also under GST purview, once again Indian products will become costly. So that's what the government is doing is, in addition to duties and all, you will be also required to pay IGST. You will be also required to pay IGST. Whatever product you are importing, depending on the rate which is applicable for the product, you will be required to pay IGST also. Clear? So that's what they say here. So that comes the next part, IGST. So IGST is also applied on imported goods at the rate under Section 5 of the IGST Act. And on what value IGST you are required to pay. How to calculate the IGST value. So here comes the interesting thing. Once again, let us come to the example. So say for example, value which is determined under Section 14 subsection 1 and or 2. So this value is 1 CR. 1 CR worth of products I have imported. Okay, first what will be there? Basic customs duty will be there. So what is the basic customs duty? Say for example, this product will attract 10%. So 10 lakh rupees of basic customs duty. What did I say? Social welfare surcharge also will be there. Social welfare surcharge will be 10% on basic customs duty, which will once again come to 1 lakh rupees. Okay. Apart from that, various other duties also will be there. I will give you a few names here. Say for example, sometimes what will happen is there will be something called anti-dumping duty. There will be something called countervailing duty. There will be something called safeguard duty. If any such duties are there, those also will be added. Those also should be added. Let us assume that I'm not taking their names, but if at all, I'm not taking the figure here, but because we are yet to understand what is this anti-dumping duty, what is this countervailing duty, what is this safeguard duty, we are yet to understand. But if any such duties in other names are there, those duties also will be considered. Now, after adding all this, you will get one value. So in my example, the value comes to 1 lakh 11 CR. Now, say for example, this product, whatever has been imported, that will attract a GST at the rate of 18%. Now, if you calculate, now you should multiply 18% on this value. Say for example, this is A, on this value, 18% should be calculated. So how to determine value for the purpose of IGST? You have to take the value determined under custom rules. To that, you have to add all kinds of duties levied under Customs Act. You should also add social welfare surcharge. So everything should be added. Then you will get one value. So that value will be considered for, that value will be the assessable value for the purpose of IGST purposes. Now on this 1 crore 11 lakh rupees, you have to multiply 18%. So if I multiply that 18%, what will be my figure? So let me do that calculation for you. So 1 crore 11 lakhs into 18%. If I multiply, it will come to 19 lakh 98,000. So that will be the GST value. So total transaction value after considering total invoice value will be how much? So if I do that calculation, 8, 9, 10, 3, 1 lakh 30,000, 1 crore 30 lakh 98,000 will be my total value inclusive of GST. Okay. So tell me guys, how to calculate? Once again, I'm telling you, this valuation is very important. This calculation is very important. This is where the examination question is going to come from. And this is where most of the students will do the mistake. So on what value will you calculate IGST? You will take the value which is accessible under section 14 and 14.2 of the custom rules, and you have to add to that basic customs duty. Apart from that, any other duty which is imposed under customs, that also should be added, and even social welfare surcharge also should be added. Then after adding all this, you will get one value. On that value, at the applicable rate, you have to multiply the GST, you have to multiply that applicable GST rate. Then you will get the IGST value. That IGST value also is required to be paid to the government. Understood? So that's what they say here. So IGST is also required to be paid. IGST is applied on imported goods at rate under section 5 of the IGST Act. The value for IGST is computed as follows. Value determined under 14 subsection 1 or 14 subsection 2. That value you have to take. To that, any customs duty which is chargeable under 12 of the Customs Act, that is basic customs duty and all, that also you have to add. And apart from that, any additional charges like anti-dumping duty, safeguard duty, even that also should be added. And however, IGST and compensation cess are not included. See, same no, for calculation of IGST, we will not include any IGST component. Even you can ignore this line also. So basically what they're asking you to do, take value determined under custom rules, to that add basic custom duty, social welfare surcharge. Apart from that, any other kind of duty which you have paid, everything should be added. Then you will get the value. On that, you have to pay that IGST. Able to understand? Clear and comfortable, everybody? But here there are certain things, certain important concepts we are going to understand. Come on guys, listen carefully. One important concept I'm going to explain. Say for example, there is a person who is in India. Okay, he imported the goods. Okay, so he imported electronic devices. Fine. So 1 crore worth of, let me do one thing, let me write the shortcuts here. 1 crore worth of goods he has imported. Now these goods reach at the customs station. As I have told you in the introduction class itself, the importer has two options. What he can do, either he can clear them for home consumption, or what he can do is he can take it to warehouse. He can take it to a customs warehouse. So now what this person has done is, first he has taken that goods to warehouse, customs warehouse. He submitted a bill of entry for warehousing. So he has taken the goods to the customs warehouse. At this point of time, is customs duty required to be paid? No. As I have told, without paying, when you are clearing for home consumption, then only customs duties are required to be paid. Now what this person has done is he has taken that goods for warehousing. Now what he has done is, once he has taken the goods to the warehouse, even before clearing that goods for home consumption, what he has done is he has sold the goods to another person. That can happen. No, even before clearance also you can transfer the ownership. For example, if I want to sell some goods, it doesn't mean the goods should be with me. Even my goods are not there with me, even the goods will come in future, still I can sell that goods to another person. So when the goods are in warehouse, what this person Mr. A has done is, now this person Mr. A has sold the goods to Mr. B. He has sold the goods to Mr. B. Say for example, for 1.2 crore he sold the goods. At what value he has sold the goods to Mr. B? For 1.2 crore he has sold the goods to Mr. B. Now you tell me, IGST should be paid on after. So this sale has happened. Now what Mr. B is doing is, from the warehouse, now he is clearing for home consumption. Mr. B is clearing the goods for because he has become the importer. No, he purchased the goods. Now Mr. B is clearing these goods from warehouse. For the purpose of clearance, he is submitting the bill of entry. Now my doubt is, will IGST be paid on the transaction value of 1 CR or on the sale value of 1.2 CR, on which value IGST is required to be paid. On which value IGST is required to be paid. So what does the Customs Act say here is, in case if the warehoused goods are sold before clearance for home consumption, whichever is higher, that value should be considered for the purpose of calculation of IGST. So you tell me 1 crore is the imported value of the goods, but the sale has taken as 1.2 CR. So now you tell me which value will be considered for the purpose of IGST calculation. Whichever is higher, they have told 1.2 CR will be considered for calculation. Able to understand? So if you read the provision, it will become more clear. IGST on warehoused goods. For goods sold from a warehouse before clearance for home consumption, or if you have been exported, anything could happen. But whatever it is, export, you need not worry. First, let us concentrate on if before you have transferred the goods to the warehouse and you did not clear for home consumption, before clearance for home consumption only, you have sold the goods to another person. Then on what value should be considered for the purpose of IGST calculation? So what they said is, if you are selling entire goods, say for example, I imported some 1 lakh quantity of the goods, total value is 1 CR. So total 1 lakh quantity of the goods I have imported, and entire 1 lakh quantity of the goods I have sold it before clearance for home consumption. So if that is the case, what they are trying to say is higher of the value determined under Customs Act or the transaction value. So what is the value determined under Customs Act? It is 1 CR. Or transaction value. What is the transaction value? 1.2 CR. Whichever is higher. Which one is higher? 1.2 CR is higher. This value should be considered for the purpose of IGST calculation. Understood? Let me give you one more example. Say for example, there is a person, Mr. A. He imported the goods. Now, the value as per customs at the time of import, the value of the customs value as per the Customs Act is 1 CR. But he has moved that goods to warehouse before clearance for home consumption only. Mr. A has sold the goods to Mr. B and the sale has taken place as 90 lakh rupees only. Sale has taken place as 90 lakh rupees. Sir, why he will sell it at lower value? Whatever could be the reason, we don't know. So transaction has taken place at 90 lakh rupees, but the valuation for the purpose of custom is 1 CR. So now you tell me which value should be considered for the purpose of IGST calculation. So what does the rule say? Value determined as per Customs Act, which is 1 CR, or the transaction value, which is 90 lakh rupees, whichever is higher. Which one is higher? 1 CR is higher. 1 CR will be considered for the purpose of IGST calculation. Understood? Clear and comfortable, everybody? Now, so there could be one more scenario. Say for example, Mr. A is there. He imported 1 lakh quantity of the goods. 1 lakh quantity of the goods he has imported, but he did not clear that for home consumption. He transferred to warehouse. Now what happened is, while the goods are lying in the warehouse before clearance for home consumption, 40,000 quantity of the goods are sold. 40,000 quantity of the goods are sold before clearance for home consumption only. These goods are sold. Remaining 60,000 he did not sell it. Remaining 60,000 he did not sell it. So now total customs value determined for entire 1 lakh quantity as per Customs Act is 1 CR. Now this 60,000 has not been sold. Now these are getting cleared for home consumption. What will happen? When these 60,000 goods are getting cleared for home consumption, we will take, for IGST purposes, we will take the value as per Customs Act only. Why? Because the 60,000 was not sold. No, I will come to the 40,000 quantity later, but let us talk about 60,000. Mr. A, he is clearing 60,000 worth of goods for home consumption. He did not sell them before clearance. So if that is the case, what value should be considered for IGST purposes? Value determined under Customs Act. So if you calculate the value under Customs Act, for this is 60,000 rupees, 60,000 quantity, 60 lakhs will be the value as per Customs Act. So on this value, you will calculate IGST. This value will be considered for the purpose of calculation of IGST. But this 40,000 quantity before clearance for home consumption, this has been sold. No. Say for example, that transaction value, this 40,000 quantity of the goods were sold for 50 lakh rupees. This 40,000 quantity of the goods were sold for 50 lakh rupees. Now for this 40,000, when they are getting cleared for home consumption, on what value IGST is required to be paid? So what did I say? Either the value as per Customs Act or the transaction value, whichever is higher. What is the value as per Customs Act? 40,000. If for total 1 lakh, 1 CR is the value. For 40,000, how much will be the value? 40 lakh rupees. That is the valuation as per customs. What is the transaction value? 50 lakh rupees. Whichever is higher. Which one is higher? 50 lakhs is higher. So this 50 lakhs will be considered for the purpose of calculation of IGST. Understood? So that is what the second point. If you are not selling the whole goods, if you are selling only part of the goods, higher proportionate value of the goods or the transaction value. So that proportion for this 40,000, what is the proportionate value as per Customs Act? That is 40 lakh rupees, or the transaction value, which is 50 lakh rupees, whichever is higher. So here 50 lakhs is higher. So on this 50 lakh rupees, you will be required to pay the amount of GST, IGST you will be required to pay. Now, sometimes what will happen is, if the goods are sold multiple times, if the goods are sold multiple times. Now let me give you one more example. Say there is a person, Mr. A. Okay, he imported 1 CR worth of goods. 1 CR is the customs valuation as per customs. Now these goods are taken to the warehouse. When the goods are still lying in the warehouse, Mr. A sold the goods to Mr. B for how much value? 1.2 CR. Now what Mr. B has done is he did not clear the goods for home consumption. When the goods are still lying in the warehouse, Mr. B sold the goods to Mr. C for a value of 1.5 CR. Now what Mr. C has done is when the goods are still lying in the warehouse, before they are cleared for home consumption, he sold the goods for 1.8 CR. Now Mr. D finally he is clearing the goods for home consumption. Now finally he is clearing the goods for home consumption. On what value IGST will be paid? Which value should be considered for the purpose of GST? So now what did I say? In case if the goods are sold before clearance for home consumption, you should take valuation as per customs or transaction value, whichever is higher. We know what is the valuation for the purpose of customs. What is the valuation for the purpose of customs? 1 CR. Or a transaction value, whichever is higher. But now the doubt is, sir, which transaction value I have to consider? Because the sale has taken multiple times. One sale has taken place at 1.2 CR. Another sale has taken place at 1.5 CR. Another sale has taken at 1.8 CR. Sir, I have 3 transaction values. Which transaction value I have to consider? If the goods are sold multiple times before clearance for home consumption, which value you have to consider for the purpose of IGST purposes? Now, what does the Act says is, if the goods are sold multiple times before clearance, transaction value of the last sale is used for determining whatever is the last sale, that value we will take. Now you tell me, what is the last sale? Last sale has taken at 1.8 CR. This value I will consider for the purpose of transaction value. So 1 CR, the valuation as per customs, or 1.8 CR, which is the last transaction value, whichever is higher. Which one is higher? 1.8 CR is higher. So this value will be considered for the purpose of calculation of IGST purposes. This valuation will be considered for the purpose of calculation of IGST purposes. Understood, everyone? Clear and comfortable? Able to understand? Right. So this is what they try to say here. Understood? So IGST is very, very important. This calculation part is going to be damn important. So please pay close attention. Once again, I will read it. So IGST will be applied on imported goods at the rate under Section 5 of the IGST Act. And the value for IGST is, what is the valuation? It includes value determined under 14 subsection 1 or 14 subsection 2, or any duties which are required to pay under Section 12, that is basic customs duty. Apart from that, social welfare surcharge. It also includes any other kind of duties levied like anti-dumping duty, safeguard duty, everything. And in case if the warehouse, if the goods are warehoused and before clearance for home consumption, if it has been sold, which value will be considered? Either customs value under Section 14 or 14 subsection 2, or transaction value, whichever is higher. If it is sold multiple times, transaction value, which value you should take? The last sale. What is the transaction value for the last sale you have to determine, and that value you have to use it for the purpose of calculation of IGST. Understood? Clear and comfortable? Right. Right. So now let us try to understand next category of tax which you are required to pay. In the case of imports, you will be required to pay one more tax called GST compensation cess. So if you remember, regarding the GST compensation cess, we had a discussion in the introduction to the GST only. So because of introduction of GST, some states are losing revenue. In order to compensate those states which are losing the revenue because of introduction of GST, what did the government say? Central government told, we will collect something called GST compensation cess in case of specified products like luxury items and all. And whatever GST compensation cess which the central government is collecting, that amount will be used to compensate the states who are losing revenue because of introduction of the GST. So that is what the intention behind introduction of the GST compensation cess. So in normal domestic transactions on luxury items and all, GST compensation is like even on vehicles also, even on motor vehicles also, GST compensation cess will be imposed. Now, in addition to that, what the government has told is, if you are importing the goods, on the imports also you will be required to pay GST compensation cess. In addition to basic customs duty, in addition to social welfare surcharge, in addition to some other kinds of duties like safeguard duty, anti-dumping duty and all, in addition to IGST, you will also be required to pay something called GST compensation cess on imports. So that's what they say here. Any imported article will be liable to compensation cess at the rate specified under GST Act. In the GST Compensation Cess Act, they will specify the rate. According to the rate which has been specified, you are even required to pay GST compensation cess also. Sir, on what value you have to calculate GST compensation cess? On what value you have to calculate GST compensation cess? Whatever value you have used for the purpose of calculation of IGST, the same value, on the same value, even GST compensation cess also will be charged. Sir, what do you mean by that? What do you mean by that? Once again, let us come back here. So say for example, I am importing goods. Okay. So the goods which I have imported, for that I will determine the value. What is the value? 1 CR. On that basic customs duty, 10%. On that social welfare surcharge, if I calculate that, total assessable value for GST has come to 1 crore 11 lakhs. On that, I will pay IGST at the rate of 18%. Say for example, this product will attract a GST compensation cess at the rate of 20%. So in addition to IGST, I am required to pay GST compensation cess at the rate of 20%. Sir, on what value I will calculate GST compensation cess? On whatever value you have calculated IGST, on the same value you are even required to calculate the GST compensation cess also. This 20% once again I will multiply on A only. So which means 20% into 1 crore 11 lakhs. On whatever value you have calculated IGST, on the same value you will apply that GST compensation cess rate also. So if I do that calculation for you, so 1 crore 11 lakhs into 0.2, if I multiply that, 1 crore 11 lakh into 0.2, if I multiply that, it will come to 22 lakh 20,000. Will come to how much? 22 lakh 20,000. That much amount of GST compensation cess also you are required to pay. Understood? So when you are importing, you are required to pay IGST, you are required to pay GST compensation cess also. Whatever value you are calculating IGST, on the same value you are required to calculate GST compensation cess also. So sometimes you might get confused. What some people will do, they will calculate the value, assessable value for GST. On that, they will add the IGST component. Now, what some people will do, the mistake is they will add the GST value, they will determine the value. On this value, they will calculate GST compensation cess, which is absolutely wrong. So on whatever value you have calculated IGST, the same value should be used even for calculation of the GST compensation cess also. So I'm calculating IGST on 1 crore 11 lakhs. On the same value, you are required to calculate the GST compensation cess, not inclusive of IGST figure. Understood? So that much amount of GST compensation cess also you are required to pay. Wait a minute. Sorry. So on that value, you are required to pay GST compensation cess also. So very, very important. This calculation also you have to keep it in the back of your mind. So if you see here, what is the value? On what value you will calculate the cess amount? For GST compensation cess, the value of imported article is calculated as follow. Assessable value under section 14 subsection 1 or say 14 subsection 2, any customs duty, basically basic customs duty and social welfare surcharge. In addition to that, any additional duty like anti-dumping duty and safeguard duty, and in that value you should not consider IGST and GST compensation cess. So once again, whatever we have learned for IGST calculation, the same thing they are trying to say here. On whatever value you have calculated IGST, on the same value you have to calculate the GST compensation cess also. So here they have given example, the same example, some different example I have given. So you can solve this also for your understanding. And in case if the warehoused goods are sold, in case if you have imported the goods, but instead of clearing for home consumption, you have kept it in the warehouse, but before clearance for home consumption, you are selling it. Then on which value you have to pay GST? I have told either the valuation as per Customs Act or transaction value, whichever is higher. No, the same rules will become applicable even on GST compensation cess also. So whatever rules which are applicable for IGST calculation, the same rules will be even applicable for GST compensation cess. In case if you are keeping the goods in warehouse and before clearance for home consumption, if you are selling it, you have to take for the purpose of calculation of GST compensation cess also, the value will be value determined under Customs Act or the transaction value, whichever is higher. Sir, if goods are getting sold at multiple times, what should happen? Whatever is the latest transaction value that you have to take. Basically, whatever last sale has taken place, that last sales transaction value you have to consider for the purpose of calculation of GST compensation cess. So basically, whatever rules which are applicable for IGST, the same rules will even become applicable for GST compensation cess also. Understood? Right. And yeah, ITC is available under GST law for IGST and compensation cess payment. Basically, whatever IGST you are paying, whatever GST compensation cess you are paying, that you can claim it as input tax credit. There's no objection. You can happily claim that as a input tax credit. You can take this as ITC and use it for the payment of your output tax liabilities. That ITC will become available for you. Understood? So how many duties I have explained you till now? How many kinds of taxes I have explained you till now? Under imports, number one, you are required to pay basic customs duty. You are required to pay social welfare surcharge. Apart from that, the government can impose some additional surcharges and cesses also depending on the products you are importing. Then in addition to that, you are required to pay IGST. You are also required to pay GST compensation cess. Everybody comfortable till here? Now we will try to proceed further with understanding the remaining kinds of duties. We'll try to understand something called safeguard duty under section 8B of the Customs Tariff Act.
Sir, what is this safeguard duty? The name itself says, what do you mean by safeguard? Safeguard means protection. Safeguarding means what? Protecting. Now, sometimes what might happen is, in India, from some country, the goods or some category of goods might get imported in large quantities. Might get imported in large quantities. Beyond some limits, the goods are getting imported. Recently, what happened is, in the very recent times, what happened is, the steel products are getting available at a very cheaper prices in China, especially in China and Vietnam. There, the steel products are getting available or getting priced at very less. So when compared with Indian steel, in India, if you buy some steel products, they're costing somewhere around 1,000 rupees or something. But in China and Vietnam, the price is very lower, and also they are having multiple kinds of uses. So what Indian people have started doing is, for their manufacturing purposes, instead of preferring the steel products manufactured in India, they imported in very large quantities from China and Vietnam. So when these steel products from China and Vietnam are getting imported in very large quantities, local manufacturers have suffered a major problem. People have stopped, people have reduced the buying of the local steel manufactured products. Because of that, Indian steel manufacturers, Indian steel traders, they have faced a huge crisis. So now, like this, what will happen is, in some cases, some products, some kind of goods will get imported in very large quantities, which pose a danger or threat to the Indian products, Indian manufacturers. So now what the government will do is, the government has to take some action in order to control this, in order to prevent that risk, in order to prevent that danger. The government has to interfere and do something, no? So now what government will do is, when they find that some goods are getting imported in very large quantities, which are creating a danger or threat for the Indian products, now the government will implement some safeguard measures. What the government will do? The government will implement something called safeguard measures, some protective measures they will take. Sir, what kind of safeguard measures they will take? Broadly, two kinds of safeguard measures they will take. Number one, what the government will do is, government will impose something called a safeguard duty. What the government will do? The government will impose one more duty called safeguard duty, which means, anyhow, if you are importing the goods, you are required to pay basic customs duty. You are also required to pay social welfare surcharge. Now, what government will do is, in addition to the basic customs duty, in addition to the social welfare charges, the government will ask you to pay one more duty called safeguard duty. The government will ask you to pay one more duty called safeguard duty, which will be in addition to basic customs duty. They will be asking you to pay one more kind of duty called safeguard duty, so that it will increase the price of the imports, so that people will reduce importing that articles and they will start give preference to the locally manufactured products. So that is one safeguard measure, one which is by way of importing of safeguard duty. One more safeguard measure what the government can do is, the government can do something called tariff quota. The government will bring some safeguard measure in the name of something called tariff quota. Sir, what is this tariff quota? So they will determine, say for example, if the government determines that if up to 1 lakh tons, if the steel is getting imported, it is fine, no problem. If more than 1 lakh tons, if the steel is getting imported, then it will be a danger. Now, what the government will give what the government will put the condition is, if you are importing the quantity up to 1 lakh tons, if you are importing up to the quantity of 1 lakh tons, you will be required to pay basic customs duty at the rate of 10% only. In case if you are importing more than 1 lakh tons, then you will be required to pay 30% of the customs duty. So this kind of safeguard measure, we call them as tariff quota. So basically, when safeguard duties or tariff quotas will be implemented is, when certain product is getting imported in India in large quantities, which is causing a danger or damage to the local market, then the government will take safeguard measures. One safeguard measure is imposing of the safeguard duty, and another kind of safeguard measure is imposing something called tariff quota. So that is what explained in this section number 8B of the Customs Tariff Act. Let us try to understand what they are trying to say here. Safeguard measures can be imposed. Government can impose safeguard measures when an article is getting imported in India in increased quantities, in very large quantity a product is getting imported, and such imports threaten or cause serious injury to the domestic industry. Because of that importation of quantities in large number, it is creating a danger, or it is causing some serious injury to the domestic industry. Sir, what kind of safeguard measures? You are telling government will take safeguard measures, no? But what kind of safeguard measures? They will impose something called safeguard duty, or they can bring something called tariff rate quotas, or they can take any other measure in order to protect the domestic industry. Apart from this too, they can take any other measures also to protect the industry, but major two safeguard measures are imposing something called safeguard duty or imposing something called tariff rate quota. So safeguard duty, exemption from safeguard duty. But sometimes what the government will do is, government will give exemption.
In every time they will not impose safeguard duty. Sometimes when the goods are getting imported in large quantities also, still government will not impose safeguard duty. When, sir? Number one, the article originates from a developing country or countries. See, India itself is developing country, but we want to favor other developing countries also. Now, what government can say is, okay, if certain items are getting imported in large quantities, say for example steel only, if the steel is getting imported from large quantities, like from China also steel is getting imported, from US also steel is getting imported, from Vietnam also steel is getting imported. Now, what the government can do is they can start imposing safeguard duty only on China and US. Since Vietnam is a developing country, what the government can say is, if you are importing steel from Vietnam, then there is no safeguard duty. But if you are importing from China and US, there will be a safeguard duty. So like that, government can put some rules. So government can give relaxation from safeguard duty if the article is coming from a developing country or countries. But however, there should be some restriction. There should be some restriction. From Vietnam also, you can't continuously import large number of quantities. So what government will do is, government will put one limit. What the government will do, government will put some limit, how much limit they can put. So what they can do is, for one developing country, share of imports from that country must not exceed 3% of the total imports of that article into India. So government can say, if you are importing the steel from Vietnam, we will not impose you safeguard duty. Will not impose safeguard duty. But however, they will put one condition. What condition they will put, you know? Say for example, the steel is totally getting imported at some 10 lakh tons of steel is getting imported into India. Now, if you are importing up to 3% of that total imports is how much? 10 lakh quantity. In that 3%, if I calculate, it will come to 30,000 quantity. So if you are importing up to 30,000 quantity from Vietnam, which is a developing country, then we will not impose safeguard duty. Like that, they will put a limit. So what is the limit they will put? For one developing country, the imports, how much should be the imports? The share of imports from that country must not exceed 3% of the total imports of that article into India. Sir, like that, so many developing countries will be there. Say for example, we have some 20 developing countries. We have some 20 developing countries. From 20 developing countries, we are importing the steel. For every country, if we give 3% of limit, it will come to total 60% of the imports. Then purpose will not be served. Now what they will do is, they have put one more limit. For each developing country, they have put 3% limit, but one more condition also they have put. If you are importing from multiple developing countries, aggregate imports from all such countries must not exceed 9% of the total imports. So for each country 3%, but however, for all the countries put together, for all the developing countries put together, the total imports of that article should not exceed total 9%. Say for example, total 10 lakh quantity is getting imported. In that 9%, which will come to somewhere around 90,000 quantity, for all developing countries put together, only 90,000 tons of steel can be imported. And for each developing country, we will give only 3%. So they can share among themselves in whatever ratio they will share, that is up to them. But for all the countries put together, for all the developing countries put together, only 9%. And in that, each developing country can go up to a maximum of 3%. So like this, government can give relaxation. Okay. So what did I explain you till now? Regarding safeguard duty, whenever certain items are getting imported in large quantities which create a danger to the domestic industry, then the government will take safeguard measures. Two popular safeguard measures. Number one is safeguard duty. Number two is tariff rate quotas. What is safeguard duty? In addition to the basic customs duty, you are required to pay some extra duties also. But however, government can give relaxation. When government will give relaxation, if you are importing from another developing country, but there is also limit. From each developing country, the share of imports should not exceed 3% of the total imports of that article into India. If there are multiple developing countries from which you are importing, the aggregate of all the imports from all such developing countries should not exceed 9% of the total imports into India. And even exemption on quantity. In addition to that, central government also may exempt a certain quantity of the goods from safeguard duty if it is deemed appropriate. The government also can give relaxation on the basis of quantity. Up to 1 lakh quantity, no safeguard duty. So like that, they can give quantity based relaxations also. Then coming to tariff rate quota. So what is tariff rate quota? If tariff rate quotas are used as a safeguard measure, quota should not be lower than average imports of last 3 representative years unless a different level is deemed necessary to prevent or remedy serious injury. So in case of tariff rate quota, what they will do is, they will determine the last 3 years. They will determine for the last 3 years what is the average quantity of imports. So they will say up to that limit only. Say for example, in the last 3 years, average imports of the steel articles are 10 lakh quantities. Now they will say in the current year also, up to 10 lakh quantity, we will be imposing only normal customs duty. If you are importing more than that, you are required to pay extra customs duty. Like that, they will put a limit. That is what we call it as tariff rate quota. quota may be allocated to countries with a substantial interest in supplying the goods. That total quota, for example, if the government has put the tariff rate quota as a 10 lakh tons, now this 10 lakh tons will be divided among different countries. Because we get imports from multiple countries, no, now it will be divided among multiple countries according to the government's decision. So that is what regarding tariff rate quota. Now, provisional safeguard duty. Sir, what is this provisional safeguard duty? So what is this provisional safeguard duty is, say for example, central government is there. Some product is getting imported. Say for example, some metal, iron is getting imported. Now, this iron is getting imported in large quantities. Now, local iron manufacturers, they went to the central government and told, sir, iron is getting imported in very large quantities, because of which our industry is getting damaged. Now, central government will need some time to do this inquiry. Government will do inquiry. The government will have to study the market, whether really iron is getting imported in such large quantities so that industry is getting damaged. Government has to do their own analysis. No, it will take some time. During that time, so if the government is doing inquiry and all, during that time, what the government will do is, till that analysis, till they do the inquiry and come to a conclusion, during that point of time, they will impose something called provisional safeguard duty. Because government can't say, okay, we will take some 3 months to analyze, then we will decide. By that time, whatever damage has to happen, that would have happened. So government can't differ. So what they will do, but it will take some time to determine whether it is really causing a damage. If yes, how much rate of safeguard duty will be implemented, determination will take some time. But during that time span, when that has to be determined, what the government can do is they will impose something called provisional safeguard duty. On a provisional basis, they will impose some safeguard duty. So that's what they try to say here. It can be applied temporarily up to 200 days. So if the government takes some time, during the process of that inquiry and determination, up to 200 days of time, they can impose safeguard duty on a provisional basis pending the final determination. If the final determination indicates no injury, then the provisional duty will be refunded. Say for example, these iron people have went to the government and told, sir, because of imports of iron and all, it is causing a serious damage. Now the government has to determine. So what they have done is, pending the determination, they have to locate on this product 20% of safeguard duty will be imposed. But when the government has done and did the analysis and all, actually government found out that because of that iron imports and all, there is actually no damage to the local manufacturers. Just these people are frightened. Just these people are they want to discourage the imports and all. So that's why they have made wrong complaints to the central government. So when this determination is pending, the government has collected provisional safeguard duty at the rate of 20%. No, but later, after doing all the analysis, government decided that because of this imports, there is no injury only, there is no damage for the local market. Now what the government will do, during that time where provisional safeguard duty has been collected, all that amount will be refunded to the importers. Understood? Or on the final determination, if the government has determined, yes, really there is an injury, then there is no refund. But on final determination, if it was come to a conclusion that there is no damage to the industry, there is no injury to the industry, then whatever provisional safeguard duty they have collected, that will be refunded back. Next, duration of imposition. Sir, how long safeguard duty can be imposed? Forever it can be imposed? No. Safeguard duty expires after 4 years unless revoked earlier. It can be extended up to 10 years. From the date of imposition of safeguard duty, it can remain in force up to 4 years. After 4 years, it will expire. That means the year of imposition, and after 4 years, it will expire. However, it can be extended for 10 more years. It can be extended up to 10 more years. Next, exemption from export-oriented units. Exemption from export-oriented units. Basically, export-oriented units like SEZ and all. SEZs and export-oriented units will be there. See, why the government will give recognition of SEZ or EOU? Because these are the entities, they will be engaged in doing only export business. So that's why government will give relaxation. So now what they have told is, say for example, there is an SEZ unit, there is one EOU, export oriented unit is there. So one ex-limited company is there, which is located in SEZ or EOU. Now what this company is doing is, this company is manufacturing products. This company is manufacturing the products, and whatever products they are manufacturing, they're completely exporting it. That is what the objective of SEZ and export oriented unit, no? So there is one company X Limited which is located in either SEZ or EOU. Now what they're doing is, they are doing manufacturing activity and completely they are exporting the products. See, when this company is making the exports to the other countries, actually they are doing a benefit for the country, no? They are increasing the foreign exchange reserves of the country. So that's why what the government has given the relaxation is, say for example, this company X Limited has imported some steel. This company X Limited has imported some steel. Generally, on steel, if someone is importing, they are required to pay something called safeguard duty. On steel, there is currently safeguard duty applicable. But what the government has told is, if X Limited is importing that steel, which is either located in SEZ or which is a 100% export oriented unit, what they will do, they will import that steel, they will use that steel for manufacturing, and once again that product they will finally export. So that's why what the government has told is, if a unit located in SEZ or if a 100% export oriented unit, if they are importing that steel, even though safeguard duty is applicable, but these units are not required to pay that safeguard duty. They are exempted from the safeguard duty. But however, sometimes what will happen is this X Limited, even though it is located in SEZ or even though it is a 100% export oriented unit, they have imported some steel. And instead of using that for manufacturing and exporting, what they have done is they have started providing it in the domestic area only. That means this X Limited unit, they imported steel, used it that for manufacturing purposes, but instead of exporting it, they have started selling that products in India only. Then what the government will do, then the government will say, you are no longer exempted from safeguard duty, you will be required to pay safeguard duty on that portion, whatever you have cleared into India. If you are importing and using it for the purpose of export completely, no need to pay safeguard duty. But if you have imported some goods, either you are clearing for home consumption, either as a product as it is, or using that product you are manufacturing something, and that manufactured product if you are selling in India, then you will no longer be exempted from safeguard duty, you will be required to pay the safeguard duty. So that's what they try to say here. Safeguard duty does not apply to imports by 100% export oriented units or units in special economic zones. Generally, they are not required to pay safeguard duty unless, but in some cases you are required to pay when, if it is specifically made applicable. Sometimes what the government will say is, they will specifically say, even though you are a 100% export oriented unit, even though you are a SUZ, you are still required to pay safeguard duty. If the government specifically makes it applicable, then they are required to pay. Or the article is cleared into domestic tariff area or used in manufacturing goods which are cleared into domestic tariff area, in which case safeguard measures will apply to the portion of article used or cleared. What do you mean by that? Say for example, once again I will use the same example. There is a company X Limited, which is a SEZ or which is a 100% export oriented unit. Now what they have done is, they have imported 1 lakh kgs of steel. Now out of this 1 lakh kgs of steel, what they have done is 60,000 kgs of steel they have used for the purpose of manufacturing, and those goods are all exported outside of India. But remaining 40,000 quantity, what they have done is, either that 40,000 quantity has been cleared, that steel has been cleared as it is into domestic tariff area, or using that 40,000 quantity, they did some manufacturing and that manufacturing article was cleared into a domestic tariff area. Instead of exporting, they have once again started selling that in India. Now what the government will say, no, on that 40,000 quantity, you will be required to pay the safeguard duty. Whatever 60,000 quantity that you have used for the purpose of manufacturing or clearing for exports, on that safeguard duty is not required to be paid. But if you are clearing the article as it is into domestic tariff area, or using that article you are manufacturing and that manufactured goods you are clearing into domestic tariff area, then safeguard duty will not be exempted on that. That safeguard duty you will be required to pay. Understood? So this is what exemption for export oriented units. Then product specific duty. Safeguard duty is product specific and it should be in addition to any other duties defined under this act or other laws. It is not a replacement of basic customs duty. It will be in addition to other duties. Now they have given some definitions. What is the definition of developing country? A country notified by the central government. What is domestic industry? The producers in India or like or directly competitive articles. What do you mean by serious damage? What do you mean by serious injury? Causing a significant harm to the domestic industry. What is the meaning of threat of serious injury? An imminent danger of significant harm. So these are all definitions not important from the examination perspective. And applicable laws, Customs Act 1962 and its rules and regulations apply everything to the safeguard duty. Like whatever rules and regulations which are applicable for Customs Act, all that rules and regulations will be applicable for safeguard duty also. Like for example, if someone is saying, if you don't pay basic customs duty, the goods will not be cleared for home consumption. The same rule will be applicable even for safeguard duty also. If you don't pay the safeguard duty, then also goods will not be cleared for home consumption. Understood? Clear and comfortable, everyone? So this is what regarding the safeguard duty. Everybody comfortable? So what and all we have seen till now? We have seen till now basic customs duty. Then we have seen something called social welfare surcharge. Then we have seen IGST. Then we have seen GST compensation cess. And I have also explained something called a safeguard duty. Okay. So now we will try to understand the next kind of duty, which is countervailing duty on subsidized articles. So we'll try to understand the concept first. Very, very easy to understand. So the name itself says countervailing duty. The government can impose in the name of something called countervailing duty, CVD also we can call it, on subsidized articles. Sir, what do you mean by this? When this duty will come into picture? Say for example, a person is in India. So we are here in India. So take some country. Which country we will take? Say for example, give me some name of the country. Okay, so let us take US only, United States of America. So now say for example, in the United States of America, this mobile phones, say for example, this mobile phone. So this mobile phone, say for example, it will cost somewhere around 500 rupees. I'm just giving one normal example. Some 500 rupees is in USA, the phone. If you buy that phone in US, it will cost some 50,000. Say for example, it will cost some 50,000. But what the US government has done is, in order to encourage exports, if this mobile phone is manufactured in US and sold in US, they will be able to sell it at 50,000 rupees. But what US government has done is, in order to encourage the exports and all, what government told is, okay, there is one manufacturer in US who is manufacturing these mobile phones. They told, if you sell the product in US, you can sell it for 50,000. But if you export this product from US, if you are exporting this to India, what we will do is, we will give you subsidy. That means you can sell it at 50,000 rupees. But what US government told to this manufacturer is, if you export, we will give you 10,000 rupees of subsidy. That means this manufacturer, if he could export this to India, if he could export that to India, he could sell it at 40,000 rupees only. He could sell to India at 40,000 rupees only. Why? Because 50,000 he will get anyhow. 10,000 he will get it from the subsidy. 40,000 he will get it from the customer in India, and 10,000 government will give to that manufacturer in the form of subsidy. Net, how much manufacturer is getting? 40,000 he is getting from that person, whoever is importing in India. 10,000 rupees anyhow US government will give him. He is getting as 50,000 rupees. So how the government is, what this US government is doing, in order to encourage the exports of this country, it is giving a subsidy. It is compensating that exporter. So now what will happen? Because of this subsidy, this manufacturer will start sending the goods, will start selling the goods to the India at 40,000 rupees only. Now once again, what will happen because of this? Because of this, Indian people will start giving more preference to that imports. And once again, it will cause a damage to the local manufacturers. Now what government can do is, in order to tackle this situation, so what they can do is, in addition to basic customs duty, in addition to social welfare surcharge and all, government can say, we will impose something called countervailing duty. We will impose something called countervailing duty. Countervailing means what? You are giving a counter. So this US government, in order to improve their exports, they are giving a subsidy. Now the Indian government want to counter that. How they can counter that? By imposing something called countervailing duty. Now what the government will do is, what the Indian government will do is, we will impose a countervailing duty at the rate of 10,000 rupees. Now what will happen? This will nullify. This will once again make the Indian products competitive. Able to understand? So that kind of duty, we call it as countervailing duty. Clear? That's it. This is what the simple logic, nothing here to make the things complicated. So we have to understand some rules and regulations regarding it. Let us try to have a look at it. Countervailing duty may be imposed. So when countervailing duty will be imposed, they are trying to say here, countervailing duty may be imposed if a country or territory subsidizes, gives a subsidy to the manufacturer production or exportation of an article, including the transportation subsidy. The government can give subsidy in any form. Either they can give subsidy for manufacturing, for the production, or for transportation cost. In the transportation cost, they are giving subsidy, whatever it is. So countervailing duty will be imposed if a country or territory subsidizes manufacture, production, exportation of an article, including transportation subsidies, and that article is imported into India. So that local government is giving subsidy, and that article is getting imported into India, and the article is imported from the country of manufacture or production, either directly or indirectly. I just want you to add one more line here, directly or indirectly. So there is one thing missing here. That article is getting imported from the country of manufacture or production, either directly or indirectly. Sir, what do you mean by this? Say for example, some importers are very smart. What they will do, if you are directly importing from USA, the government will come and impose something called countervailing duty. Now what one importer has done is, he's having good connections in other countries also. Now what he has done is, this person, he wants to buy that goods from US. But if the goods are directly coming from US, government will impose something called countervailing duty. Now what he has done is, he has some known person, or he's having some sister concern in China. So what he is doing is, first he is bringing the goods from US to China, and from China he is importing that mobile phones. So now this person is importing the goods indirectly from the country of manufacture or production, because he found a situation here. If you are directly importing from US, government will impose something called countervailing duty. US government is giving subsidy for the purpose of export. But if this person brings the goods directly from US, the government will impose countervailing duty. So what he has done, he has brought the goods to China. From China he is importing once again. Now it is a kind of overriding the provision or not? So now what the government has told you, no, if you are importing directly or indirectly, then also will impose customs duty. So here you are importing from US, but not directly you are doing it, indirectly you are doing it. Here also the government will come and impose countervailing duty. Understood? So this is one thing. This is what the significance of the term directly or indirectly. And the article is imported either in the same condition as when exported or after being changed. Now even what some people will try to do, if you are importing mobile phone, if you are importing a mobile phone, US is giving subsidy on mobile phone. So if you are importing a mobile phone into India, the Indian government will impose something called countervailing duty. Now, what one importer has thought is, he has thought some innovatively. Instead of bringing the mobile phones as it is, he is getting them in a disassembled situation. So what do you mean by disassembled situation? In one consignment, he is getting screens. Only mobile screen he is getting. In one consignment, he is getting a case. In one consignment, he is getting a battery. Now, what he will do is, once he brings all the goods into India, then he will assemble. And he will make it into a mobile phone. So now also this person is trying to be over smart and he is trying to overcome this countervailing duty or not. Now also government says, so that is why this point has been put. The article is imported either in the same condition as when exported or after being changed. Instead of getting the mobile phone directly, you are changing that condition and you are importing. Then also countervailing duty will become applicable. Able to understand? So when countervailing duty will become applicable? When a country or territory subsidizes manufacture, production or exportation of an article, including transportation subsidies. And that article is getting imported into India. Either you are importing that article directly from the country of manufacture or indirectly. Or you are importing the goods in the same condition or after changing you are importing. In all the cases, countervailing duty will become applicable. Sir, how much amount of countervailing duty the government can impose? Central government can impose a countervailing duty not exceeding the amount of subsidy granted on the article. So here, if the government wants to impose countervailing duty, how much countervailing duty they can impose? Only up to the amount of subsidy. US government is giving subsidy of 10,000 rupees, no? Even countervailing duty also cannot go beyond 10,000. It should be up to 10,000 rupees only. Next, duration. Sir, how long government can impose this countervailing duty? Can they impose it forever? No, they can impose it only for a duration of 5 years, unless revoked earlier. And it can be extended for a further duration of another 5 years. If a review is initiated before the 5-year period ends, but it is not concluded, the duty may continue for up to 1 more year. If temporarily revoked, the revocation period cannot exceed for 1 year. So what is that is? Let me try to explain it. Say for example, the government has imposed countervailing duty for 5 years. The government has imposed countervailing duty for 5 years. So they can extend for 5 more years, no? If that government is still giving subsidy, they have a power to extend for 5 more years. But they have to review. Initially, they have imposed countervailing duty for 5 years. Now they have to review whether it has to be extended for 5 more years or not. They have to review. Now what they will do is, when the review is going on, they can extend it by 1 more year. Now within this 1 year of time, they will do review. 5 years are over. So now they will undertake review. If that review is undergoing, for 1 more year, they can extend it till the time of review. When the review is undergoing, if the review is still pending, they can extend it up to 1 year. So after review has completed, if they felt that yes, 5 more years is still necessary, what they can do is they can extend by 4 more years, 1 year under review and 4 years further, 5 more years they can extend. Or if they felt it no longer necessary, what they can do is up to 1 year till the time of review, they can keep it up to 1 year. If after review, if they found that it is not necessary, what they can do is they can cancel it. What they can do, they can cancel it. Guys, able to understand? So initially the government can impose for 5 years. If they want, they can extend for 5 more years. So now government has to do the review, whether for 5 more years it is required or not. They have to do review. For that review, it will take some time. No, they can't say, okay, we will stop now, we will do the review, then after we will impose it. No. So what they can do, if the review is undergoing, it will remain extended for 1 year. Now within that review, they will decide whether it needs to be extended or it needs to be cancelled. If after review, they have decided that it needs to be extended, they can extend up to beyond 5 years. If they don't think it is necessary, once review is completed and they have determined that extension of 5 more years is not required, then they will drop it. Understood? So that is what the meaning here. Next, additional duty. Countervailing duty is in addition to any other duty. It is not a substitute for basic customs duty and all. It is an additional duty. Now they have defined, sir, you are telling if the government gives a subsidy, then this countervailing duty will become applicable. No. What is the meaning of giving subsidy? A subsidy is existing if there is a financial contribution from a government or a public body, either in the form of direct transfer of funds, or it could be in the form of incentives, or by way of providing goods or services. Subsidy can be in any form. That respective government can directly give the funds, or they can give incentives, or they will give the goods for manufacturing that goods free of cost. or it could be even income or price support that increases exports or reduces the imports. So whatever it is, that subsidy can come in the form of price support or income support also. Next, circumvention of duty. Sir, what do you mean by circumvention of duty? One example I have already given you. If you are bringing mobile phones, but if you are bringing mobile phones, the government will impose countervailing duty. What you are doing is you are getting them in the disassembled condition. You are getting them in disassembled condition. So why you are getting it in the disassembled condition? In order to overcome it, in order to circumvent. Circumvent means what? Overriding, or if you want to overcome that. So that's why what you are doing is, instead of importing the mobile phones as it is, you are getting it in a disassembled condition. That means you are trying to circumvent the provisions of countervailing duty. Then also government will impose countervailing duty. Still, if you are importing in disassembled condition, then also the government will impose. Or one more example will be, if you are directly importing from USA, you will be required to pay countervailing duty. But instead of importing directly from USA, first you are bringing it to China. From China, you are bringing it to India. Here also you are trying to circumvent that countervailing duty. If the government finds it out, even if you are importing from China, then also the government will come and impose countervailing duty. Understood? So that is what the meaning of this paragraph. If the goods are modified, if you are changing the goods to circumvent the duty, to override the duty, either by changing the description or composition, or bringing them in assembled or disassembled form of origin, or then also the countervailing duty may be extended to the modified goods also. Clear? Next, absorption of countervailing duty. Sir, what do you mean by absorption? Absorption means nullifying. Sir, what do you mean by nullifying? Say for example, government is giving subsidy. That foreign government, if you are bringing the goods at the importer, actually the goods will get, the exporter will, goods will, he can sell at 40,000 rupees, 50,000. But government is giving subsidy. So government is giving him 10,000 rupees of subsidy. So what he is doing, he is bringing that goods into India for 40,000 rupees only. Now what the government has told, okay, you are bringing the goods at 40,000 rupees only, no? We will impose something called countervailing duty. 10,000 rupees we will impose. So now the cost will, for the importer, the cost will become 50,000 rupees. But what this importer has started doing is, he has increased the selling price. Previously, if there is no countervailing duty, what he used to do is, he used to get that article at 40,000 and sell it at 50,000. Now what this importer is doing is, when the government started imposing the countervailing duty, so now his cost has become 50,000. Now what he is doing is, now he has increased his selling price. He has increased his 60,000. He is selling the mobile phone at 60,000 now. That means even though the government has imported the countervailing duty, but it has been nullified. Even though the government has increased the import cost, but the resale price has not come down. Even the resale price has also gone up. That means it is not affecting the importer only. Even though government has included, even though government has imposed countervailing duty, but still it is not having the pinch on the importer. Why? Because he's not reducing his selling price, he's increasing his selling price and still making the same margin. So now what the government will do, government will increase the countervailing duty. So if the government felt that the goods are getting absorbed, the countervailing duty is getting absorbed. Absorbed means what? It is getting nullified. It is not having any impact on the importer. Then what the government will do? The government can take actions like increasing the countervailing duty. The government can say, now instead of 10,000, you will be required to pay 20,000 rupees of countervailing duty. Now the importer might be stuck here, because if he increases the price further, he will not be able to sell it. He will not be able to sell it. So in order to counter that absorption, the government can even make changes to that countervailing duty also. So that is what this point says. The countervailing duty the central government may modify countervailing duty if it finds that the duty has been absorbed, making it ineffective. This modification will be effective from the date of inquiry initiation. Sir, what do you mean by absorption? There is a decrease in the export price without corresponding decrease in the selling price, or under any other condition as prescribed by the law. No need to remember the definition and all. I hope you understood the concept behind it. Provisional countervailing duty, same like safeguard duty only. If the government is yet to decide whether really countervailing duty should be imposed or not imposed, pending that determination, they can do the provisional countervailing duty. If after that investigation and all, if they felt that there is no injury and all, that duty will be refunded. Next, same rule, whatever rule we have read for 100% export oriented unit, same rule will become applicable even for countervailing duty also. For safeguard duty, we have seen, no, if 100% export oriented unit or SEZ, if they are importing the goods which are subject to safeguard duty, they are not required to pay safeguard duty unless you are clearing it for home consumption. Unless you are clearing it in the domestic tariff area, same rule will become applicable even for countervailing duty also. So if you are imposing some subsidized article, if you are a unit located in SEZ or 100% EOU, and if you are importing some article which is subsidized, but using that article, you are either doing export or you are using it for manufacturing and then exporting, then there is no requirement to pay countervailing duty. However, if some portion, if you are bringing into domestic tariff area, on that portion you will be required to pay countervailing duty. Next, countervailing duty will not be imposed unless, that means countervailing duty will be imposed only if the following conditions are satisfied. If the subsidy relates to export performance, that foreign government, in our example USA is giving subsidy only for exports, then only we will impose a countervailing duty. If the USA government is giving subsidy even for the local consumption also, then there is no purpose of importing countervailing duty. If the USA government is giving subsidy to their manufacturers only for the purpose of export, then only there is a need for countervailing duty. If the US government is giving subsidy even for domestic consumption also, then they are not specifically targeting exports, then there is no purpose of imposing countervailing duty. So subsidy relates to export performance, subsidy relates to domestic goods over imported goods in export articles, or which this point, what do they mean by this is, US government is giving subsidy for local manufacturers for using local goods instead of using imports. US government is giving subsidy. So what they try to say here is, the government can impose countervailing duty only when that export country, in our example USA, is giving subsidy for only exports, or what US government is doing is they are giving subsidy to their local manufacturers to encourage domestic usage instead of imports. Then also government can step in and impose the countervailing duty. So what do you mean by this is, say for example, in India, we have some imports in US. We can send some goods to US. You are selling some goods to the US. But what the US government has started doing is, they have started giving incentive to their local manufacturers. Don't use imports. You use local manufacturing only. Then we will give you some subsidy. So like that, if you came to know, then also government can say, okay, you are giving subsidy for our imports now. When you want to export to our country, we will impose you countervailing duty. Then also you can impose countervailing duty. Or subsidy benefits a limited group except for specific exemptions like research, disadvantaged regions, and environmental adoption. Guys, I don't want you to undergo into deep logics. Why? Because this much is not important for your examination. Just you have to mug up this. So when countervailing duty will be imposed? So countervailing duty will not be imposed unless, that means if countervailing duty has to be imposed, it will be imposed only when these three conditions are satisfied. What are they? Either that subsidy should be relating to export performance, that subsidy relates to domestic goods over imported goods in export articles, subsidy benefits a limited group except for specific exemptions. So I don't want to go into the details. Even if I go into the details, also not that important from the examination perspective. Next, retrospective levy. Countervailing duty can be levied retrospectively also if injury to the domestic industry is caused by massive imports or subsidized goods. The duty can be applied up to 90 days before the notification date. So what the government can say is, today they will release a notification, but even they can say whatever goods which are imported in the previous 90 days, on that also we will impose a countervailing duty. That also government can say. Retrospective levy also they can do. And central government may make rules for identifying subsidized articles, assessing and collecting countervailing duty. So how to identify the subsidized articles, how to calculate the amount of that CVD, all that government can make rules. And whatever laws that are applicable for basic customs duty, all that rules and regulations will become applicable even for countervailing duties also. Clear? Able to understand everybody? Right. So now next thing we'll try to understand anti-dumping duty. Once again, very easy to understand. This also I will tell you background logic. Everything will remain same like countervailing duty and safeguard duty only. So I will tell you when this thing anti-dumping duty will come into picture. Say for example, China is there. China has manufactured mobiles in very large quantities. China has manufactured mobile. Actually, they used to do very large scale manufacturing of the mobile phones, and they used to consume it in the local market also. But recently what happened is, in China there is some recession. Just example say guys, in China there is some recession. Because of that, they are not able to sell the mobile phones in their local market. In China, they are not able to sell it. Or some calamity has taken place, some natural disaster has taken place, whatever it is. Because of this reason, they have a huge quantity of manufacturing. They have a huge amount of supply. But they are not able to sell them in their local market due to various reasons. Like as I've told, it could be recession, it could be natural calamity, it could be war, whatever it is. They are not able to sell that huge quantity. So if they are unable to clear that stock, they are going to face a huge loss. It is going to add up even to the bad consequences on the economy. So somehow they want to clear that supply. Whatever that huge quantity of supply of mobile phones they are having, they want to clear it. So now what they have started doing, they have started dumping it into India. So they have started giving huge discounts because they have to clear the supply. No. So they are not worried about the losses. So they have reduced the price. They have cut down the price. Say for example, this product can be sold at 20,000 rupees. But since the supply is very much higher, they have to clear this stock at any cost. So what these Chinese manufacturers have started doing is they want to dump all the stock into India. So they have reduced the price very much, 10,000 rupees. Whatever used to cost 20,000 rupees, they have reduced their export prices. Now by cutting the prices to half, they are dumping these mobile phones in huge quantities into India. They're dumping these huge quantities into India. So because of that, local mobile manufacturers might face huge damage, huge loss, and they might face huge consequences. Now also government has to take some action. No? So how the government will take action is, government will impose on this something called anti-dumping duty. They will impose something called what? Anti-dumping duty they will impose. Sir, how much amount of anti-dumping duty they can impose? They will calculate something called dumping margin, or margin of dumping also you can say. They will calculate something called dumping margin. Sir, what is this dumping margin? They say dumping margin is normal price minus export price. Normal price minus export price. Sir, what is normal price? So if normally that product has to be sold, that could be sold at 20,000 rupees. But in order to do the dumping, they are exporting it at 10,000 rupees only. So here this 10,000 rupees is the dumping margin. Now what Indian government will do is, on that imports, they will levy something called anti-dumping duty at the rate of 10,000 rupees in order to tackle this bad trade practices. Understood? This is what the entire concept of anti-dumping duty, and all other rules and regulations will remain same, like whatever we have read for safeguard duty and all, everything will remain the same. Only here and there a few points will get added. I think with this background understanding, we can read that anti-dumping duty as well. Okay, shall we do it, everyone? So let us do it. So if we start reading it, anti-dumping duty, section 9A. Dumping occurs when goods are exported at a price very much lower than their normal value, which distorts trade, which damages the trade. Anti-dumping duty is imposed to counter this unfair trade practice and ensure fair competition. So when this will be imposed, when anti-dumping duty will be imposed, so what are the conditions? An article is exported at a lower price than its very normal value, and this article is getting imported into India. Sir, how much amount of countervailing, how much amount of anti-dumping duty can be imposed? Central government can impose a duty up to margin of dumping. Sir, how to calculate that dumping margin or margin of dumping? Difference between normal value and export value. Sir, what is normal value? So if that product is getting normally imported, in normal conditions, if the product is getting imported at 20,000 rupees, so normal price will be 20,000. Say for example, till now from China, we did not import only. Till now from China we did not import only. That means the same article is not getting imported into India. Then how to calculate the normal value? Some comparable article compared to that thing. If any other comparable article, if any identical article is getting imported, that its value we can use. So that's what they say. Normal value, the comparable price for the same article in the exporting country. In case if you are already importing from China, in previously also we used to import, that we can take it as normal price. But say for example, if we never imported mobile phone from China, then what you can do is other same article we can use it. If instead of mobile phone, if there is some other similar article, what is that similar article? It depends on facts and circumstances. If you are importing some other similar article, that price you can take it. If that is also unavailable, sir, even if the same article is also not available, sir, we are not importing any kind of product from China, then what you could do? Then you have to determine it on the basis of cost of production in the country of origin. So basically in China, you need to determine what will be the cost of production of that mobile phone. On that, you will add normal margin percentages and all, and then you will calculate the normal price. If same article is getting imported, we will use the same price. If same article is not getting imported, we will use a comparable article. If that is not at all available, then what we do? Then using the cost of production and normal profit margins of that in the foreign country of that exporter, we will somehow arrive at the normal price. Next. So margin of dumping, they are telling it is normal price minus export price. So normal price we have calculated. So then what is export price? How to calculate the export price? Comparable price of the like article in the exporting country for domestic consumption determined as per 9A subrule 6. So according to at what price that foreign country is importing into India. So that export price will calculate. If no such a sale exists or not comparable due to market conditions, normal value can be the price of the like article exported to an appropriate third country, or the cost of production in the country of origin plus reasonable addition for administrative, selling and profit cost. So once again, if you are unable to determine that, you can use comparable article. If comparable article is not available, you can go for cost of production, and to that you can add reasonable level of selling and profit cost. So this point you ignore it. In case of transshipment or when article is not produced in country, normal value is determined on the basis of country in origin. So all these points you ignore it. I don't want to unnecessarily complicate the things. Just you remember normal price minus export price. They will give it in the question itself. In the question itself, they will say if at all they want to ask a question regarding the anti-dumping duty. In the question itself, they will say what is the normal price, what is the export price. In the question itself, they will try to tell you. You can easily calculate it. Okay, next. Duration of imposition, same like countervailing duty. So like it can be initially imposed for 5 years, but can be extended by 5 more years. If review has to take place, it can remain valid for 1 year pending a review. Circumvention and absorption. If you are trying to circumvent, how you can circumvent? By doing the disassembled or assembled condition, by involving some other country. I told you in the previous example, right? So if you are trying to circumvent it, or if it is getting absorbed, the government can modify that anti-dumping duty. Provisional duty, if final determination is pending, the government can impose provisional anti-dumping duty also. Same exemption will become applicable for 100% export-oriented units or SEZ units, whatever we have read in the previous two things. Retrospective levy, like countervailing duty, even anti-dumping duty also can be levied retrospectively, same 90 days. So if there is a history of dumping causing injury, the injury is caused by massive dumping over a short period, the duty can be levied up to 90 days before the notification date, and whatever rules and regulations that are applicable for normal basic customs duty, all that rules and regulations will become applicable for anti-dumping duty also. Clear? Next. So we have one more rule, refund of anti-dumping duty in certain cases. Say for example, you are an importer, you are required to pay anti-dumping duty. So government has calculated, government told that a normal price is 40,000 rupees, but the export price is 30,000 rupees only. You are required to pay 10,000 rupees of anti-dumping duty. You paid it. You want to clear the goods for home consumption. So you paid that anti-dumping duty of 10,000 rupees and clear the goods for home consumption. But you know that, but you have a strong belief that government has calculated the dumping margin wrongly. Government has made some mistake in calculation. But you are in urgency. You have to clear that goods for home consumption. So you paid anti-dumping duty and cleared the goods. But you strongly object to this calculation. According to you, the normal price is 40,000, whereas the export price is 35,000. You are liable for only 5,000 rupees of anti-dumping duty, but the government collected from you 10,000 rupees of anti-dumping duty. So now what you can do is you can go and request to the proper officer, submit the proofs, submit the evidences, and if the government is satisfied, they can give a refund of that excess anti-dumping duty which they have collected from you. So that's what they say. If an importer pays anti-dumping duty in excess of the actual margin of dumping, they can request a refund for the excess amount. Conditions for refund, when the government will give you refund. The importer must prove to the central government that they paid excess anti-dumping duty, and excess duty must be more than actual dumping margin. And refund is not applicable for amounts already refunded under 9A sub rule 2. You can ignore this. If the amount is already refunded, you can't make a double claim and all. Government's role, the central government will reduce excess duty as soon as it determines the actual margin of dumping, and it will authorize an officer to dispose of the application and determine the excess duty. The moment they receive the application, they will take all the measures. They will appoint one officer to calculate the amount of margin correctly, and if they found it excess, they will give you refund. Refund process, after determining excess duty, the Deputy Commissioner of Customs or Assistant Commissioner of Customs will refund the excess duty amount to the importer. Important for MCQs and all. Who will give refund? Deputy Commissioner or Assistant Commissioner. So what are the rules and regulations? Central government may create rules to determine the manner and time for the importer to apply for the refund, within what time you have to make a claim, in what manner, which form you have to submit. All that government will make rules, and it will also authorize the officer to handle the applications and determine the customs duty. Next, in some cases, there will be no levy under 9 or 9A. Sir, what is this 9 or 9A? So 9A is talking about this anti-dumping duty. 9 will be talking about the countervailing duty. So sometimes what the government will do is, government will neither impose countervailing duty, neither they will impose anti-dumping duty. When, sir? Very simple. If you have a favoring nation, if you have a friendly nation. So if there is a dumping happening, but that dumping is happening from a friendly nation. Or if that, see, we all have World Trade Organization, no, even India is also a member. So like that, other countries also are there who are there with World Trade Organization. So if there is another country which is there with World Trade Organization, you are also a part of World Trade Organization. Or if there is some friendly nation from that country, dumping or subsidizing is happening, then the government can say, okay, it is our friendly nation only, no? In our difficult times, they have helped us. Let us help them in their difficult times. Let us not impose a countervailing duty. Let us not impose the anti-dumping duty. Government can take decision, but subject to some conditions. subject to some conditions. See, government will give relaxation. Government will try to do the favor to the other country if we are not in the deep grave. If our industry, the government can't go to such an extreme to damage our entire domestic market and do a favor for the foreign country. Government can't go to some that extreme. It is okay till the stage our industry is not getting affected, they can do the favors for our friendly nations. But even with the friendly nations also, if they are doing such a favor where our domestic industry itself is crashing altogether, such a favors government should not do. So that's what they even say. In case of friendly nations, in case of World Trade Organization members, the government can take a decision of not imposing countervailing duty or anti-dumping duty, but so long as the domestic industry is not in complete danger. So that's what they even say. Number one, first thing, no double levy. The government cannot impose both countervailing duty and anti-dumping duty simultaneously. They can't impose both. Either countervailing duty or anti-dumping duty. Any one only they can impose. Both simultaneously they can't impose. So that's what they say. Articles cannot be subjected to both countervailing duty and anti-dumping duty for same situation of dumping or export subsidization. Any one, either countervailing duty or anti-dumping duty. Exemptions. No duties will be levied if the article is exempt from duties or taxes in the country of origin, or if there is a refund of such duties or taxes. What does that mean is, say for example, this example I have already told, US is giving subsidy. For example, in US, huge stock of mobile phones is there. Sorry, China we have used, no? Say for example, China is there. In China, there is a huge pile up of stock of mobile phones manufactured. Now the Chinese government somehow wants to clear that stock of that mobile phones. So what they are doing is they are giving subsidy. They are giving subsidy in the domestic market also. If the manufacturer is selling that goods in China, then also they are giving a discount. And if the manufacturer is giving export, then also they are giving a subsidy. So that means China is not having any intention of dumping all their stock in our country only. So if there is such a situation where only exports are not getting favored, same benefits are given for even local manufactured products also, on local consumption also, then the government will not take an extreme decision of countervailing duties or anti-dumping duties. However, if the government comes to know the other country's intention is purely to dump all their stock, purely to encourage only exports of that respective country, then the government will take extreme action of countervailing duty or anti-dumping duty. So that's what they say. If the article is exempt from duties or taxes even in the country of origin, not for export, even in the country of origin also, same exemptions are there, same refunds are there. Or if you are importing from WTO member, World Trade Organization member countries, or countries with the most favored nation agreement with India, unless it is determined that import causes or threatens material injury to the India's industry. So we can do favors to other countries so long as our industry is not in complete danger. And also on imports from specified countries, unless there are preliminary findings of subsidy or dumping and a determination that a duty is necessary to prevent injury from during the investigation, blah, blah, blah. So once again, you can even import, the government will even take a decision if you are importing from specified countries, but so long as it does not cause damage to our local industry. However, subsection 2 and 3 do not apply if a countervailing duty or anti-dumping duty has already been imposed to prevent injury to a third country's domestic industry exporting similar goods to India. So that means if the countervailing duties are already imposed to prevent injury to a third country's domestic industry exporting similar goods to India. So that means, say for example, if you have already imposed on that article, say for example, on Vietnam, you have already imposed countervailing duty or anti-dumping duty is already imposed on Vietnam because they are dumping these mobile phones in large quantities. If you have already done to a third party, if you are already done to a third country's domestic industry, so you have to do it even for China also. Okay, so once again, not that important from the examination perspective. So simply they say subclauses 2 and 3 do not apply if a countervailing duty or anti-dumping duty has already been imposed to prevent injury to a third country's domestic industry exporting similar goods to India. Next, the central government may not levy countervailing duty under section 9 if exporting country or exporter voluntarily undertakes to eliminate or limit subsidy or revise price, and if government is satisfied that subsidy's harmful effect is removed. So nothing but if the exporting country, if we started imposing countervailing duty or anti-dumping duty and that country has voluntarily undertakes, that country has came forward. For example, our government started imposing countervailing duty on China. So China has accepted their mistake and they voluntarily came forward and told, sorry sir, we will not give so much of subsidy. We will limit our subsidy. We will rectify our action. We will make sure that there is no dumping or subsidy happening. If the country came forward and take the action, then also we don't impose countervailing duty. Or anti-dumping duty under 9A if an exporter voluntarily agrees to revise prices or stop exports at dumped prices and if the government is satisfied. So either the government or the importer, they came forward and they have agreed to rectify their mistakes and they have agreed to increase the prices and all, then also government will stop imposing countervailing duty and anti-dumping duty. Next, rules for investigation. Central government may make rules for the investigation process, including how investigations will be carried out, what factors to be considered during the investigation process. And export duty, till now whatever we have seen, all that is relating to imports, and there, whenever you are making exports, on that exports generally duties are exempted unless in special cases. So that's what they say. Export duty is generally not levied on exported goods. However, the government imposes export duty on certain goods like leather goods, ferrous waste and scrap. Snake skin export duty is applicable in cases where the goods are outside the scope of GST. Like example, alcoholic liquor for human consumption. Even if you are exporting the goods which are outside of the purview of GST, if you are exporting alcoholic liquor for human consumption, then the government can impose export duty on that. So except in few circumstances, generally export duties are exempted. Only in few cases, export duty will be imposed. Understood? Clear and comfortable, everybody? Right. See, just one small thing. See, I want to change my explanation. I think I have given here wrong explanation. So we have taken this point fast. So I will tell you, I will try to re-explain this. Okay, yeah, sorry. So I told that if you are importing from friendly nations or if you are importing from WTO members, generally we don't impose anti-dumping duty or safeguarding duty, no. But they have told that second and third point will not become applicable in some circumstances. In which circumstances? So what do they mean by here is, say for example, Russia. So in India we have, India has started giving subsidy for exports. India has started giving subsidy for their exports, or they are doing dumping. They are doing dumping. So Russia is a friendly nation. Russia is a friendly nation. It is also a World Trade Organization member. It is our fellow partner in the WTO. So now what they are doing is, generally, if we are importing the goods from Russia and all, unless there is a damage to our domestic industry, we don't impose countervailing duty or we don't impose anti-dumping duty. Yes or no? But what they are telling is this will not become applicable when, because say for example some third country is there, China is there, okay, developing country they use. Sorry, third country, say for example China is there. So in India we are not importing, we are not importing countervailing duty, or on imports from Russia we are not imposing countervailing duty, we are not imposing anti-dumping duty, since Russia is a friendly nation. So what Russia has first done is they tried to dump all their goods into China. They tried to dump all their goods into China. So but what China has done is, in order to protect their local market, in order to protect their domestic industry, so what China has done is they have started imposing anti-dumping duty and countervailing duty. This is a third country. Russia is a friendly nation. So what Russia first started doing is they started dumping all their products into China. But what China has done is they have imposed additional anti-dumping duty or countervailing duty to protect their domestic market. Now Russia is having no chance to dump their products into China. Now they have only one route, which is what? India. India. Now that rule will not become applicable, even though it is a friendly nation. Now why that rule is not applicable is, why this friendly nation or World Trade Organization rule will not become applicable is, since China has already protected its market, now dumping will happen at a increased pace. Now dumping, they will do aggressive dumping into India. Why? Because China have their own measures at place. So now we will be at loss, no, in this extreme step. So if that is the case, even though Russia is a WTO member, even though Russia is a friendly organization, still the government has to impose anti-dumping duty or countervailing duty. Why? Because some country has already taken measures. Now we have to face all the heat. If we still allow importing without this additional duties and all, we have to face the heat. So that's why government told here that 2 and 3 will not become applicable. Okay, so this in a hurry I missed out some point, so I thought of clarifying it. Why? Because some students, this is not important. Once again I will tell you, this question they will not ask you in the examination. There is no chance of asking this question, but still I don't want to leave with some, I think I told something else here, so but I wanted to clarify it. Okay, right, so that's all. This is what regarding various types of duties. Clear everyone? Bye, take care. Hey my dear students, hope you guys are all doing good, hope you guys are all perfectly fine. So let us resume our discussion. Let us proceed ahead in the topic of customs. So let us have a quick recap of what and all we have discussed in our previous session. So if I'm not wrong, in the just previous session we have understood what are the various kinds of duties which can be levied under customs once you are importing or exporting. What and all are different kinds of taxes which the government can impose on you. So all that things we have understood.
different kinds of duties we spoke about. If we have a quick recap, so first there will be something called basic customs duty, and that basic customs duty can be imposed in two ways. Either that customs duty can be calculated on ad valorem basis, that is on the basis of value, a certain tariff rate, a percentage will be prescribed that you have to multiply on the value, then you will arrive at the customs duty figure. On the other hand, it could also be a specified duty, or even you can call it as a specific duty or quantity based duty also, you can say, where the government will say a fixed amount of duty you have to pay for certain goods and services. And in some cases it could be even combination, also a combination of ad valorem and specific, both collectively also can be imposed. So that is the first and foremost levy which will happen in the customs, which is basic customs duty. Then we have something called social welfare surcharge. And this social welfare surcharge, the rate is fixed at 10%. This 10% is not on the value. This 10% is going to be on the customs duty. So whatever basic customs duty you will pay, no, on that 10% will be multiplied the resulting figure which you get, that we call it as a social welfare surcharge. And apart from that, what else are there? What else are different kinds of duties? So even you have to pay IGST. So whenever you are making an import, in addition to that, you are required to pay IGST. And on what value you have to pay IGST? So there will be something called transaction value will be there. On that basic customs duty we will add. On that social welfare surcharge we will add. Apart from that, if any other duties are there, like safeguard duty, or if there is any protective duty, or if there is any other kind of duty, like we have discussed anti-dumping duty, so all that duties we have to add, then we will get one figure. On that figure you have to multiply the applicable rate of IGST. Not just that, in addition to IGST, you are also required to pay GST compensation cess at the prescribed percentage, and this percentage also will be multiplied on which value? On this value. So that value of import, on that whatever customs duties, social welfare surcharge, and all other duties, after adding that, whatever figure you get, so on the same figure you have to multiply IGST, on the same figure you have to multiply even GST compensation cess also. Then after that, we have seen safeguard duty, when the government feels that certain items are getting imported in larger quantities which create a danger to the domestic market, then they can take safeguard measures. What kind of safeguard measures they can take? They can take they can start imposing safeguard duty, or they can have even tariff rate quotas. So safeguard duty means generally they will impose, in addition to basic customs duty, some additional duty also they will impose. However, if you are importing from a developing country, then it will not be imposed. However, there are limits. From each developing country, it should not exceed 3%. From all developing countries put together, the aggregate limit is 9%. Next, even they can impose a tariff rate quota also, that we have discussed in our previous session. Then apart from that, they can also impose something called countervailing duty on subsidized articles if the government feels that some foreign government is giving subsidy for the purpose of exports, to encourage the exports and all. And so that because of that, so many goods are coming, since it is available at a subsidized price, people in India are importing that goods in larger quantities than when compared with the domestic quantities, domestic goods. Then the government can impose something called CVD, countervailing duty on subsidized articles. And along with that, the government can also impose something in the name of anti-dumping duty if it feels that some countries or some manufacturer is dumping the goods in our country, because of which there is a danger to the locally manufactured products and all. Then they can impose something called a anti-dumping duty. And a few important points here and there. See, either there will be countervailing duty or anti-dumping duty. Both cannot be imposed simultaneously. On a single import, you can't charge both CVD and anti-dumping duty, anyone. So either there will be countervailing duty or there will be anti-dumping duty. Both cannot be imposed simultaneously. And also, if you are if the goods are getting imported from friendly nations or from World Trade Organization members, so then also countervailing duty and anti-dumping duty will not be imposed, provided to the extent there is no danger for the domestic industry. So like this, a few important points are there. So all that we have covered in the previous session. Now we are coming to the most important part, which is valuation. This is from where the question is going to come in the examination. This is where the question is going to come in the examination. So which is regarding valuation rules. Let us try to understand what are these valuation rules. What does the chapter speak about? Let us try to have a brief about that. See, this chapter is going to be very similar to the value under GST. In the GST chapter, in the GST concept, if you remember, we have understood something called value of supply, where we have explained section number 15. So what we have in fact learned in the value of supply under section number 15 of the CGST Act. So there we have learned how to determine the value of supply. So basically, as we all are aware, if you want to know what is the amount of GST you are required to pay, so there will be value. On that value, you have to multiply the percentage of GST which is applicable. Then you will get one resulting figure. That figure we call it as GST. That is the amount which you are required to pay. See, percentage we can find it out from the rate chart. So once you find the HSN code of the goods, you can find the what is the rate of GST applicable on that. But you need to determine value. In order to know what is the amount of GST, you need two things. One is you need to know what is the value at which the transaction has taken place, and also what is the percentage. These two things you have to know. So percentage we can easily find out from the rate chart once you get to know about the HSN or SAC code of the goods or services, but we need to determine value. Sir, how to determine value? So we have seen no in the GST, so that value is nothing but transaction value. So to that value certain items will be added. To that from that value certain items will be excluded, like discounts and secondary post supply discounts and all. So all the discussion we had in the value of supply chapter, similar kind of discussion we are going to have even in this topic of valuation under customs. So when I say for example, you are a person residing in India. So from a foreign country you have imported the goods. From a foreign country you have imported the goods. So when you have imported the goods, you are required to pay basic customs duty and all other kinds of duties, whatever we have discussed in the previous session and all, right? So if it is a ad valorem duty, you have to determine what is the value. So on the value, if you multiply that tariff rate, then you will get the customs duty figure. So here also we need to know how to determine that value of that imports or exports. So if you are importing, as I've told, when you are importing, you are required to pay duties. In exports, in majority of the cases, duties will not be there, but in some exceptional cases, there will be even duties on exports also, like we have seen in the previous session, leather goods and all. So on specified items, there will be duty. So whatever it is, whether it is import or whether it is export, if you are required to pay customs duty, you need to determine what is the figure of the customs duty. To determine what is the figure of the customs duty, you need to determine what is the value of imports or exports. So how to calculate that value, sir? How to calculate that value? That is what the discussion going on in this chapter. So like the way we have discussed how to determine the value of the supply so that we can calculate the GST figure, in the same manner, in this chapter, we are going to learn about how to determine the value of imports and exports so that we can determine what is the amount of customs duty. Able to understand? So that's what the discussion of this, that's what the discussion we are going to have in this entire chapter. Clear and comfortable, everybody? So since we understood what we are going to deal in this chapter, so first we will try to understand how to determine value in the case of imports. As I was saying in the previous session also, main discussion, whatever we are going to have in the customs, that is only regarding imports. On exports, in majority of the cases, there will be no duties. If at all there are any duties, the procedures and complications are not there. Very simple procedures will be there. But where all the complications are going to come is, in the case of imports, there are so many complications, so many interpretations, so many things which we have to keep in mind. So first we will talk about, in case if you are importing for the purpose of payment of customs duty, how to determine the value, that we will try to understand. So I will try to give the entire structure. First, we will try to understand the entire concept. Then we will try to read the material. Okay, first I will give you the overall structure. Say, for example, there is a person in India. Okay, so there is a person in India. Now, this person wanted to import some goods from, say, for example, from USA, he wanted to import some goods. From USA, he wanted to import some goods into India. See, as a process, as a part of this import, there are various costs, various expenses, various things which will happen. This import will not happen for free of cost. At various prices you are required to pay, various expenses you are required to incur. So all that things has to happen. So we have to understand the technical terminology. Okay. So now, who is exporter here? He is the exporter. A person is there in USA. Say, for example, there is a person, Mr. John. So Mr. John is an exporter. He is exporting the goods from USA to India. So Mr. Ram is in India. He is an importer. He is a what? He is an importer. He is importing the goods into India. And who is exporter? Mr. John, who is in US. That person is an exporter. He is exporting to India, and this person is importing. Now what will happen? See, what John has to do is, say for example, some goods are getting purchased. Now what this John will do, he will have a factory. He will have one factory. He will have his factory. Now in his factory, in his company, whatever it is, the goods will be there. The goods will be manufactured. The goods will be prepared. Now these goods are required to be brought to port. These goods are required to be transported. No. So now these goods are required to be brought to the port, either airport or vessel, whatever it is. So they have to come to USA port. In US, there will be customs authorities. Like in India, we have customs authorities. In US also, they will have customs authorities. So this John, whenever he wants to export the goods, he will make the goods ready in his factory or at his company, and he will bring the goods to the US port. Either that could be a ocean port or it could be a airport, whatever it is. Now,
So after by bringing the goods to the port, what he will do? He will load that goods at the port, at the customs port of US. He will load the goods. He will do the loading. He has to incur all the transportation cost and all. Now what that goods will do? Now that goods has to come from US port to the place of importation, to the place of importation. Okay, say for example, here we have Vizag. At the Vizag port, it has to come. Okay, so okay, let me do one thing. So from the US port, they have to come to the Vizag port. Say for example, the goods are coming in a vessel. The goods are coming in a vessel. So these all goods are loaded on a vessel, and this vessel from US port, it has to come to Vizag. So Vizag is a port of importation. Vizag is what? Vizag is a port of importation. Yes or no? Guys, I'm introducing the technical terminology. See, the concept will become very, very easy just to follow the terms, whatever I'm using. So an exporter from his factory, he will bring the goods to the export port. From there, the goods will be loaded on a conveyance, on a vessel, on an aircraft, and that conveyance will come to the place of importation. That conveyance will come to the place of importation. Now what will happen? See, now what and all are the prices which are involved. At factory, price at the rate of factory. See, when exporter has to send the goods, when this person is selling the goods, he will have his price. No, he will quote the price. Say for example, he will say 1,000 rupees, $1,000 per product. Like that, some pricing will be there. No, say for example, some X is the pricing. So price at factory. Say for example, he's saying at factory the price is $1,000. Each unit he is selling it for $1,000. So that will be the price at factory. So that will include cost, his profit margin, everything he will add, and he will quote a figure. So that we call it as price at the factory. Now, in order to bring that goods from his factory, to the export port. So from its factory, he has to bring it to the US port. No. So what he has to incur? He has to incur some transport charges. He will incur something called transport charges. Some X figure he will incur. Okay. Then after that, these goods are required to be loaded. So transport cost, he will bring all that goods to US port. Now at the US port, these goods are required to be loaded into the conveyance. No. So loading charges will be there. What will be there? Loading charges also will be there. So he will also incur loading charges. So now by incurring all these expenses, price at the factory, transportation charges he will incur. After that, loading charges also he will incur. Now the goods are brought on board at the export port. Now the goods are brought on board at an export port. What is an export port in our example? At US port, the goods are ready to move from US to India. So that price, after adding all this, whatever figure we get, that we call it as free on board. FOB price we call it. What do we call it? FOB we call it. Free on board we will call it. What do we call it, guys? Free on board. See, this term you hear it very often. So yeah, I'm making you very familiar with the concept now. So how to calculate the free, how to arrive at the free on board? Price at the factory, that local transportation cost from bringing the goods from factory to the export port, and at the export port you have to load all that goods into a conveyance. At that point of time, the goods are boarded on a conveyance at an export port. So at that point of time, whatever price is there, that we call it as free on board. So after adding all these three things, that figure we are going to call it as free on board. Okay, now the goods are here at the US port on free on board, free on board price. Now these goods are required to be moved from US port to the place of importation, to the Vizag they have to come. No. So now you tell me, compulsorily two cost has to be incurred. From the US port, if the goods have to come to Vizag, compulsorily two kinds of cost will have to be incurred. Without that two cost, that movement will not happen. Sir, what are that? Two compulsory things which has to be incurred, two compulsory cost which has to be incurred in order to bring that goods from the US port, from the export port to the import port. One is transport charges. So from US port to India port, no one will bring it free of cost. No, you have to incur transport cost, transport, loading, unloading, and handling charges. Up to the place of importation. Up to what stage? To the place of importation. That's what they say. Or to the port of importation also you can say. To the port of importation. Up to the port of Vizag. In our example, import port is Vizag. till the point of that Vizag port, whatever transport, loading, unloading, and handling charges you have incurred, without that, the goods will not come. That we simply call it as freight. Let us call it as freight. So when I say freight, what and all is included here? So transportation cost from the exporting port to import port, in between any loading charges, in between any unloading charges, and any handling charges up to the place of importation, that has to be compulsorily added. So that we will call it as freight. For the time being now, we call it as what? Freight. And in addition to that, these goods will move from foreign port to Indian port. See, always risk will be there when you're causing the moment. High value of the goods are getting imported and exported. During the transit, damage also could happen. So that's why, as per the authorities also, as per the laws and regulations of the countries also, unless you take the insurance, unless you pay the unless you insure that goods which are getting moved, they will not clear the customs procedures. So that's why compulsorily, if that movement has to happen, you have to incur insurance cost. What you have to incur? You have to incur insurance cost. So compulsorily you have to incur freight, compulsorily you have to incur insurance to the place of importation. In order to bring it to the place of importation, till the place of importation, you have to incur the insurance cost also. So you get FOB. To that FOB, two things you have to compulsorily add. Freight you have to add, insurance you have to add, compulsory addition you have to do. Then you will get one figure. That figure we call it as CIF value, cost, insurance, freight value. What do we call it? CIF value we call it, cost, insurance, freight we call it. And in fact, this is the assessable value. This is the value on which the customs duties will be levied. On this value, we are going to multiply the percentage of the tariff rate. Able to understand? Clear and comfortable, everybody? So what did I say till now? So what is the most important figure? What is the figure on which we are going to multiply that rate of customs duty on the CIF value? That is what we even call it as assessable value. Able to understand? So how to arrive at the CIF value? We have to first arrive the free on board FOB. In most of the questions, they will give in the question itself. They will start the question in fact with the FOB value. But two items must be compulsorily added. These are all compulsory. These two are compulsory. So two items must be added. Compulsorily it should be added in order to arrive at the CIF value. So what is that? Transport, loading, unloading, and handling charges up to the place of the importation, which we call it as a freight in simple. Along with that, insurance charges that have been incurred to the place of the importation. So that also we call it as insurance. And if when you add that two figures compulsorily, you have to do that. The resulting value we call it as CIF value or assessable value. CIF value is basically assessable value. On that, the rate of customs will be multiplied. Okay, but here there are few things which we need to keep in mind. Here there are few things which we need to keep in mind. See, generally in the questions, what they will do is they will say FOB. What is the FOB value? Say, for example, they told 1 lakh worth of goods are imported. What did I say? In order, first we have to arrive at the CIF value. In order to arrive at the CIF value, we have to compulsorily add. Compulsory. In all the cases, it is compulsory. Compulsorily, you have to add the freight, you have to add the insurance. Say, for example, in one question or in one case, they have given FOB value. They have given FOB value, 1 lakh they have given. Now, in the same question itself, or as per the customs authorities or whatever it is. So, say freight. First, we will talk about the freight. Freight is given. Freight is actually given in the question itself. All freight you can determine. The freight you can determine. Or in some cases, what will happen is freight will not be given. Freight will not be given, or freight is not determinable. You are not able to determine the freight figure. They have not given any information. See, now what they have told us, say for example, if in the question itself they have told the freight which has been incurred is 10,000 rupees. If it is given, we'll talk about it later. So if the freight is already given in the question, what we will do, we will take that freight. But sometimes what they will say is, they will only give a FOB value. They will not give any information regarding freight. Say for example, freight value is not determinable. Then what you should do? Freight value has not been given. Sir, can I ignore it? Can I continue without adding the freight to calculate the CIF value? No. Why? Because what did I say? Two compulsory additions must be done. Freight compulsorily should be added. Sir, but freight is not given, sir. Then what I should do? If the freight is not given, then what the Customs Act says is, if the freight is not given, take freight as 20% of FOB. What they have told? 20% of the FOB you have to calculate. That itself will be deemed as freight expenses. You can't simply say, sir, freight figure is not given in the question, I will not add it, only I will add insurance. You can't say that freight is compulsorily required to be added if not given in the question, if not determinable on the basis of the documents. You have to take 20% of the FOB itself as a freight. Able to understand? Clear and comfortable, everybody? Now, sir, what if freight is given? What if freight is given? Say, for example, in one question they have told FOB is 1 lakh rupees, whereas in freight charges, transport charges is somewhere around 30,000 rupees is the transport charges. 30,000 rupees is the transport charges. Now, freight has actually been given in the question. Then what we should do? Here we need to do one more thing. What we need to do is, we need to check whether the transportation is happening by way of vessel or by way of any vehicle. That means by water or by land, if the transportation is happening. And the freight figure is actually given in the question itself. Take whatever has been given. Whatever actual expense that has been given in the question, that we will add. But however, if the freight has been given and if the transport has taken place by way of air, if the transportation is happening by way of air, and freight expenses is also given. But here what they say here is, in case if it is happening by way of air, actual freight or 20% of the FOB, whichever is lower. If it is happening, if the transportation is happening by way of air, either actual freight expenses or 20% of the FOB, whichever is lower, that much amount of freight only should be added. Able to understand? Sir, why? What is this? What are you trying to convey here? See, when the movement of the goods is happening by way of air, it will be costly, no? Freight expenses will be higher when you want the movement of the goods. See, generally when you will opt for air transport, when you have little emergency, when you want the goods at least time available, then you will generally opt for air. So air expenses, air freight will be little bit higher. So when you take that actual air freight, what will happen is the value, CAF will increase. See, when the freight expense is increasing, what will happen? CAF value will increase. When the CAF increases, customs duty also will increase, no? That means it will make the import even more and more costly, right? So by putting a restriction, so they say that in case of air freight, either actual or 20% of the FOB, whichever is lower. By putting a restriction, they are actually doing a favor on the importer. On the SSC, they are doing a favor. Boss, we know airport air freight expenses will be higher, but if we ask you to add that actual air freight expenses, the assessable value will be very higher. Customs duty which you will be required to pay is very high. So that's why we are doing a favor on you. If you are causing the movement of the goods by way of air, either take actual or calculate 20% of the FOB, whichever is lower, that much if you add it as freight, it will be enough. Clear? Able to understand? However, if the movement is happening by way of vessel or vehicle, that is by way of roadways or land, then whatever actual expense is there, that you have to add. There is no restriction, you have to add it. Understood? Sir, if it is not given, whether water, air, vessel, whatever it is, sir, if the freight expense is not given or it is not determinable, then what you should do? 20% of the FOB you have to calculate, and that you have to add it. The restriction, the cap is there in the case of air freight, if actually is given. Understood? Next. Sir, what about insurance? What about insurance? Sometimes what will happen is, they will say FOB. They will say FOB. They might not say insurance. They might not say, they might not give you insurance figure. Then what I should do? Then what I should do is, here also two things. If it is given or if it is determinable. It is given or if it is determinable. Or there could be a case where it is not given or it is not determinable. So if it is not determinable, what you should do is, in this case also here what the act has told is, you take 1.125% of the FOB. FOB figure you will have, no? On that multiply 1.125%, whatever figure you get, that you have to take it as insurance cost. You can't say, sir, since insurance is not given, I will not add the insurance and I will calculate CF value. You can't say that, because two things are compulsory additions to the FOB. One is a freight, other one is insurance. Even though if insurance is not given or not determinable, you multiply 1.125% on the FOB and that insurance you have to compulsorily add. Sir, what if it is given? What if it is given in the question, or what if it is determinable? Here take actual. Here you take actual. Here there is no bifurcation, whether it is air, whether it is by way of water, vessel, there is no such things are there here. If insurance figure is given, whether it is by way of water, land or air, whatever it is, actual expenses you have to add. If it is not given, 1.125% of the FOB you have to add it. Understood? So this is going to be very, very important. Without this point, there will not be a question in the examination. Compulsorily, they will have one point regarding this freight and insurance. These two are required to be compulsorily added. If given, what we should do. If not given, how to add it, all I have covered. Okay. So once again, come on, let us have a quick recap. So which value is relevant for the purpose of calculation of customs duties? So we have to get something called CIF, cost, insurance, freight. Sir, how to calculate that? First, there will be FOB. First, in majority of the cases, they will give you FOB in the question itself. So you will start with FOB. Or in some cases, what they will do is they will give you the price at the factory that they will give you. So if they have given from price at the factory and all, first thing what you have to do is FOB you have to calculate. But in majority of the cases in the examination, they will directly give you the FOB figure. Now to that FOB figure, two things you have to compulsorily add. Which two things you have to compulsorily add? Number one, you have to add freight. Sir, how to add the freight? Now we have to see in the question whether freight has been given or not. If the freight is given, or first thing, if the freight is not at all given, then what you should do, 20% of the FOB you have to calculate, that much freight you have to add it. Sir, if freight is given, then we have to check what is the mode of transport. Is it by way of land? Is it by way of water? Is it by way of air? If it is by way of land or water, if actual figure is given, that actual figure exactly we have to add it. However, if the transportation is happening by way of air and the air freight is also given in the question, then we need to check, then we need to do that calculation, actual air freight or 20% of the FOB, whichever is lower, that much amount only we have to add it. So by putting a restriction of this 20% of FOB, who is getting favor? Importer is only getting favor. Government is giving a little bit of relaxation to the importer. Sir, then what about insurance? In case of insurance, here also we need to check, is it given or determinable or is it not determinable? If it is given in the question itself, take the actual. If it is not given in the question, take 1.125% of the FOB. Okay, so now I will give you a few illustrations. Let me see whether you will be able to answer it or not. Okay, some simple illustrations we will try to do. So take a case, FOB 1 lakh. Okay, freight is there, actual freight. It is happening by way of water. The freight is 25,000 rupees. Insurance is 2,000 rupees. Customs duty, the rate of customs duty applicable is at 20%. Tell me what is the customs duty figure. What is the customs duty figure? I want the answer. Do the math and do it to me. These are the facts. FOB is 1 lakh. Freight, the transportation is happening by way of water. 25,000 rupees is actual freight. Insurance is 2,000 rupees. Customs duty rate applicable is 20%. What is the value? What is the amount of customs I am required to pay? So simple. So once again, if you go to the table, whatever we have seen. So first we will start with FOB. FOB 1 lakh. Okay, very good. Now freight we have to add. So is it given in the question or not? As it is given in the question. Freight is happening by way of water or by way of air or land? It is happening by way of water. Actual is given. What we will do? Actual we will take. Insurance. Have they given it in the question? Yes, they have given it in the question. We will take the actual. So it will come to 1,27,000. And the rate of customs duty applicable is at 20%. So on this 1,20,000, you multiply that. 1,27,000, you multiply that 20%. The answer will come to how much? 54,000, I guess. So 54,000 only. No, right? 4. Sorry. 4, 5. 15,400. So no. Sorry, let me do the calculation. Sometimes simple things we miss out. See, we got so habituated, no? 1,27,000 rupees into 0.2. So which will come to 25,400, sorry. So 25,400, not 2,54,000, 25,400 rupees will be the amount of customs duty which you will be required to pay. Understood? Now, let me give you case 2. Let me give you question number 2 here. Say, for example, just they have given FOB 1,25,000. FOB 1,25,000, or for ease in calculation, let me put it this way. They have given FOB is 10 lakh rupees. Determine what is the customs duty. Rate of customs duty applicable is at 10%. They have asked you in the question, calculate what is the amount of basic customs duty. Tell us the amount of duty which you are required to pay. Now you tell me how you will calculate. How you will calculate. So FOB, what 10 lakhs they have given. Next, you have to compulsorily add freight. Did they give anything in the question? No. But what we will do, we'll calculate 20%. So if I calculate 20%, how much it will come to? 2 lakh rupees. Insurance, have they given it in the question? No. If not given in the question, what we will do? 1.125%. How much it will come to? 11,250 it will come to. Am I correct? Yes, 11,250 it will come to. So if you add everything, how much it will be? 12,11,250. This will be the CAF value. This will be the assessable value. On that, customs duty at the rate of 10%, which will come to 1,21,125. And if you remember, social welfare surcharge also will come at the rate of 10% on customs duty, which will come to 12,112. So if you add this to, that is the amount of the duties which will be required to pay. I'm not going into the duties of the GST and compensation cess, that also will be added anyhow. So just I'm concentrating on determination of the value. Okay, guys, able to understand? Now let me give you one more scenario. Another question I will give you. FOB 1 lakh, freight by way of air 30,000, then insurance 2,000. What is the value? What is the value for the purpose of calculation of customs duty? So now what we will do? So they are giving, we will start with FOB. So how much is FOB? 1 lakh rupees is the FOB. Very good. Now they are saying freight is by way of air. If freight is by way of air and if actual figure is given, what I have told, actual or 20% of FOB. How much is actual? 30k. 20% of FOB will come to how much? 20,000. So even though whichever is lower, which one is lower? 20k. Even though actual freight has been given here, but how much freight we will add? Only 20,000 we will add because the movement is happening by way of air. Insurance actual figure has been given. We'll take the actual one, so which will come to 2,000 rupees. So total 1,22,000 rupees will be the value. This is the value on which we are required to pay the duties. Understood? Now let me give you one more case. In some cases, what they will say, question number 4. Let me put it this way. They have given CAF value. CAF 1,42,000. CAF 1,42,000. Freight by way of air 40,000 and insurance. Actual insurance cost come to 2,000 rupees. Now rate of customs duty applicable is 10%. What is the amount of the basic customs duty? Say for example, this question has been tested in the examination. What is your answer? These are all the facts. CAF they have given directly. Freight 1 lakh freight by way of air has taken place, which is 40,000 rupees. Actual insurance is 2,000. What is the rate of customs duty? Now what you will do, sir, anyhow directly CAF value has only been given, so we'll take the CAF value, which will come to 1,42,000. So anyhow you have told customs duty is at 10%. If I multiply that, it will be 14,200. That is the amount of customs duty. Absolutely wrong. So here they have given CAF value, but first let us calculate what is the FOB. What is the FOB? See, what did I say? How to calculate CAF? If you take FOB, to that if you add the freight, to that if you add the insurance, you will get something called CAF, no? So now what is the actual FOB? So CAF they have given in the question itself, they have given CAF. What is the CAF? 1,42,000. Okay. Freight is insurance is how much? 2,000. Freight is how much? 40,000. If you take both, how much is the FOB value? If you do the reverse calculation, actually FOB is 1 lakh rupees. So FOB is here 1 lakh rupees only. Now to this FOB you have to add freight, but here the transportation is happening by way of air. If it is by way of air, what did I say? Actual or 20%, whichever is low. How much is actual? 40k. 20% of FOB is how much? 20% of FOB if I calculate, it will come to 20,000 rupees only. Which one is lower? 20,000 is lower. I can add only 20,000 rupees of freight. What I can do, even though the actual freight is 40,000, I can add freight of only 20,000 rupees. Why? Because it is a figure it is a movement happening by way of air. In case of movement happening by way of air, either actual freight expense or 20% of FOB, whichever is lower. Then comes the last one, insurance. Insurance, since actual figure has been given, that I will add 2,000 will be the insurance. Total it will come to 1,22,000 rupees only. Customs duty rate they have given it as 10%. So if I multiply that, the basic customs duty will be 12,200 rupees only, not 14,200. So this is also one case which they have tested many times in the question. This is how you are required to do in case if they have asked a question regarding CAF. Okay. Say for example, if they have given a question, I will do one more question for the sake of your understanding. See, just because of the sake of your clarity, your conceptual clarity, I'm giving these many examples. Hope you guys are able to follow. Say for example, in the question they have given CAF 1,35,000, freight by way of water 30,000 rupees, insurance come to 5,000 rupees. Now rate of customs duty is at 10%. Calculate and tell me what is the basic customs duty. What is the basic customs duty? See, here you need not worry. What you can do is directly on this CAF you can multiply that 10%. 13,500 will be the customs duty. Sir, why, sir? Why? Because here we need not check anything. Here there will be no limits applicable. Why? Because the transportation is happening by way of water, and if actually is given, that actual figure we will take. No need to check that 20% condition. So even if you do all the math also, you will arrive at the same thing. So we have to calculate FOB. So they have given freight they have given, insurance they have given. So how to calculate the FOB? So CAF they have given it as 1,35,000. If you take out from that freight 30,000 rupees, if you take out from that insurance 5,000 rupees, FOB value will come to 1,30,000. So once again, if you add, sorry, 1 lakh. So once again, if you start adding, freight is there. How much is the freight? 30,000. Actually, you can take directly, you can take 30,000 rupees. Insurance actual only we will take 5,000 rupees. Once again, your CF value will come to 1,35,000 rupees only. So if the freight is by way of water or land, no need to do anything. Directly, you can take a CF value and multiply that rate of customs duty. You will arrive at the figure of basic customs duties or any other kinds of duties. Understood? Clear and comfortable, everyone? Now, let us come to the, these are the few things which you need to keep in mind. Now, let me add a little bit more information, few more things I would like to add here. Right. See, sometimes what they will do is, they will give FOB, say for example, 1 lakh FOB they have given, or they might give it something like this. They will say in the question, FOB along with insurance. FOB along with insurance, both put together is 1 lakh rupees. But freight they have not given. Right? They have not given. So what did I say? They have given combined figure of FOB and insurance. They did not give separately what is FOB, how much is insurance, they did not give. So in the act, they have told that in case if you know FOB plus insurance, collective figure you know, but you don't know freight, then what did I say? So generally, what did I say? If you know FOB, but if you don't know insurance, if you don't know freight, you have to multiply 20%. In case of freight, I have told you. But this is a case where they have given FOB plus insurance value they have given. Separately, what is FOB, what is insurance, they have not given. Combined figure of FOB and insurance, they have told it as 1 lakh rupees. If that is the case, in case if the freight has not been given, here what the act says is, here you take 20% of total value. If they have not given a breakup, so that FOB and insurance value they have given, no, on that total value, you have to multiply that 20%. So here my freight expenses, which I have to add, will be 20% of 1 lakh rupees, which will come to 20,000. If FOB insurance separately given, only on FOB only will multiply. But sometimes in the question they will say, they will give a combined figure of FOB plus insurance, but they will not give freight. In that case, what we should do is 20% we have to multiply on that combined figure. Similarly, what also could happen is, sometimes they will give a combined figure for FOB plus freight. Guys, when I say freight, once again I am telling, in the initial part only I have told, when I say freight, here I am referring to transport, loading, unloading and handling charges up to the place of importation. That you have to keep in mind. So sometimes also what they will say in the question is FOB plus freight value they will give. So say for example, they have given FOB plus freight, it is coming to 1,50,000 rupees. But they have not given insurance. But they have not given what is the insurance. Now what we should do, if that is the case, here also what does the act says, you take 1.125% and apply it on the combined value of free on board plus freight. So if I do that, 1.125% into 1,50,000 on this total value you have to multiply. So you will get that figure. That will be the insurance. Okay. So summary is this. If FOB value has been separately given, on that FOB value only 20% or 1.125% we will apply. In case if the combined figure is given, like freight and insurance collective figure has been given, but insurance figure has not been given. So then we will do 1.125% of that combined figure. Freight and insurance is given, but freight is not, FOB plus insurance is given, but freight is not given. In that case, we will multiply 20% on the total combined value. If bifurcated value is given, or we will apply it on the bifurcated value only. If combined figure is given, we have to multiply it on the combined figure only. Understood? Everybody comfortable till here? Right. So what and all I have told you till now? I have told how to arrive at the CIF value. What did I say? First, you take the FOB, two compulsory additions you have to add. One is a freight you have to add, and compulsorily you have to add insurance when given what you are supposed to do. When not given what you are supposed to do, everything I have covered. Then you will get one resulting figure that we call it as CIF or assessable value. This is the value on which you are required to calculate the customs amount, customs duty figure. On this value, you have to multiply that rate. You have to multiply on this customs figure. Okay, right. Right. So going forward, so till now I spoke that there are, to the FOB you are required to do two compulsory additions. So I will call them broadly as compulsory additions. So there are two things which are required to be compulsorily added to determine the value. So what are the two compulsory additions? One is number one, freight we have. So when I say freight, what and all will be included here? Transport will be included, loading will be included, unloading also will be included, or and even one more thing here, loading, unloading also will be included, and finally handling charges also will be included. Okay, so everything put together 20%, guys. I'm not talking, when I say freight, I'm not talking about just one thing. So all these expenses put together 20%. Okay, right. Next, and one more thing I would like to clarify here. So once again, let us take the same example. There is a person in India. Okay, he is importing from US. So now what we will add during this transportation till, say for example, they are coming to the Vizag port, till the place of importation, till this place of importation, whatever transportation, whatever loading, whatever unloading, whatever handling charges, all that we will add. Now say for example, after the vessel has reached Vizag port, after that the goods will be unloaded, no? After that the goods will be unloaded, right? So there also unloading charges we will incur at the Vizag port. After reaching that place of importation or port of importation, unloading of the goods will happen. Say for example, some 10,000 rupees of unloading expenses have taken place. This should not be added. That should not be added. Only transport, loading, unloading and handling charges till the place of importation, up to the port of importation only it will be added. If the goods are getting unloaded after they have reached that place of importation or port of importation, after that you should not add anything. So this you have to keep in mind. When I say unloading, I was talking only till the stage of place of importation. In between this, if any unloading charges or loading charges have taken place, that only will be added. After reaching the port of importation, after that if any unloading charges have been incurred, that will not be added. Able to understand? So let me put it this way. Say for example, FOB value of the goods is 1 lakh. FOB value of the goods is 1 lakh rupees. So transportation is happening by way of water. Say for example, during that transportation, travel, transportation charges are somewhere around some 5,000 rupees. Loading charges are 2,000. Unloading charges, not at the port, in between, during the way, if there is any unloading charges, say for example 3,000. Handling charges are there, some 5,000. So all put together, how much we have during the transportation till they reach that place of importation, how much transportation, loading, unloading, handling charges have incurred. So 5 plus 5, 10, and another 5, 15. So actual freight we can take. Why? Because since it is a vessel, water transport it is happening. So actual freight we can take. So freight I will add, 15,000 I will add. Now say for example, in the question they are giving, after the goods have reached the place or port of importation, these goods are unloaded at the import port and their unloading charges worth 5,000 rupees have been incurred. Will you add this? No, you should not add this. Why? Because I have told you specifically there, when even writing it here also I have specifically emphasized that transportation, loading, unloading charges to the place of importation, up to the place of importation, that only will be added. At the import port, if any unloading charges are incurred, that will not be added. Okay, this point you have to keep in mind. And one more thing, say for example, these goods are unloaded here. After unloading, these goods are brought to the factory. After unloading, these goods are brought to the factory of the importer. For that, transportation cost of 20,000 rupees have been incurred. Should we add this? No. This is a transportation cost from the import to port to the factory or office of the importer. That also should not be added. Why? Because we have specifically told transport, loading, unloading, handling only up to the port of importation only will be added. Once they have reached the port of importation, after that any unloading, any travel, anything will not be added to the value. Okay, so this is also one point which I thought of clarifying. Okay, this also I have done. Next, one more thing I will try to explain it here. After freight, what else will be added? Insurance will be added. So these two are compulsory additions. Now we are going to talk about some optional additions. See, when I say optional additions, these are certain kind of expenses. If incurred, they will be added. In addition to freight, in addition to insurance, if any extra expenses are incurred by the importer, then only it will be added. If those expenses are not incurred, it will not be added. See, what did I say in the question? Whether freight is given or not, whether insurance is given or not, you will compulsorily add. But when I talk about these optional additions, I'm going to list a few items. These items will be added only if they have been given. If they are not given, we will not do some calculation like we have done it for freight or insurance, some 20%, 1.125%, like that we are not going to do. For what? For the optional evidence. for the optional additions. Only when they have been actually incurred, only when they are given in the question, then only we are going to add this optional additions. If they are not given, we are not going to do anything. Okay, sir, what are that optional additions? So if you come to the question here, so what are that optional additions which you are required to do? Right, see here. So the transaction value of the imported goods should include certain other items also. Apart from insurance, apart from freight, apart from insurance, there are some other items which are required to be included. What else is required to be included? If as an importer, if you are paid any commission and brokerage, except buying commission, those commissions you can add. Key takeaway, important thing, many times suggested in the examination, buying commission will not be added. Buying commission should not be added. Apart from that, if any other commission importer has paid, that commission you have to add it. Commission, brokerage you have to add, except buying commission. Buying commission you should not add. So somewhere they will give what is the meaning of buying commission. Yeah, sir, what is the meaning of buying commission? Fees paid by an importer to agent for representing them abroad in purchasing goods. So you are an importer, you want to buy the goods from export country. In the foreign country, you have appointed an agent. He will represent you and he will procure the goods for you on your behalf, acting as your agent. For him, you will pay commission. That commission we call it as buying commission. That buying commission should be added or should not be added? Buying commission should not be added. Apart from buying commission, if any other commission or brokerage has been paid by the importer, that you have to add it. Okay, so number one, what should be added? Commission other than buying commission should be added. Cost of containers. See, when you are importing, you will also get you will get that content in the containers, right? If you are incurring the cost of containers, that containers cost also you have to include it. But sometimes what will happen is you will get the goods in containers, but those containers are returnable. Say for example, you need some goods, guys. Okay, so you ordered some 10,000 quantity of the goods. So that 10,000 quantity of the goods should come in some container, no? So some containers like in the vessels, in movies and all, you might have seen cargo places where big containers will be there. So you got all your goods in the container. Now say for example, for this container, you paid some 1 lakh rupees. But what is the option available to is, once you get your goods to your factory, you can return that empty container and this 1 lakh, they will give it back to you. So whatever cost you have paid to the containers, if you are returning, if those containers are returnable and you will get back your money, that cost should not be added. Only non-returnable, cost of non-returnable containers. That means you have paid some money, you got the container, you can't return it, that you only have to keep it. So that cost of those containers which are not returnable, which are not refundable, that cost you have to add. However, if you can return back the containers and get back your money, that is not your cost. No. Why? Because you are getting it back. So that should not be added. So that is one thing. So commission and brokerage you have to add, except the buying commission. Cost of containers you have to add, that too non-returnable and non-refundable. Cost of packing, whether for labor, materials, if you are incurring some packing cost for the purpose of that import. So any special packing, general packing, whatever it is, that cost of packing, both incurred on labor and materials, everything you can add. And appropriate value of following goods and services supplied by the buyer free of charge or at reduced cost for use in the production and sale for export of imported goods. Sir, what do you mean by this? So what do they say here is, say for example, this plastic bottle, this steel bottle is there. So say for example, I'm a importer in India. Okay, so I want to import this kind of water bottle. This steel water bottle, I want to import it from US. Now, when I want to import the water bottle, what I have to do? So what I should do is, so this US exporter, he will use his steel, he will manufacture that steel bottle and he will send that goods to me. Say for example, I'm getting some bulk quantity of the water bottles. I have to pay 50 lakhs rupees for this. But I'm not happy with the quality of the steel which they're using. I'm very happy with the design of the product, but I'm not happy with the steel. So what I have told to this exporter is, boss, you do one thing. So I will send you the steel. I will send you 20 lakhs worth of steel, free of cost or at a discounted price, whatever it is. So I will send you 20 lakhs worth of steel to you. Using that steel, you manufacture the goods and then you export it to me. Now, since the steel was provided to the manufacturer already, now when he is selling the goods to the importer, what he will do? He will charge you 30 lakh rupees only. Transaction value will be 30 lakh rupees only. But what the act has told you, no. So in case, since you have supplied this material free of cost for the purpose of that import, even that 20 lakhs also should be added to the transaction value. Even that 20 lakhs also should be added. On total 50 lakh rupees, you will be required to pay the customs. Able to understand? So say for example, sometimes what will happen is I will not give the entire steel free of cost. I will give it at the concessional rate. So what do you mean by giving it at a concessional rate? Say for example, I'm an importer. Same, I want to import the steel bottles. So what I told to the exporter is, boss, you do one thing. I will send you the steel. I'll send you the steel amounting to 20 lakh rupees. 20 lakhs worth of steel I will send. But I will not give everything free of cost. I will give it to you at 10 lakh rupees only. I will give it to you at 10 lakh rupees. So 20 lakhs worth of steel, I'm giving it to that exporter, which he will use it in the manufacturer at a concessional rate, at a discounted rate. So now this exporter told, okay, I will use your steel. Previously, I used to charge 50 lakh rupees, but since you have given me steel at a concessional rate, I will charge from you only 40 lakh rupees. So he charged 40 lakh rupees only from us. Now, what does the act say is, since you have given this material at a discounted rate, that concession, whatever you have given, how much concession you have given, 10 lakhs rupees worth of concession you have given, that 10 lakhs also should be added. That 10 lakhs also should be added. So like this, that is what the next item which should be added. Appropriate value of the following goods and services which are supplied by buyer, in our example importer, either free of charge or at reduced cost for use in the production and sale for export of imported goods. Which kind of items you are providing? Either you are giving material, component, parts and similar items which is incorporated in the imported goods, or you are providing tools, dies, molds and similar items which is used in the production of the imported goods, or you are doing some engineering, development, artwork, design work, plans and sketches undertaken elsewhere other than in India and necessary for the production of the imported goods. This is very, very important. This is also very important. See, if you are giving molds, materials, dyes or any other thing you are giving either free of charge or at a concessional rate, that should be added to the value of to the value. But they say one more thing here. Say for example, say this steel bottle, I want this to be manufactured. This is steel bottle, or let me not take the steel bottle. Let me do one thing. Let me give you one example. Okay. See, I am a new mobile phone brand. I have started a new mobile phone brand. So I want from China to import. I want the China to manufacture the mobiles and send it to me. I'm importing the mobile phones from China. I'm starting one own mobile phone brand, but whatever mobile phones I'm selling in India, that I want to get it manufactured from China. Say for example, I'm ordering 1 lakh worth of mobile phones. 1 lakh worth of mobile phones. Now the vendor told, sir, 1 lakh worth of mobile phone, every mobile phone will cost somewhere around 5,000 rupees. He told 5 CR. Total 5 CR worth of goods I'm importing. Okay, so I'm the person who is importing that goods. But for this mobile phone, design and development should happen, no? How to design this mobile phone, what specification should be there, what software they have to use, what should be the display size, how the phone should look like, what should the back side look like, what should the front side look like. So that design and development activity, for designing and development, I have incurred some expenditure. For designing and development, I have incurred some expenditure. Say for example, that design has taken place in India. On this product, I have spent some 50 lakh rupees. On the design, for the design and development, I have spent 50 lakh rupees, and this design and development has taken place in India only. This design activity, this development activity has taken place in India. For that, how much expenditure I have incurred? 50 lakhs worth of expenditure I have incurred. I have a design. I shared with that exporter. Using that design, he manufactured the goods and he charged from me 5 CR. Now what they are telling is, this 50 lakh rupees you should not add. No need to add this 50 lakh rupees. You can pay customs only on 5 CR. So if you incurred design and development charges within India in relation to the goods which you have imported, no need to add it to the value. But however, if you have incurred design and development charges outside of India, if you have incurred design and development charges outside of India, say for example, you have developed this design, you want this Chinese manufacturer to manufacture your mobile phone, you developed a design, you got the development of that product, but that expenses has also taken place in China only. So you are spending the money for designing and development of the product, but that expenditure you have incurred in China. Say for example, the same 50 lakhs worth of development and design has taken place in China. Now what they are telling is, even that design and development charges also should be added. So conclusion is this: design, development charges, art, etc. If that expenditure has been incurred in India in relation to that imported goods, that should not be added to the value. However, if that design and development charges have occurred outside of India, even that also should be added to the value. Understood? So very, very important, guys. On this point also, many times they have tested. So engineering, development, artwork, design work, plans and sketches which are undertaken elsewhere than in India, other than India, if that expenses are incurred somewhere else, and you are making it available, making that design or development available to that exporter, even that also should be added. Guys, tell me what and all I have told. Optional additions which you have to do. Number one, commission and brokerage except buying commission. Number two, cost of containers, that too non-returnable, non-refundable. Number three, cost of packing materials. Number four, if you are providing some material, molds, dies, tools, or any other thing which are used in the production of the goods, either free of cost or at a concessional rate, that also you have to add. And design, development, artwork, plans and sketches, if that expenditure is incurred elsewhere in India, other than India, if that expenditure has incurred in any other country, that also should be added to my value. If it is incurred in our country, no need to add it to the value. Apart from that, royalties and license fees the buyer must pay as a condition of sale. This is very, very important. Say for example, you are importing some article, say for example mobile phones only you are importing from the Chinese manufacturer. Now the Chinese manufacturer told, boss, I will sell the goods to you in India, but if I have to sell the goods to you in India, if I want to send the goods to you, I will send you the mobile phones, but on every mobile phone you sell, you have to give me 5% royalty also. On every mobile you sell, you have to give me 5% of royalty. If you agree to that, then only I will sell the mobile phones to you. So now you tell me, should this royalty also be added? Yes, it is also should be added. So if any, in the name of royalty, in the name of license fee, if there is a condition, as a condition of making sale, this exporter, whoever is selling the goods to us, in order to make the sale, he's putting a condition that I have to pay him royalty or license fee, even if it is there, even if you are incurring that royalty expenses or license fee expenses, but provided it is incurred as a condition of sale. Very, very important, guys. If it is incurred as a condition of sale, that also should be added to my value. Able to understand? So that is very, very important. So royalty and license fee the buyer must pay as a condition of sale. Not just that, proceeds from any subsequent resale, disposal or use of the goods that benefit the seller. So this, like this, sometimes importers, sometimes exporters also will pay a condition. Boss, if you make any payment, if you make any sale, I will sell the goods to you, but if you make any subsequent sale, from that sale you have to share me some percentage. So like that, after you have imported and when you are selling that goods, if any share is going to that buyer, if any share is going to that seller, once again as a condition of sale, that also should be added. And not just that, all other payments made by buyer to the seller or third party to fulfill seller's obligations. Not just this, he might collect anything after importation. If he is asking you to pay something, post importation charges, we say that post importation, after importation has been completed, even after importing also, if you are making some payment to that seller as a condition of sale, very, very important term, as a condition of sale, if you are incurring any other post importation expenses, that also should be added. But that thing should be there as a condition of sale. When making the sale only, he's putting a condition, after this point of time, either you have to pay me royalty or license fee, or you have to share the sale proceeds with me, or you have to pay some charges to me, then only I will sell the goods to you. So like that, as a condition of sale, if you are incurring any other expenses, that also should be added. But very important is, it should be there as a condition of sale. Understood? Clear and comfortable, everybody? So these are the things which are required to be added. These are the things which are required to be added. So what and all should be added? Tell me, guys. Two things are compulsorily added. What is that? Freight should be added. Along with that, you should also add insurance. Compulsory, whether given or not given, you have to add it. But these things will be added only when actually incurred. If not incurred, these will not be added. So what are that? This I call it as optional additions. Commission and brokerage except buying commission. Cost of containers you have to add it. The cost of packing you have to add. Appropriate value of materials, tools and dies, either provided free of cost or at concessional rate. Engineering, development, artwork, design work, plans and sketches undertaken elsewhere than in India. That also you have to add. Royalties and license fees as a condition of sale. Proceeds from any subsequent resale, disposal or use of goods that benefit the seller, or all other payments made by buyer to the seller or third party to fulfill the seller's obligation. Now you will get a doubt, sir, where I have to add this? Where I have to add this? I told you previously, right? So first, price at factory will be there. Price at factory will be there. Yes or no? This is the starting point, right? Initially I have told. Do you guys remember? I have started my lecture like this only. So first there will be price at exporter's factory. Yes or no? This is once again very important, guys. Listen carefully. Price at exporter's factory. Then transport from factory to export port. So that you have to add. Then you have to add loading charges at export port. Loading charges at export port. So now you will get something called FOB value, free on board value you will get. Now what you should do is immediately after this step, you have to add all that additional expenses. Optional additions I have told you, no, here you have to add. Like if you have to incur any commission, that commission you have to add it here. Similarly, if you are incurring any packing material, that also you have to add it here. Apart from that, material provided free of cost and all, design development charges, post importation charges, royalty, whatever I have told, everything you have to add it here. After adding all that, you will get something called FOB value. This I will say it as FOB value for the purpose of customs. FOB value for the purpose of customs. After this, you are required to add something called freight at the rate of 20%. Sir, on which value you will multiply 20%? Sir, I told you, no, if freight is not given, 20% you have to calculate, no. On which value you will calculate 20%? Will you calculate 20% on this FOB value, or will you calculate 20% on this FOB value? The answer is you have to calculate that 20% on this FOB value as per customs. Okay, so after you have arrived at the normal FOB value, after making all these optional additions, whatever figure you get, that we call it as FOB value for customs. There you have to multiply that 20%. Able to understand? And similarly, insurance. So whatever insurance charges you are incurring, that insurance charges also you have to multiply. If not given 1.125%, I told, no, that 1.125% also here you have to add on this value. FOB value for customs is there, no, on that you have to add 1.125%. Then the resulting figure, whatever you get, that we call it as CIF value. Able to understand? Clear and comfortable, everyone? So this format you have to remember. This you need not copy. I have given it even in the material also. See here. See this thing I have given here. So first we will start with value of material ex factory. Then you will add carriage, freight, insurance up to the port of shipment in the exporter's country, that you will add. Loading charges and all you will add. Then you will get free on board, FOB value you will get. To that, whatever optional additions I have told, all that you have to do if incurred, commission and brokerage except buying commission, packing cost except cost of durable and returnable packing, this also I have told, cost of engineering development and plan or sketches which are undertaken outside of India, royalties, license fee, value of subsequent resale, value of material supplied, all this you have to add. Then you will get something called FOB value as per customs. So this will be the value on which we will multiply that 20% or 1.125%. On this value we are going to multiply it. So actual cost of freight, if not specified, 20% of FOB value as per customs. On this 20% we will multiply. If actually is given, but if it is in the case of air, there also will restrict it to maximum 20%, no. So that we will do. Similarly, you have to, I will come to this point later. And to that you have to add insurance charges also. If not specified, 1.125%, and that 1.125% on what? 1.125% on this value. And in addition to that, after adding this cost, insurance and all, you should also add few more expenses, which we call it as ship demurrage charges on chartered vessels, lighterage or barge charges. This you have to add here. Guys, where you are adding is very, very important. Why? Because this is going to have a significant impact on your final answer. There will be some other charges in the name of something called ship demurrage charges on chartered vessels or lighterage or barge charges. So like this, some charges will be there. This also you have to add. Not in the FOB value. After that you have to add. Okay, after this FOB value as per customs, one more kind of charge you have to add, which is what? Ship demurrage charges or chartered vessels lighterage or barge charges. So first I will talk about what do you mean by lighterage charges. So what do you mean by lighterage charges is lighteraging or barging charges. What do you mean by this is, say for example, the ship is coming from US, okay, that has to come to Vizag port. So here there is a Vizag port. But here what is happening, the water levels are very low. Because of some reason at the shore, water levels have come very low. So a big cargo ship might not come till the coast. It might get stuck. So in some cases what they will do, this cargo ship, since they can't bring it, or there's sometimes there might be huge pile up of containers standing here, vessels are standing here. So that's why they might not come directly. So in that cases what they will do is, this vessel will come and stop at a distant place. A few kilometers away from the shore, it will stop. Now what will happen is small boats will go, and that boats will bring from this big cargo vessel, that small boats will go and bring that goods to the importation, to the port. So now for that they have to pay some charges. for these small boats for carrying the goods from this large vessel to the shore, they need to pay some charges, no? So that we call it as barging charges and light rate charges. That we call them as what? Barging charges or light rate charges. This also should be added. This also should be added. So no doubt you have to add that also. Okay. So that's what they say. Barging and light rate charges when ship is not brought up to the jetty because deep draught at port or ports are busy or any other reason. In this case, cargo shall be discharged at the anchorage, and charges for bringing goods from outer anchorage to the jetty, that expenses we call it as barging or light rate charges. That also should be added, but please be careful. Don't add it before FOB value as per customs. Add the actual figure after you have calculated the FOB value as per customs. So that you have to add. Apart from that, you will be required to pay something called demurrage charges. So even that demurrage charges also you are required to incur. You are required to add it. Sir, what do you mean by demurrage? So what do you mean by demurrage charges is, say for example, how do I put it? Okay. So US port is there. Okay. From the US port, the vessel has started. It has to come to Vizag. It has to come to Vizag. Now, say for example, from US, this vessel has to come. This vessel has to come and it has to reach the Vizag port. During the midway, say for example, the ship is coming from US. From US, in between one more port it will touch. After touching one more port, then it will come to Vizag. From foreign port, at some international port, it will stop for some time. So in some international country, this vessel has stopped for a while. Say for example, this vessel can stay there only for one day. After that, it has to continue its journey. But what happened is, because of some reason, they have stayed one more day extra. At another international port. Now, since they are staying for one more day extra, they might collect some charges. Say, for example, they say 50,000 rupees you have to pay since you stayed more than one day. So this we call it as a demurrage charges. This demurrage charges also should be added. This we call it as shipping demurrage charges. But sometimes what will happen, say for example, this vessel has come to Vizag port also. Now, after it has come to Vizag port, there the goods are required to be unloaded. Or say for example, or these goods are unloaded also. Now, as a importer, within a limited period of time, you have to come and clear these goods. Either you have to submit a bill of entry for home consumption, or you have to move it to the warehouse. Say for example, customs is saying once the goods are unloaded, 2 days time they will give. Within that 2 days of time, either you have to submit the bill of entry for home consumption, or you have to submit a bill of entry for warehousing. So if you don't do it within 2 days, you have to pay extra charge because you are occupying the customs space, no? So say for example, you did not come after 2 days, 2 more days extra you have taken. Now what customs authorities will say is, since you have come late, for these 2 days extra, you pay the demurrage charges. This we call it as port demurrage charges. You are paying this demurrage charges at the port after the goods are unloaded at the port. This should not be added. Why? Because this is cost incurred after the place of importation, after they have been unloaded, no? So this port demurrage charges should not be added, but ship demurrage charges, before they have reached the port of importation, if any demurrage charges are incurred, that you have to add it. But at the port, if you are paying the demurrage charges, that should not be added. Why? Because that is the expense incurred after the importation has been completed. Clear? So 2 things, only add ship demurrage charges, don't add port demurrage charges. And also you have to be very careful that ship demurrage charges or lighterage or barge charges should be added after determining the FOB value as per customs. Okay. See, you have to be very careful. Why I am telling you this is, if you add it here, if you add it any place here, this 20% will be including, this 20% will be multiplied even on demurrage or lighterage charges also, which should not happen. So that's why this 20% and 1.125%, whatever you are multiplying, that should be on FOB value exclusive of demurrage charges and lighterage or barge charges. So that's why don't add this here. You add it after you have calculated the FOB value as per customs only. Understood? Clear and comfortable, everybody? So this is what regarding how to arrive at CAF value. So if you see here, what are the costs which are not required to be included? So what have to be included we have seen. Now specifically they say what is not required to be included. Duties and taxes which you pay in India, that should not be added. Why? Because duties and taxes you pay in India after importation has completed, so that you should not add it. Cost of erection charges in India. If you are bringing any plant and machinery into India, and after bringing the plant and machinery, after getting the custom clearances, you went and installed that plant and machinery at your premises. Should you add that also? That you should not add. Transportation and insurance from port to factory in India. This I have already covered. From the customs port, from the Vizag port, if I'm bringing the goods to my factory, I will incur in transportation cost in India. Should I add that also? No, you should not add it. Development charges for imported machinery, don't add it. Port demurrage charges and unloading charges in India, this I've already told. This also should not be added. Post shipment charges, unless there are preconditions for importation. As I've told, if any post shipment charges or post importation charges you have incurred, if they are incurred as a condition of sale, then only you add it. If there is no condition of sale for that post shipment charges or post importation charges, those are things should not be added. Okay, so these are the items which should not be added. Clear? Able to understand everyone? So the most important discussion, whatever we had till now, the most important discussion is this one. So on this we are going to solve a many number of problems, but I want you to remember this thing. So there are few more things which are required to be clarified. So after clarifying on those few things, we'll start solving the questions and answers. Okay, so till here everybody comfortable? Right. So let us resume our discussion. So in the previous session before this, we have discussed how to arrive at the value. Whenever you are importing, you will be required to pay the customs duty, and if that customs duty is on ad valorem basis, you have to determine the value of that imports. How to determine that value of the imports, that we have seen. So this thing which we have given in the material, this is going to be very, very important. So this we will do one quick recap, then we'll try to do some questions. One more point I have to explain regarding the valuation. So once we are done with that, then we'll solve some questions to get the comfort of the concept, and also we will get a practice how to answer the questions in the examination. So for that we will solve the questions first, but before that let us have one quick recap. So first there will be ex-factory price for the exporter. To that we have to add the carriage freight insurance up to the port of that shipment, and loading charges at that exporter's port, that also will add. So that will be FOB price for the exporter. To that we'll have to first add some optional expenses, optional additions we have to do. When I say optional, what do I mean by that is, if these expenses are incurred, then they will be added. If these expenses are not incurred, then we will not add them. So what are the few things which are required to be added? Commission and brokerage, except buying commission. Buying commission should not be included. Packing cost also have to include it, either for incurring labor or material relating to packing cost, that has to be added, except the cost of durable and returnable packing. So if you are receiving any containers which are returnable or refundable, that you should not add. The cost of the containers which is not returnable, which is not refundable, that cost you have to add it. Cost of engineering development plan or sketches, provided if that is elsewhere outside India, other than India, if that expenditure has incurred, that also we will add. Then royalties and license fees which are related, which are as a condition of sale, that we have to add it. Value of subsequent resale if payable to the foreign supplier. So if any condition is there as a part of sale, that should be added. And also value of the material supplied by the buyer either free of cost or at a reduced price, that also have to add it. The resulting figure, whatever you get, that we call it as FOB value for the purpose of customs. Now after this, to this value we have to compulsorily add two items, whether given or not given, we have to compulsorily add two items. One is freight, I call it. So what do you mean by freight? What and all will be included? When I say freight, here transport will be included, loading, unloading and handling charges up to the place of importation. So that actual cost of freight, or if not given, 20% of the FOB. In case of air freight, even though it is given, maximum we will add only up to 20% of the FOB. Then insurance cost, insurance also you have to add. If actual is given, actual we will take. If actual is not given, 1.125% of the FOB value as per the customs that we will determine. In addition to that, I told you to add the ship demurrage charges or vessel or chartered vessels, lighterage or barge charges. This also has to be added. And one important thing, this should not be added above, this should be added here. And I think I might have told you few things which should not be added. In that, one important point which you have to keep in mind, demurrage charges paid at the port. Port demurrage charges, we say it, that port demurrage charges should not be included. So that is one important point. That is where majority of the students will do the mistake. So this is what, this format you have to remember. Now, see, we'll try to do some questions, but before we do that questions, I have to clarify one more point for you. I have to clarify one more small thing for you. See, generally when you are importing, if you are a person in India, so you are a person residing in India, okay? So from US, you are importing some goods. You are importing some goods. So when an exporter is selling the goods to you, generally price they will mention in dollars. Yes or no? If you are importing from US, the seller will quote the price in dollars. Say for example, if you are importing some 1,000 quantity of the goods, the buyer has told the total 1,000 quantities will cost $1,000. He will quote the price in the dollars. And even international freight, when you are paying international freight, when you are paying international insurance outside of the country, if you are paying insurance and freight, that also will be in a foreign currency. That also will be in a foreign currency. But in India, we have to pay the customs where we have, when you are importing, you have to pay the customs in India. So to the Indian government, you have to pay the customs. And in what currency you have to pay the customs to the Indian government? You have to pay the customs in Indian rupees. In rupees, you have to pay. You can't go to the government and say, sir, I will pay the customs to the Indian government in US dollars. You can't say that. So you are ultimately required to pay the customs to the Indian government, and that payment has to be made in INR, Indian rupees. You have to make the payment. So whatever this FOB price, in many questions they will say FOB is $1,000. So like that they will say freight $200, insurance $40. So like that, in many questions you will find they will give you the quotation, they will give you the terms, the prices in foreign currency. In order to calculate what is the amount of the customs you are required to pay, these foreign currencies should be converted into INR. Whatever amounts that are there in a foreign currency, that could be dollar, that could be Japanese yen, whatever it is, if the prices, if the FOB value, freight and all have been given in foreign currency, in order to calculate the customs which is required to be paid to the Indian government, since we are required to pay the customs in INR, those foreign prices, those foreign values should be converted at INR. Now the doubt comes, sir, at which exchange rate I have to convert? What should be the exchange rate I have to take? So when I say here, say for example, if I am saying FOB is $1,000 rupees, so one thing you have all agreed, this is required to be converted into rupee. Sir, but at what exchange rate? At what exchange rate? So here there are a few provisions of the Customs Act which talks about this exchange rate. First I will tell you summary, then we will start the reading. So what exchange rate should be used? See, CBIC will release exchange rate, RBI also will release exchange rate. But the Customs Act has specifically mentioned you should take the exchange rate which is given by CBIC. So whatever exchange rate which has been given by CBIC, that exchange rate you have to take. That exchange rate you have to take. And on which date, sir, which date foreign currencies undergo changes each and every day? Which dates rate will be taken? So one thing is sure, we will not use RBI's rate, we will not use a bank rate, nothing we are going to use. We are going to take the reference of CBIC, exchange rate released by CBIC. But on what date? Which dates is the exchange rate you are going to take? So in the case of import, whenever you have submitted the bill of entry, whether for warehousing or for home consumption, whenever as an importer, whenever you have submitted the bill of entry either for home consumption or whenever you have submitted the bill of entry for warehousing, so whatever it is, whenever you are submitting the bill of entry, at that date, whatever exchange rate is there which is released by the CBIC, that exchange rate we have to take, and using that exchange rate we have to convert our foreign currency into INR. Able to understand? Clear and comfortable, everybody? So that is what a few provisions regarding exchange rate we have. So just I wanted to clarify on that one point, and then we will proceed further. Okay, so exchange rate we will see this one. So what is the date relevant for determination of rate of exchange? So rate of exchange, price of goods for customs duty calculated, is determined using the rate of exchange as on date when, in case of imports, whenever bill of entry is presented. Export, I will talk about it later. This you keep it aside. Exports, we will talk about it later because we are only concentrating now on imports. So in case of imports, which dates exchange rate you will take? Whenever bill of entry has been presented either for home consumption or for warehousing. So whenever that bill of entry is presented, on that date, whatever is the exchange rate that we have to take. Okay, in the question they will try to confuse you. They will say exchange rate as on the bill of entry, exchange rate when entry inwards has happened. Entry inwards in the sense whenever the ship has arrived, like that, something they will try to confuse. So they will say whenever the payment has taken place, multiple dates they will give. So I will show you some questions also. What they will say is they will give multiple dates. So they will say 3 dates. Like for example, in one case they say bill of entry has been presented on 15th of January. Entry inwards happened on 12th of January. Payment was happened on 20th of January. They will give exchange rate on all the 3 dates. Say for example, here they have given exchange rate as 85, here 84, here 83. So which exchange rate you have to take? You have to take exchange rate whenever bill of entry is submitted. What is the exchange rate on entry inwards date, on the payment date? All that doesn't matter. In the question, they will try to confuse you by dumping so many dates and all. Don't get confused. When it comes to exchange rate, the exchange rate prevailing whenever the bill of entry has been submitted. In the case of imports, that exchange rate we have to take. Understood? Next. The rate of exchange will be determined by CBIC, or it will be ascertained on the basis of CBIC's directions for converting Indian currency to
foreign currency or vice versa. So generally there are various authorities which will give exchange rate, like CBIC will give exchange rate, RBI will release exchange rate, Foreign Exchange Dealers Association of India, they will also release the exchange rates. But all this you ignore it. Which exchange rate we have to consider? We have to consider the exchange rate which is released by CBIC. Sometimes they will confuse you like this also. They will give what is the exchange rate given by CBIC, what is the exchange rate given by RBI, what is the exchange rate given by the bank, what is the exchange rate given by foreign associations. So like that, multiple exchange rates they will give. Don't get confused. For the purpose of customs, we are going to take only the rate which is given by CBIC. Next. And one more thing for imports. So this is one simple thing which we need to remember. For import, you have to take the selling rate. For export, you have to take the buying rate. So this you remember it. When it comes to import, you have to consider selling rate. When it comes to export, you have to take the buying rate. Basically, small margin will be there. Like for example, they are saying buying rate is 85.25, selling rate is 85.35. Some margin they will keep. So for imports, you have to take the selling rate. For exports, you have to take the buying rate. Next. Yeah. So this is what these are all. This anyhow we will do some illustrations, some examples. And one more note they are saying here, note on RBI's rate, RBI's exchange rate is not considered for customs duty purposes. Only CBI's rate will be used. Okay, right. So we know how to calculate the CIF value. We also know which exchange rate we have to take. So with the help of this background discussion, we'll try to solve some questions. So what I will do is whatever questions which have been given in our institute study material, that only I will use in order to make you understand the concept. Why? Because whatever critical things they are going to ask, that I have covered in the examples, that I will cover in the upcoming examples also. So we'll try to get the feel of the questions. We'll try to do it. So like here, if you see, determine the rate of exchange for the purpose of computation of customs duty in the following cases. So they're asking you to determine what rate of exchange you have to use for the purpose of computation. I will talk only on imports now. Later I will talk about exports. So when it comes to import, they have given different dates. Date of bill of entry. So what is the date of bill of entry? 20th of October. Date of entry inward, which is what? 15th of October. And on first, for this, as on this date, the exchange rate is 82 rupees. As on this date, exchange rate is 83 rupees. So now you tell me. And also they have given rate which is given by CBIC on that date. And what is the rate notified by RBI they have given. So which date we have to use? As I have told, in the case of imports, whenever bill of entry is submitted, on that date, whatever exchange rate which is released by CBIC, that I have to take it. So which rate I will take? 82 rupees will be my appropriate exchange rate for the purpose of imports. Okay, next. So since we got the hold of it, so let us try to do some illustrations now. Right. So here we have a few illustrations. So here they have given 3 cases. Compute the, what is the requirement? Compute the value of imported goods for customs purposes with the following information. So 3 cases they have given. Each case we will try to take it separately. First case, price actually paid to the seller, 10,000 rupees. So you can consider something it as FOB. So price paid to the seller is how much? 10,000 rupees is the price which has been paid. Cost of, okay, let us take the format. We'll do one format here. Okay. So first what they are telling, price they are giving. How much price has been paid? 10,000 rupees has been paid. Now they are giving some extra items. Cost of packing material. Should we add this? Yes, cost of packing material should be added. So packing material added 1,000. Sorry. So 1,000 rupees you add it here. Next. Sorry. Labor charges for packing. Will we add this also? Yes, we will add this also. Even whether material or labor, whatever you are incurring for packing cost, that you have to incur. So labor for packing. How much they are trying to say here? 200 rupees. Okay, that also we will add. Next, what else we have? Sorry. Price of material supplied to the seller by buyer free of cost. Should you add this or not? Yes, we have to add this. Remember the chart. Remember the additions. So material supplied free of cost, that should be added. How much? 1,000 rupees. Add it. Next, after that, cost of transport, insurance. This anyhow we have to do it separately. So first we have to determine FOB value as per customs. After making all the optional additions, you will get FOB value as per customs. Then we will see freight and insurance. So insurance and freight. In the first case, they have told freight actual amount has been given. Insurance is unascertainable. Even though insurance is unascertainable, as we all know, 1.125% of the FOB value as per customs we have to take. So we'll say about this later. Cost of transport and insurance. Local transport in India. Should you add this? No. Transport cost only up to the
place of importation, that transport cost only will be added. This should not be added. What is the mode of transport? C. So if the mode of transport is C, if actual transport cost is there, that actual we can take. Insurance 1.125% we will have to take it. So now, so here there are, apart from this, there are no optional additions. So if I calculate till here, how much value I will get? I am going to get 12,200. So this will be the FOB value as per customs. Now they are telling the mode of transport is water. If the mode of transport is water, no need to check that 20%, whatever actual cost is there, that you can take. So what is actual cost of transportation? 1,000. So freight you have to add it. Actual you can take 1,000. Oh, sorry, not this one. 1,000 rupees you have to add. Next, insurance they have told unascertainable. Insurance you can't ascertain. Can we ignore that? No. If you are unable to ascertain the insurance, what you should do? 1.125% of 12,200, that you have to calculate. Yes or no? So 1.125% of 12,200, if I calculate that, so just let me do that calculation part for you. Just I will keep the calculator ready. Okay. So 12,200 rupees into 1.125%. So if I calculate that, it is coming to 137.25. So if I add everything, so let us cross verify with the answer. So 137.25 rounding off they have done. Yes, 12,200 rupees plus 137 we will take. So if you do all that addition, 13,337 will be the value for the purpose of customs. Able to understand? Now let us come to case 2. In the case 2, what they have told, actual price paid is 20,000 rupees. So now if you start doing case 2, in the case 2, price paid is 20,000. Okay, we will start with that. Cost of packing material nil, labor charges also nil. So here there is no packing material labor charges, so nothing we will do. Next, price of material supplied to the seller by buyer free of cost, 500. So this we have to add. Next, what happened here? What is the mode of transport? Here also they are telling mode of transport is C. Local transport in India, this anyhow we will not add it, and this we have already considered. They are telling transport is also not ascertainable, insurance is also not ascertainable. Shall we ignore that? No. Till here you will get the FOB value as per customs, which will come to 20,500 rupees. Since a freight is not given, we will take 20% on 20,500. So if you calculate that, 20% on 20,500, which will come to 4,100. And also insurance also you have to calculate 1.125% on 20,500. If you calculate that figure, which will come to 231 rupees. So now that will be the value for the purpose of calculations of customs. So 24,831 will be the value for the purpose of customs. Now we have one more case also. Third case, price paid to the seller is 30,000. Okay, here it is 30,000 rupees. Then what extra information provided? Cost of packing material 500. This we have to add. Labor for packing material 300. This also we have to add. Next, price of material supplied to the seller by the buyer free of cost 2,000. This also we have to add. Now after adding all that, you will get the figure 32,800 rupees. This will be the value for the purpose of customs. So this will be the FOB value for the purpose of customs. Now freight. See here they are telling mode of transport is air. See if the mode of transport is air, even though the actual transportation cost has been given, they have given actual transportation cost as 12,000. But in the case of air, 12,000 rupees or 20% of FOB, whichever is lower. So what is the FOB for the purpose of customs here? 32,800. So now if you calculate 32,800 into 20%, if I do that math, it will come to 6,560 only. So 12,000 rupees or 6,560 rupees, whichever is lower, how much we will add? 6,560 only we will add. Did they give the insurance cost? Yes, insurance cost they have given 500. We will take the actual only. Here we need not do any 1.125%. So if you add that, the resulting figure will be the value for the purpose of imports, for the purpose of calculation of customs. So 39,860 will be the value for the purpose of determining the customs duty. Understood? Clear and comfortable? So this is one question. So let us try to proceed further and do some more questions now. So going forward with the next illustration, so let us try to solve few more. From the particulars given below, find out the assessable value of imported goods under the Customs Act 1962. So here also they are giving various details. They are asking us to calculate what is the value. First, cost of the machine at the factory of the exporting country. So once again, let us start with our format. So they have told X factory price. So nothing but at the factory of the exporter, what is the price they have given. So what is the price they have given at the factory? 20,000 US dollars. See, these prices are in dollars. So $20,000. Next, transportation charges incurred by the exporter from his factory to the port of shipment. Should it be included? Yes. Exporters a factory to the export port. That also should be added. No. So that is $1,000. Okay, let us add that also. So transportation cost from factory up to export port, which will come to $1,000. Okay. Next, handling charges paid for loading the machine in the ship. Once again, at the exporter's port, loading charges. How much? $100. Okay, this also we have to add. So this will be loading charges. So till here, you will get FOB value as per the exporter. Before adding, so once again, if you remember the chart, whatever chart we have drawn here, right? So this one, this is the price we are arriving. So they gave X factory price, freight from the factory to the exporter's port, and loading the goods at the exporter's port. So here you will get FOB value as per exporter before adding these optional additions. Okay, right. So once again, till here, how much it is? $21,100. Next, what happened? Buying commission. Now they are talking about optional expenditures or optional additions. Buying commission, should it be added? No. I told commission and brokerage, every kind of commission and brokerage can be added except buying commission. So this we will not add. Freight charges from exporting country to India. Freight. This anyhow we have to see it later. So that means apart from this buying commission, there is no other kind of additional expenses. So that means anyhow buying commission we will not add it. So there is no optional expenditure. So 21,100 will be the FOB value as per customs. But as I have told you, this amount has to be converted into INR. So what is the exchange rate? If you look at the question, they have given the exchange rate in the question itself. Exchange rate is 85 rupees. So you have to convert that 21,100 at 85 rupees. So if you do that conversion, it will come to 21,100 is the value. So here you can convert it, or even you can convert it at the end also, but better I will do the conversion here only. So better if you could do the conversion here. So 21,100 into 85 FOB value in INR. Okay. 27. 1 second. So before that we can do one more thing. Let us see. Okay, see, freight charges are also given in dollars. No, since the freight charges are also given in dollars, we'll do one thing. Freight also will add it in the dollars only. Okay, since in many questions what they will do is this freight they will give in INR. So in those cases, what will be the better thing is you convert here only into INR, then add the freight. But in the given question, what they have done is they have given the freight charges also in dollars. Let us add it here only. So freight also will add it in dollars. So what is the amount of freight they have given? Freight they are telling it as $2,000. So 20% I need to check here. See, in the question they did not mention anywhere it is air. If they did not mention anywhere it is a air transport, we will consider it by way of vessel. Generally we'll consider it as water or land. So unless they say it is an air transport or somewhere there is a hint in the question that it is a air transport, we will generally imagine as other than air only. Since the freight charges anyhow they have given it, we will take the actual, assuming it is other than by air. So once again I am telling you, if in the question they did not say anything about whether it is air or water or road, we will generally not imagine it as air. Unless they specifically mention, we will take the actual. If actual is given as it is, you can take it. So 2,000 freight you will add. Sir, apart from that, insurance also you have to add. No, but in the given case they did not give any information regarding insurance. Look at the entire question here, you will not be able to find any information regarding insurance. Sir, can we skip that? Can we ignore that? No, we can't ignore. Even though insurance is not given, we will have to calculate 21,100 into 1.125%. So that you have to calculate FOB value. So if you do that calculation, that will come to how much? So once again here anyhow answer is there. So 1.125% of FOB, if you calculate, it will come to 237.38. And freight anyhow this also we will add. Now you will get the figure CIF value will get it, which will come to 23,337.38. Now this has to be converted at 85 rupees. If you do that conversion, this is what the value, 19,83,677. Okay, right. Next, I'm proceeding further. XYZ Industries Limited has imported certain equipment from Japan at FOB cost of 4 lakh yen Japanese. The other expenses incurred by XYZ Industries in this connection are as follows. Okay, so now they are telling once again in the foreign currency, they have told FOB cost. What is the FOB cost? Now the currency is in Japanese yens, not in INR. So what they are telling, 4 lakhs. Okay, so 4 lakhs yens, Japanese yens. So we'll keep it as Japanese yens. Next, now they are telling expenses. Freight from Japan to Indian port. Freight we will see later. Freight we will do a separate edition. Freight we will do later. Insurance also we will see later. These are two are mandatory additions. No, these two we will talk about it later. Freight and insurance. Let us see whether any optional expenses are there. Designing charges paid to consultancy firm in Japan 60,000. Should we add this or not add this? I told design, development, plan and sketch related expenditure if incurred outside of India, we have to add it. So here also they are telling designing charges are paid to consultancy firm in Japan 60,000. Yes, this has to be added. So add designing charges. That 60,000 Japanese yen, that also should be added. Next. XYZ Industries Limited has expended 2 lakh rupees in India for certain development activities with respect to the imported equipment. Should we add it? No. Design development charges incurred in India should not be added. This you have to ignore it. XYZ Industries has incurred road transport costs from Mumbai port to their factory. After importation from the Mumbai port to the factory, they have incurred some freight charges. Should we add this? No, they should not be added. Now they are talking about exchange rate. CBIC has notified exchange rate as 1N at 0.69. The interbank rate was 1N is equal to 0.7. And Mr. XYZ Industries has affected the payment to the bank based on exchange rate of 1N at 0.71. I told they will give you multiple exchange rates to confuse you. Ignore everything. Whatever CBIC rate is there, that only we have to consider. So appropriate exchange rate is 0.69. Okay, exchange rate. When we have to convert it, we have to use the exchange rate of 0.69. Next. The commission payable to the agent in India was 5% of the FOB cost of the equipment in Indian rupees. So whatever 5% of the FOB cost is that. So on that 5%, you have to pay that on your FOB 5%, you have to pay it as commission. Did they say anywhere it is a buying commission? No. If they don't say anywhere it is a buying commission, we will not assume it. Unless they say buying commission, we will consider it as other than buying commission only. That should be added. So what they are telling, 5% of FOB. How much is 5% of FOB? 4 lakh rupees. So in that 4 lakh, if you calculate 5%, you will get the commission. So commission amount will come to 20,000. So this 20,000 Japanese yens commission you have to add. So how much? 20,000 Japanese yens commission you have to add. So these are the only optional expenditure. Any extra information is there? No, no extra information is there. So this is the optional expenditure which has to be added. Now if I add everything, so it will come to 4,80,000 Japanese yens for the purpose of FOB value as FOB value as per customs. So as per customs, FOB value comes to Japanese yen 4,80,000. Next. Now we have to add two mandatory items. One is a freight from Japan to Indian port and insurance paid to insurer in India. See, insurance figure, actual figure they have given. This insurance figure as it is we will take. Insurance figure in INR they have given. So we will take the insurance figure in INR. Since insurance has been given in INR, let us do one thing. Here only we will convert it. Here only we will convert it into INR. Okay. So let us do the conversion. So which rate we have to take? So in the question we have already marked the rate of 0.69 we have to take. So if you do that conversion, so let me do that conversion for you. So 4,80,000 into 0.69. If I do that, it is coming to 3,31,200. INR will come to 3,31,200. Now to this we have to add the freight. Now that and we have to add insurance. See, insurance cost directly they have given. If insurance is given, actual we will take. So 20,000 rupees of insurance we will take it. Now they are talking about freight. How much is the freight they are telling? Freight from Japan to Indian port is 40,000 yen. How much? 40,000 yen. So did they say anywhere in the question the transportation is happening by way of air? No, they did not mention anywhere the transportation is happening by way of air. So we will imagine this is not by way of air and actual freight we will take. Actual freight itself we will take. So what is actual freight? 40,000. So anyhow, since we have already converted that into INR, so this 40,000 rupees or this 40,000 yen also let us convert into INR. So 40,000 into 0.69, if you do that math, which will come to 27,600. So freight actual we will add it. So 27,600 we have to add. So which will come to 800. Here also 8, 7, 3,78,800 rupees will be the value. See, here there is a mistake in the answer. Here actual freight they have given in the question as 20,000 rupees, but I don't know from where they have got this 10,000 rupees of insurance. This is a mistake in the material. This is a mistake in the material. You can ignore this. So you can stick with this answer. So as you could see here in the answer, whatever they have solved, they have added the actual insurance cost as 10,000. Yes or no? They have done that, but that is not right. In the question, clearly they have given insurance paid to the insurer in India is at 20,000 rupees. 20,000 they should have added it here. Okay. So that's why this answer is wrong. Actual answer is 3,78,800 rupees. Mistake in the answer. Fine. Right. So let us proceed ahead. Now, let us proceed further now. How shall your answer differ if the information regarding freight and insurance are not available? Now, they are changing the facts. Let us keep the question as it is. Just imagine if the freight and insurance is not given, then what will be your answer? Till here, everything will remain the same. So till here, actual value will FOB as per customs value will come to INR 3,31,200. If the freight is not given, what we will do? 20% we will add. 3,31,200 into 20%. If you add it, which will come to 66,240. If insurance is not given, here we will take 1.125% of the FOB value as per customs. On this 1.125% we will multiply, which will come to 3,726. Then our valuation will be 4,01,166. This will become our value on which you are required to pay the customs. Understood? Next. Let us come to the next question. BSA and Company Limited have imported a machine from UK. From the following particulars furnished by them, arrive at the assessable value for the purpose of the customs duty payable. Once again, they have given various information. From that, we have to calculate what is the value. Okay, let us see. FOB cost of the machine. How much? UK pounds. The currency they have given in UK pounds. So what is the FOB value? 10,000. Not FOB value as per customs before adding all the additions and all. Before that, the value is 10,000. Okay, let us take it. FOB of the exporter. How much? UK pounds. UK pounds 10,000. Very good. So now we have to add any optional additions. Let us see whether anything is there. Freight is by air. We will do it later. And clearly they have mentioned they are doing the transportation by way of air. That actual freight they have given. But we know that in case of air, 20% restriction is there. That we will anyhow see later. Engineering and design charges paid to a firm in UK. Should this be added? Yes. Engineering design charges incurred outside India should be added. 500 you add it. Design and engineering charges 500 UK pounds you have to add it. Next. License fee relating to imported goods payable by the buyer as a condition of sale. Should we add it? Yes, we have to add this. And this one is 20% of the FOB cost. That means on this 10,000, 20%. If you calculate that, how much it will come to? 2,000. So that license fee and all, 2,000 rupees that you have to, $2,000, 2,000 pounds, sorry, that you have to add. Next, material and components supplied by the buyer free of cost. Should this be added? Now this is in INR. Now this they have given in INR. So we can do one thing. What we can do is till here we can convert. After that, all they have given it in INRs only. So till here we can do the conversion. But once again, I am telling FOB value as per customs, we have not yet arrived it. FOB value as per customs, we have not yet arrived it. So till here, or else even you can do one more thing. You can simultaneously calculate the INR also. You can have a column here. I will calculate in INR. So, but for that we need to know exchange rate. Let us see what exchange rate they have given. Interbank exchange rate as arrived by the authorized dealer is 102.5 per UK pound. CBIC has notified for the purpose of section 14 of the Customs Act exchange rate as 100.25 per UK pound. So which one you will take? Will you take the exchange rate fixed by authorized dealer or will you take the exchange rate fixed by CBIC? You have to take the exchange rate fixed by CBIC. So what you can start doing here is simultaneously one more column you can take. So you have to take 100.25. So let us do the conversion. Let us do that conversion now. So 10,000 into 100.25. So which will come to 10,02,500. 10,02,500. Next 500 into 100.25. So which will come to 50,125. Next 2,000 into 100.25, which will come to 2,05,500. That only, 100.25 only, right? Yeah, 100.25. Next, okay. So now instead of doing the addition, let us see whether anything extra is there. What else is there? Insurance paid to the insurer in India. So this we will see later. But this components is there, no? Material and components supplied by the buyer to buyer free of cost value. This 20,000 also should be added. So this they have directly given it in INR only. This material cost 20,000 rupees we will add. Insurance we will see later. So after deriving the FOB value as per customs, then we will add the freight and insurance separately. Anyhow, freight actual they have given, actual we will take. Buying commission paid by the buyer to his agent. Buying commission, should you add it? No, we should never be adding it. Buying commission should not be added. So till here if you calculate, that will become the FOB value as per customs. How much that will be? How much that will be? 1,02,500 plus 50,125 plus 2,05,500 plus 20,000. So if I do all this math, it is coming to 12,73,125. So let us cross verify. Is it the same here? Yes, 12,73,125. This is the FOB value as per customs. Now we have to do addition for freight. But here the freight is by air. What is the actual freight they have given? What is the actual freight they have given in the question? Actual freight they have given 3000 UK pounds. So when I do 3000 UK pounds, when I do that conversion into INR, but actually 3000 into 100.25 is the appropriate exchange rate. So 3000 rupees into 100.25. So which will come to 3,750,000 or 20% of FOB, no? Or 20% of 12,73,125. 12,73,125 into 20%. So if I do that calculation, which is coming to 2,54,625, whichever is lower, that only we have to take. So 2,54,625 only I will take. Why? Because whichever is lower, that we have to consider. So even in the answer, you will be able to find the same thing, 2,54,625, that only you have to consider. Why? Because in the question, they have clearly given error. Next. After that, we have to take insurance. Insurance, you need not do any math. Why? Because insurance cost they have given directly. So 6,000 they have given, no need to do that 1.125%, that 6,000 rupees you have to add it. So resulting figure you will get, so plus 12 lakh 70, total value you will get 125 plus 6,000, which will come to 15,33,750. This will be the total value for the purpose of calculating the customs duty. Yes or no? So let us cross verify with the material. So yeah, 15,33,750. So this is what the value even we have also got. Now, so we have one more question. X Limited imported goods from Switzerland 400 units at $110. Further information is also needed to be considered. They have given, so first FOB price they have given. So what is the FOB price? So once again, let me start doing the math here. FOB price. So how many quantity they have imported? 400 quantity at 110. So if you multiply that, the figure you will get is 44,000. Now to this, we have to add additional expenses first. Optional additions we have to do. What are they? Freight, we will see the treatment later. Vessel they have given. So actual we will take. Demurrage charges paid to port authority. What did I say? Ship demurrage charges you will add it. But here it is a demurrage charges paid to port authority. For port I have paid the demurrage charges. It should not be added. It should not be added. Insurance, actual cost they have given, but anyhow insurance later we will see. Apart from that, any optional additions are there. Royalty for use of patent, should we add this? Yes, we have to add this. Royalty related to sales, that also we should add. How much it is? They are telling $1,000. Okay, 1,000 we will add. And not just that, royalty as a condition of sale, this also we have to add. If it is a condition of sale, that $20,000 also you have to add. So resulting figure, whatever you get, that will be the FOB value for the purpose of customs. So what will be the FOB value? 44 plus 1 plus 65,000 will be the $65,000 will be the customs value. Exchange rate also they have given. This 82 is the exchange rate. But anyhow, freight and insurance is also given in dollars. So actual we will take. Anyhow, we have to take the actuals only. So freight you can take. Freight is how much? $5,000 as it is we will take, because it is by way of vessel. Then they have given insurance. This also actual we will take 50. So if you do all that addition, the amount will come to $70,050. This has to be converted at INR at 82 rupees. You will get 57,44,100. That will be the assessable value for the purpose of calculation of customs duty. Clear, everyone? So now let us come to the next illustration. Illustration number 8, we will try to do. C Limited, an importer, has imported a machine from USA at FOB cost of $10,000. So FOB cost they have given $10,000. Okay. Freight from port in USA to Indian port. So anywhere in the question, I think they did not give. This is a air transport. So we'll consider it as water vessel transport only. So freight they have anyhow given. So actual freight we will take. Anyhow, freight adjustment we will do it at the end. Insurance was paid to insurer in India, 6,000 rupees. Actual only they have given. This also actual we will take. This freight also actual only we will take. Design and development charges of 2,000 were paid to a consultancy firm in USA. Should this be added? Yes, this has to be added. So design development charges incurred outside India, that you can add it. The importer also spent an amount of 50,000 in India for development work connected with the machinery. Should you add this? No, you should not add this. 10,000 were spent in transporting the machinery from the Indian port to the factory of the importer. No, this we should not add it, because this is a post importation charges. Rate of exchange as announced by RBI was 84.7. Rate of exchange as announced by CBIC was 85.60. Rate which bank recovered the amount from the importer was 85.3. So which rate you have to take? CBIC rate I have to take 85.60. At this rate you have to convert. Next, foreign exporters have an agent in India Commission is payable to the agent in Indian rupees at 5% of FOB price. So did they say anywhere buying commission? No, it is not a buying commission. So this commission you have to add it. So there is no nothing 20%, 1.125%. That interpretations is also not there, guys. So whatever we have to add, that you have to add. Whatever I told you ignore, that you should not ignore, that you have to ignore. And finally, whatever figure you got, that you have to convert it at 85.60. You will get the value for the purpose of customs. Very simple. I think you can manage the answer because multiple kind of questions we have done. Similar questions we have done multiple times. Next. Let me see whether any other illustrations are there. These are yet to be discussed. These we have not yet discussed yet. Then whether any other illustrations are there, that I will try to see. Okay. These concepts we are yet to discuss. There should be some questions. I was looking for that. Yeah, this one is there. This is also one simple question. From the under mentioned relating to import made on 12/10/2024 of product Mimic from Newark, USA to the Kochi airport by Mr. Prahalad, the importer, details they have given. They are asking us to calculate assessable value also. They are even asking us to calculate the tax and also duty payable by Mr. Prahalad. Anyhow, let us come to the details. So airport they have told, Kochi airport. That means that these are transportations happening by way of air. In the question itself, they have told us. Okay, let us see what else we have. So FOB value is $10,000. Okay. Cost of transport they have given 3,500, but we have to check 20%. We have to restrict it to 20%. That calculation we'll do later. Insurance actual cost they have given. We will take it. Unloading charges at Kochi airport. Should you take this? I told no. Unloading charges after importation, after the place of importation, you should not include it. So unloading charges at Kochi airport, this should not be considered. So basic customs duty is a 10%, IGST is 18%, exchange rate notified by RBI is 84.5, exchange rate notified by CBIC is 84. Which one we will take? This we will take. So very simple question, nothing. So this will become FOB value. Why? Because there are no additions. So 10,000 will become FOB value. So what is the freight? They are telling actual freight is 3,500, but since it is by air, so either 3,500 or 20% of the FOB. What is FOB value? 10,000. Which will come to 20% of 10,000, which will come to 2,000. So 3,500 or 2,000, whichever is lower. Which one is lower? 2,000 is lower. So 2,000 freight we will add. Insurance actual one we will add. 1,000 we will add. So a CAF value will become 13,000. And this has to be converted into INR. Which rate we will use for conversion? 84 we will use for conversion. So if you convert that, 10,92,000 rupees. So assessable value is how much? 10,92,000 rupees. Okay. Now, what and all taxes you are required to pay? So as I have told, basic customs duty you have to pay. What is the rate they have given? The rate of customs duty in the question they have given it as 10%. Okay, multiply that. On 10% we will calculate. If you calculate that, 1,09,200. Then we know social welfare surcharge will be there at the rate of 10%, which has to be paid on basic customs duty. So if you calculate that, 1,09,200 on that customs duty 10%, if you calculate, which will come to 10,920. That will be the surcharge. So sorry, social welfare surcharge. Now if you add everything, that will become the value for the purpose of calculation of IGST. So even they have given IGST also, IGST information also they have given. So you have to charge IGST also. But on what value you have to calculate IGST? After including all the customs. After including all the customs. So after adding all these three things, what will be the figure? The figure will be 12,12,120. So 12,12,120. This will be the value. IGST at the rate of 18% is required to be paid on here. On this value 18%, if you calculate, the amount will come to 2,18,182. So I'm not doing all the math. 2,18,182. So total this amount also you have to pay. Sir, you are required to pay compensation cess also. Yes, you are required to pay compensation cess also. But anyhow, they did not give any information regarding GST compensation cess. What is the rate of GST compensation cess? All they did not include in the question. So even we will not do that calculation. We'll stop our calculation with basic customs duty, social welfare surcharge, and IGST. Yes, even GST compensation cess is also required to be paid, but no information they have given in the question regarding the GST compensation cess. So we will ignore that. Next. Okay, so here we will do. Here also I disagree with the answer. Here on one small point I will disagree with the answer. Okay, so what I will tell you, why I am disagreeing, I will tell you. Yes, so regarding this treatment, regarding this local agents commission, I have a small disagreement. So first let us solve the answer in our way, whatever we have learned. Okay, so illustration number 14. Compute the assessable value of a machine imported from Germany by RLI Limited under Customs Act 1962. So they're asking you to compute the assessable value. Also determine duty liability. They're also asking you to calculate the duty liability. So figures are given in US dollars. So FOB value, how much? 30,000 rupees. Air freight. So actual freight they have given, but as we all know, since it is a air freight, it will be restricted to 20% of FOB. So we have to calculate what is the FOB value for customs. That we will do later. Insurance cost they have told not known, so we have to calculate it at 1.125% of the FOB value for the purpose of customs. So what we will do, first we will start with FOB value. How much is the FOB value they have given? So FOB value they have given it as $30,000. 30,000. Okay, very good. Freight and insurance will do adjustment at the last. Designing charges incurred in India. What you will do? Will you add it? No, you will not add it. So we'll do one thing. Since even all the expenses are also given in INR only, apart from this air freight and all. So what we will do is we will convert it. We will convert into, we will maintain one separate column. So US dollar we will maintain, INR also we will maintain. But for that we need to know exchange rate. Let us see what is the exchange rate. So rate of exchange notified by CBEC is 85. So this we will convert. So this 30,000 rupees at 85 we will convert. So if I do the calculation, so 30,000 rupees into 85, if I do the math, it will come to 25,50,000 rupees. Okay, very good. Next, what extra information has been provided? Indian agents commission. In India, they have paid some commission to the agent. How much? 20,000. Did they say anywhere it is a buying commission? No, they did not say anywhere it is a buying commission. So we have to add that commission also. We have to add that commission. In INR only they have given. What is the commission they have paid? So commission they have paid 20,000 rupees. So 20,000 rupees of commission directly in INR they have given. That only I will take. Next, transportation charges from port to factory in India. Should you include that? No, we should not consider it. Then they have given what is the rate of duty, what is the IGST they have given. Apart from that, nothing else. So my FOB value for the purpose of customs, my FOB value for the purpose of customs, it will come to how much value? 25,70,000. This will be the FOB value for the purpose of customs. Now they have given freight. What is the actual freight they have given? Actual freight they have given it as 7,250. So if you start converting it, 7,250 into how much dollars? 85, or 20% of FOB value on customs, 20% of 25,70,000, whichever is lower, that figure we have to consider. So if you do that calculation, 7,250 into 85, 7,250 into 85, which will come to 6,16,250, or 20% of 25,70,000 into 0.2, which will come to 5,14,000. Whichever is lower, that we have to take. So we will add only 5,14,000. That will be the freight. Then we have insurance. Insurance we have to calculate it down. 25,70,000. That will be the FOB value as per customs. 25,70,000 into 1.125%. If you multiply that, so 25,70,000 into 1.125%. If I add that, the figure will come to 28,912. I will do it to 913. Rounding off I will do. So now total assessable value for the purpose of customs will be 25,70,000 plus 5,14,000 plus 28,930. So total value is going to come to 31,12,930. So on this customs duty at the rate of 10% you have to pay. So if you calculate that 10%, which will come to 3,11,291. On that 10% social welfare surcharge you have to pay. So which will come to 31,129 rupees. Now when you add all this, so if I do all that math once again, so 31,12,930 plus 3,11,291 plus 31,129. So this will become my assessable value, 34,55,333. on this IGST at the rate of 18% also has to be calculated. So if I do that also, it will come to 6,21,960. So total this GST also you're required to pay. So after adding GST, the value will come to 34,55,333, which will come to 40,77,293. This will be the value inclusive of GST. But in the question, if you look at it, in the answer, if you look at it, the things will be a little bit different. The GST figure and all will look a little bit different. So if you see here, correct only. So I got 6,21,960, but here they got 6,21,116 only. And even on customs also, there will be a little bit of difference. For our calculation, we got 3,11,291 is the customs, and social welfare surcharge will be this much. This is what actually correct. But why here, as per the institute material, you have got the wrong answer is, so do one thing here. If you look at the answer, see, for the purpose of customs, FOB value for the purpose of customs, to that, even that commission should be added. No, that is what even the format they have given in the study material. Here, what they have done is, before adding that commission only, they have taken the FOB value. But as per the format which they have given in the study material itself, what is the format they have told? Commission should be added. After adding that commission, the resulting figure, whatever we get, that will be considered as FOB value for the purpose of customs. So on that, you have to multiply that 20%. On that, you have to multiply that 1.125%. That is what even we have done in the answer. So FOB value to that commission, optional addition that we have to do, the resulting figure we get, that is the FOB value for the purpose of customs. But in the answer in the study material, what they have given is, they have given FOB value, this itself they have taken it as FOB value. $30,000 only they have taken it as FOB value. They did not do that adjustment for commission. They did not add that commission part. So this is what I disagree. I don't agree with this answer. Why? Because the format itself they have changed here. Commission also should be added. That will become the FOB value as per customs. On that you have to multiply that 20%. On that you have to add that 1.125%. So that's why the figures whatever I have given here and the figures whatever the in the study material they have given, those are different actually. Understood? Clear and comfortable? Yes, here and there these kind of mistakes in the study material is there here. But yes, this is what the correct answer. This is what the appropriate answer. Okay, right. Sir, what to follow in the examination? Yes, you can write this answer in the examination. You have to write this answer in the examination only. But unfortunately, if this question is as it is tested, if this question, so I will tell you why this is wrong. I will tell you why, because we will have one more question. We'll have one more question. If you look at that question, no, they have, there will be some other question, right? See, if you solve this question, here they will do whatever we have done. Commission payable to, in this question also you will find commission, but here they have done it correct only. Like if you see price of the machine, then they have added design and development charges. To that they have added commission. Then they have determined FOB value as per customs. On that they have multiplied 20%. On that they have multiplied 1.125%. See, two questions, different treatment they have done. See, if you read the facts, this question I will do it as, I will give it to you as, I will ask you to solve it on your own. Whatever I have done now, whatever we have solved it like this, in the same manner they have solved it. Same facts, everything is same. But here they have added it, here they have considered that local commission for the purpose of FOB value as per customs. But in another case, they have ignored it. They did not add it to the FOB value as per customs. Two same questions, but different treatment. Yes or no? So I don't personally believe this answer is correct. So why? Because anyhow we have similar question, illustration number 16 we have, which is a very similar question. There they have in fact added that commission to the price of the machine for the purpose of calculating the FOB value as per customs. On that they have multiplied that 20%, and on that they have multiplied 1.125%. So this answer will be correct, but this answer is not correct. Same point, two different treatments they have done in the answers. So this I don't agree. So this you can follow. This answer you can follow. Okay, clear and comfortable? Right. So this is what regarding this question. So this question you solve it. See this, you can download the material from the ICMA website and all. So there you can get all this study material. From there only I am solving the questions. Yes. Next. See, this is also one more straightforward question. So this is also just you have to follow the format. This also I would suggest you to solve this once, because we have done multiple questions. Everything if I do, you will not get that practice. This is same as it is. We have done so many kind of questions. Just that format is there. No, you have to fill that format. So the most important thing here is you have to remember this format. That is the only thing. This format you have to remember when, at which point of time, what will be added. If you remember this format, Everything is so damn simple. Okay, so just this question, this illustration number 17 is just like filling of this format only, filling it at the respective places. So this also you try to solve it on your own, you can easily crack it. There will not be any confusion here. Okay, so one thing which you have to keep in mind is this light rate charges. Everything else will remain the same, but as we have seen in the format, light rate charges will not be added here. Light rate charges will not be added here. Light rate charges will be added here. Ship demurrage charges and light rate charges will get added after freight and insurance. There you have to add it, not in the FOB value as per customs. So that's why I insisted at the time of explanation of this table also. So this ship demurrage charges and light rate or barge charges should be added after making that freight and insurance adjustment. At that point of time you have to add. So that is the only new thing here. Nothing else you will be able to find it. Yeah, that's it. See here, they have added here, add light rate charges paid by the importer at port of importation. They have added this here. That is the only one thing which you have to be careful about. This should not be taken into FOB value as per customs. Everything else will remain the same. So this also you can solve it, just filling the table. Okay, so these illustrations are enough regarding the concepts, whatever we have learned in the valuation, but we have valuation rules to discuss. I have completed that calculation of assessable value, but we have some valuation rules, or rule 3, rule 4, rule 5, rule 6, rule 7, and rule 8. So some 8 rules are there for the purpose of valuation relating to imports. So that valuation rules, we'll try to do it in our next class. Hey my dear students, welcome back. Let us resume our discussion. Today we are going to complete our entire customs related discussion. So if you here and there a few concepts are left out for your examination, so if we are done with that, an hour of discussion, somewhere around an hour of discussion is left. If we are done with that entire customs portion, we would have completed 10 marks of weightage we would have covered. So before I proceed further, let us try to have a quick look of what and all we have understood in our previous session, so that we will try to have a quick look. So in fact, in the previous session, we did not discuss anything new. In the previous session, we have solved the questions on valuation. So valuation related rules, we have discussed it in before session. So, and in the previous session, what we have done is we have solved some questions in order to get a feel of the exam, how the questions will be tested, what order you have to follow, and all we have seen. So if I give a quick recap of the valuation, how you are supposed to do the valuation. First, you have to start with the price, ex factory price you have to take. To that ex factory price, you have to add the transport from the exporter's factory to the exporter's port, loading charges at the exporter's port, that also you have to add. The figure which you get, that we call it as FOB for the purpose of exporter. To that you have to make optional additions if incurred, like commission, brokerage, packing, returnable materials, containers, all that things we have covered. Optional additions you have to add. So if you do all that, then you will get the FOB value as per customs. So to this you have to add the freight. If actual is given, that actual we will take. If the transport is by way of air, even though actual has been given, we will restrict it to 20% of the FOB value. If it is not given, if freight is not ascertainable, directly we will take 20% of the FOB value. And in addition to that, insurance also we have to add. If actual insurance value is given, that actually we will take. If not given, 1.125% of the FOB we will take. And here I have told you to add one more thing: ship demurrage charges, right? Light rate charges, barge charges. So that thing also you have to add. Then the figure you get, which we call it as CAF, cost, insurance, and freight, which we also call it as assessable value. On this value, we will calculate the rate of customs duty, and accordingly we will determine our duties. And one more important key takeaway from our discussion: when you are converting the foreign currency into INR, you have to take the exchange rate. For the purpose of imports, you have to take the exchange rate which is released by CBIC, and on which date? On the date whenever the bill of entry has been submitted, that date's exchange rate we are going to take. So this is what the main discussion. Yesterday 1 hour of time we have spent on applying that concept in the questions. So that's what we have done. Now let us try to understand few more things. Now next concept which I'm going to explain is valuation rules. There are some valuation rules we have to understand. There are valuation rules for imports also. There are valuation rules for exports also. Exports we will see later. Exports hardly it will take 5 minutes. We don't have any questions to solve for exports also. But when it comes to valuation rules relating to imports, we have to discuss here. We have some significant discussion. So first I'm going to talk about valuation rules. And rule 1 general will be there. Rule 2, rule 1 definition, rule 2 applicability. So like that, some things will be there. Rule 1 and rule 2 are not relevant. So we have to discuss now from rule 3 till rule 9. These rules relating to custom valuation rules, that to import rules. From there also rule number 3, from rule number 3 till rule number 9. So this is going to be important. Okay, so now let me try to list out what does this rule talk about. So rule number 3 says that in order to determine the value of the customs, in order to determine the value of the imports, you have to take the transaction value. So rule number 3 talks about transaction value. What should be the value? They say transaction value. I will talk about the each rule in a detailed manner, but just let us get an overview. Then we have rule number 4, which says identical goods, which talks about identical goods, not identical, I guess. So let me show you the order. Right. Yeah, identical goods. Rule 4, we have identical goods, value of identical goods. Then we have rule 5, value of similar goods. We have rule 5, which is talking about determining the value of similar goods. Then we have rule 6. I will talk about this rule 6 later. Once we understand the methods, then you will get to know. Rule 7 talks about deduction method. Rule 7 talks about deduction method. Rule number 8 talks about calculation method for determining value. And rule number 9, we have something called residual method, we call it, or even best judgment assessment also we say. I will talk about it later. So I'm not explaining any concept, just I'm going to list out the rules which we are going to see. So what does valuation rules say? Valuation rules for the purpose of imports, mainly we have to concentrate from rule number 3 till rule number 9. What does each rule talk about? Rule 3 talks about transaction value. Rule 4 talks about value of the identical goods. Rule number 5 talks about value of the similar goods. Rule number 6, I will explain that later. Rule number 7 talks about deduction method. Rule number 8 talks about calculation method. And rule number 9 talks about residual method. So first I will pick up rule number 3, which is talking about transaction value. Sir, what is this transaction value? See, this transaction value, we have already used it in the concepts, whatever we have solved, we have already used the transaction value. See, everywhere I was saying that FOB price, the exporter is exporting the goods and FOB price of the goods is at 10,000. Basically, say for example, $10,000. There is an importer in India. He's buying the goods from US. The US exporter has told that FOB price is $10,000. So what do you mean by that? This 10,000 rupees is the transaction, is the value at which the transaction has taken place. This import transaction has taken at a value of $10,000. This is the price quoted by the exporter to the importer for the purpose of buying of the goods. So that value we call it as a transaction value. That value we call it as what? Transaction value. The price, the transaction, the value at which the transaction has taken place between the importer and exporter. See, in the previous sessions, whenever we have solved the questions, in the question itself they have told ex factory price or FOB value. They have told it in the question only. So that itself we have taken it as starting point for the purpose of calculation. But what does rule number 3 says is, so rule number 3 says that whenever import export transaction has taken place, you can take the transaction value, the starting point, you can take the transaction value itself as the value of the transaction. Like for example, if in the question they have told that FOB, the transaction has taken place at an FOB of 10,000. So this transaction value you have to start with. This is from where you have to start calculating the value of imports. But what does rule 3 say in a detailed manner is, rule 3 says two things. The transaction might have been importer and exporter, the parties to the transaction, may be related parties, may not be related parties. The transaction value, the transaction whichever is taking place between the exporter and importer, we have to see the relationship. If importer and exporter both are not at all related, they don't have any kind of relationship between them. If that is the case, in that case, whatever transaction value has been given, that transaction value we can consider, we can accept it. If the importer and if the exporter, they are not related parties, they are not related with each other, then you can consider the transaction value as acceptable, and on the basis of that transaction value we determine the CAF value, and on that basis we calculate our customs duties when both are not related. But in case if the transaction has taken place between related persons, if I came to know that say for example there is a person in India, he wants to buy the goods from US from an exporter. Now this exporter has sold the goods to this importer. They told that the transaction value is 5,000 rupees. But if it was found out that this importer and exporter both are not independent parties, both are related persons, then the act says, then obviously no. Then do you think whatever price that has been quoted between the related persons, do you think that will be acceptable in general circumstances? No. Because when two parties are related, the transaction might not happen at the fair price. So that's what even the Customs Act also says. In case if the importer and exporter, they both are related persons, we will not consider the transaction value. We will not accept the transaction value. If the exporter is saying 5,000 rupees is the value for the transaction, we will not take this 5,000. We will not consider this. Why? Because this might not be a better representation, because you both have related. Some influence might have been there. So Customs Act also says here we will not accept the transaction value for the purpose of valuation. Here you have to follow some other methods. Here you have to follow some other methods. Sir, what are that other methods? You have to start following the methods from rule number 4 to rule number 9. You have to determine the value on the basis of rule number 4 to rule number 9. So in case if the importer and exporter are not related persons, no need to go to 4, 5, 6, 7, 8. That rules you need not refer. Whatever transaction value is there, that itself we will consider it as value. That itself the customs authorities will accept, and that will be used for the purpose of calculation of the customs duties. But however, if both are related persons, then the customs authority says we will not accept the transaction value. You have to determine the value separately according to the subsequent rules. But here the act says one more thing. Here the act says one more thing. What exception they have given here is, say for example, if the transaction is taking place between importer and exporter, but both are related persons. But if the importer is able to prove to the custom authorities, if the importer is able to prove it to the government basically, that even though they are related persons, that did not had any impact on price. If you are able to prove to the customs authorities, boss, yes, agreed, importer and exporter, we both are related, but our relationship did not had any effect on our price, the transaction value is genuine, there is no influence in determining the price. If you are able to prove it to the customs authorities, then they will accept that transaction value. But in normal circumstances, government will go with the assumption whenever the importer and exporter are related, transaction value is not acceptable. But if you are able to prove it to the government, sir, we are related, agreed, but price is not influenced by our relation. If you are able to prove it, then the government might accept that transaction value as the starting point. Understood? But here you will get some doubts. Sir, who is a related person? Who is a related person? When we will consider two entities are related, it will be very similar to the definition of related person, whatever we have seen it under GST. Okay. So now first we will try to cover rule 3. After that I will talk about rule 4 to 9. So first let us try to read it. What does rule 3 exactly say? So let me come to rule 3 here. Yes. See here. Rule 3. What does rule 3 say? Transaction value is accepted if the following conditions are met. If they are giving you certain conditions, if that conditions are met, the government will accept that transaction value. What are the conditions? Sale occurs in the ordinary course of trade under fully competitive conditions. It is not a transaction beyond ordinary course of business. It should be a transaction within the normal course of business. As per routine terms and conditions, the transaction should have taken place. No restrictions on the use of the goods by the buyer, except for legal or public authority restrictions or restrictions on resale geographical area, or that don't substantially affect the goods value. Similarly, what government also says is, if the transaction is taking place between two parties, then transaction value itself will be accepted when these goods are getting sold. There should not be any restriction. That means exporter should not say, hey, I am selling you the goods. No, after you have purchased the goods from me, you can use it only for limited purposes. That kind of restrictions should not be there. However, they can have restrictions like geographical restrictions. They can have resale related geographical restrictions they can keep. Like an exporter can say, boss, I'm selling you the goods. You are an importer. I will sell you the goods only if you are, but I will give you permission to resell the goods only in the area of Hyderabad. So that restriction is acceptable. Why? Because they might have, these foreign entities might have agents. They will give geographical specific selling powers. So that restriction they can keep. If that restriction is there, still you can take the transaction value as acceptable, or those conditions which don't substantially affect the goods value. Okay. So first condition, sale should have happened in the ordinary course of business under fully competitive conditions. Number 2, there should not be any restriction on the use of the goods by the buyer, except for legal or public authority restrictions or restrictions on resale of geographical area, or those conditions which don't substantially affect the value. Similarly, the sale is not subjected to conditions that make it difficult to determine the value. So once again, it is related to conditions only. This sale should not be made under so many complicated conditions where determining value becomes very complicated. It should not be like that. Any proceeds from resale or use of the goods by the buyer are not shared with the seller unless an appropriate adjustment is made. Or in case if the exporter has sold the goods to the importer with a condition that whenever you are making a subsequent sale, you have to share that money with me. then also transaction value is not acceptable. But when it will be acceptable is you have to adjust that once again. Subsequent sale, whatever you are sharing with the exporter, that you have to add it back. That's what we have done. That's what we have done in the optional additions in the previous session, if you remember. Next, the buyer and seller should not be related. Both the buyer and seller should not be related. So when all these conditions are satisfied, rule 3 says that you can take transaction value. Customs authorities will not question. Customs authorities will accept that transaction value. Able to understand? So tell me, what are the conditions which are required to be fulfilled, which is given under rule number 3 to consider the transaction value as acceptable? Number 1, sale should have occurred in the ordinary course of trade. There should not be any restrictions on the use of the goods except some authority, legal or public restrictions, or resale on geographical locations, or those conditions which don't substantially affect the price. Number 3, the sale should not be subject to conditions that make it difficult to determine the value. Condition number 4, any proceeds from the resale of the goods should not be shared with the seller unless an adjustment is made, or the buyer and seller should not be related. The last condition is very, very important. Now you all will get a doubt, sir, who will be related party? You are telling related person, sir, who will be that related person? This related person definition will be very similar to the definition of related person, whatever we have seen under GST Act. Sir, who will be considered related? Let us see. The buyer and seller are considered related when they are officers or directors of each other's business. Same we have seen in GST. If they are legally recognized partners, then also they will be considered as related. One is the employer and other is employee, related person. One who owns or controls 5% or more of the voting rights in both business. In GST they have told 25%, but here they are telling 5%. If you have even 5% of voting rights in other entity, then also you will be considered as related. This is one point where there is a change. This is one such point where there is a change. In case of under GST law, they say if you have 25% of the voting rights or profits, then you will be considered as related. But for the purpose of customs, even if you own or control 5% or more of the voting rights in both businesses, then also, sorry, one owns or controls 5% or more of the voting rights in both businesses. Sorry. So what do they mean by here is, say for example, there is an entity X Limited. Now this X entity owns 5% in Y Limited. This X Limited owns 5% in Z Limited. Since a third party is controlling 5% or more in both the entities, Y and Z both will be considered as related. Y and Z both will be considered as related. The same thing they will say even in the GST Act also, but instead of 5%, they say 25%. If one controls 25% or more in both businesses, then those both entities will be considered as related. This is one difference. And one controls the other. Similar to GST definition, related party, one controls the other, or both are controlled by a third party, or they both collectively control a third person, or they are family members. And legal persons also can be related, not just individuals, even companies also can be related with each other. And one more point is there here, one more difference is there here. Sole agent, distributor or concessionaire relationships will be considered related only if they fulfill above criteria. So here I want you to add one more line here, are considered related only if above criteria is met. This line was missing. I want you to make this correction. Only if above criteria is met. See, what is the difference here is, in GST they say, if you are a sole concessionaire, if you are a sole distributor, if you are a sole agent, automatically you will be considered as related person, where under GST. But here what they say here is, under customs what they say here is, if you are a sole concessionaire, sole distributor or sole agent, in order to be considered as related person, you should fulfill any of these conditions. You should fulfill any of these conditions. Only when you are getting covered above, then only you will be considered as a related person, where under customs. But in the case of GST, what did they say? If you are a sole concessionaire, sole distributor, sole agent, directly you will be considered as a related party. But in the customs, what they say here is, if you are a sole agent, sole concessionaire or sole distributor, you will not be directly considered as a related person unless you are coming under any of these conditions. Okay, so what is the difference? So related persons, related person under GST, related person under customs. Two differences are there, just 2 points of difference. One is voting rights, they say 25%, where in GST, if you are holding 25% or more of the voting rights, you will be considered related. But in customs, they say 5%. That 1 point is replaced. Second difference, if you are a sole agent, sole concessionaire or sole distributor, you will be directly considered related. But under customs, if you are a sole agent, sole concessionaire, sole distributor, you will not be considered related unless you fulfill criteria. Unless you fulfill any of the criteria, then only you will be considered related person. These are the two differences. Okay, next. One more thing also I wanted to share here. Yeah. No, that related person I told you, even though you are a related person, but still if you are able to prove that price did not had an influence, then also it will be accepted. Somewhere they will try to say it here. Just give me a moment. Yeah, see here. Transaction value related buyer. Transaction value can still be accepted if the buyer and seller are related in certain cases. Buyer and seller both are related. Generally, their transaction value should not be accepted, but the customs authorities are giving you permission. If buyer and seller both are related, still in that case also we can accept a transaction value, provided if you can prove that the relationship did not affect the price and the value of the goods is close to the transaction value of identical goods or similar goods to unrelated Indian buyers, or deductible value, computed value. What is all this? I'll talk about it later. These are all we are yet to see. What is identical, what is similar, deductive, computed, all that we are about to see. But just I want you to remember one thing. Till here you remember, even though buyer and seller is related, but if you are able to prove it to the customs authorities, boss, we are related, but the price has not got influenced because of our relationship. If you are able to prove that, still the customs authorities will accept transaction value as transaction value for the purpose of calculation of customs. Okay, so this is what simply rule 3 says. Okay, next after rule 3, see if rule 3 says, as per rule 3, say for example buyer, seller both are unrelated person, and in that case a transaction value will be there. That transaction value will be accepted, and using that transaction value you compute customs duties. So in that case you don't have anything to do from rule 5 to rule 9. You don't have anything to refer to that. But when rule 4 to rule 9 will come into picture is, say for example buyer is there, seller is there, both are related person, and they are unable to prove that relationship did not affect the price. They are unable to prove it. Then the government says we don't accept the transaction value. See, if the government is not accepting transaction value, then the government should give me rules how to determine the transaction value. Say for example, between the related persons, if the transaction has taken place at $5,000, government says we will not accept it. Why? Because you both are related. Then government should tell me, if 5,000 is not acceptable, then how to determine the value? Government should give the rules, no? That is contained in rule number 4 to 9. So now you got the overall scenario. So what does this customs rule says? If transaction value is not acceptable, if the transaction value is not acceptable, or if the transaction value is not determinable, then you have to determine the value in the sequence of rule number 4, rule number 5, rule number 7, rule number 8, rule number 9. In the same order you have to follow. In the same order you have to follow. If you are unable to determine the value as per rule number 3, then try to determine the value as per rule number 4. If you are unable to determine the value as per rule number 4, if you are not able to determine value as per rule number 4, then try to determine the value as per rule number 5. If you are not able to determine value as per rule number 3 also, rule number 4 also, rule number 5 also, then you try to determine the value using rule number 7. Sir, even rule 7 also I can't apply. Then you determine the value using rule number 8. Sir, using rule number 8 also I can't determine the value. Then you follow rule number 9. Able to understand rule number 9, you will be able to find it out. Now you all will get it out. Sir, 4 to 9 you have told, but in between 6 you did not say. What does rule 6 say? I will come to that later. It is a suspense actually. From starting I was holding no. So there is a suspense in that. I will talk about that suspense later. But did you get the context? In case if rule 3, as per rule 3, you can't use a transaction value, or if the transaction value is not accepted, then how to determine the value? You have to determine the value using rule number 4 to rule number 9. And that too in the same sequence you have to use. You can't say, if I am unable to determine the value as per rule number 3, directly I will go to rule number 5. You can't say. You have to compulsorily come and see whether you can determine the value using rule number 4. If you are able to determine the value using rule number 4, then no need to go to rule number 5 to 9. Able to understand? So you are unable to determine value as per rule number 3. You tried rule number 4. That is also not working for you. Then only you can come and use rule 5. If you are able to determine value as per rule number 5, well and good. There is nothing to do with the remaining things. Now, sir, I used rule 3. I used rule 4. I used rule 5. Still I am unable to determine the value. Then you can come to rule number 7. So in the sequential manner, not in whatever order you want, you have to apply the rules in the sequential order. Okay. So now what rule 4 says is, rule 4 says that if you are unable to determine value as per transaction value, then you have to take identical goods. If any identical goods are there which are getting imported, you have to determine the value of that identical goods. What? You have to determine the value of that identical goods, and that value you have to use it for the purpose of calculation. Sir, I don't have any, but for that we need to understand, before we proceed further with the remaining rules, first try to understand what is identical goods. So say for example, I'm importing this water bottle. I have imported this water bottle, 1,000 quantity of water bottles I have imported. But the seller is a related person to me. Government told we will not accept transaction value. We will not accept transaction value. Now, what I should do is, if the government is not accepting the transaction value for this, now the government will ask me to find out whether any other identical goods are there. The government will say, go and find out whether any identical goods are there which are imported from the same country, either from the same manufacturer or some other manufacturer. Determine the value of that identical goods and use that value here for the purpose of calculation of your value. But for that, we need to understand what do you mean by identical goods. First, we have to get that clarity, no? So let us see what do you mean by identical goods. So what are identical goods? Identical goods means those goods which are same in all respects, including physical characteristics, quality, reputation, with minor differences. In all aspects, it is same. If it is not this water bottle, some other kind of water bottle which is physically the same, which is equal size, equal quantity, and also equal reputation, not some cheap brand, equal reputation that other product is also enjoying. But however, minor differences could be there, like cap color is changing, fine, no issue. So like that, with minor differences that don't affect value, and they should be produced in the same country as the goods being valued. Say for example, this water bottle I am importing from US, but the government is saying, no, this bottle we will not accept the price. For this transaction, we will not accept the price. Now I need to find out identical goods which are having same characteristics, same quality, same reputation from the same country. So from the same US, if any other identical product has been imported, having same quality, same characteristics, same reputation, either produced by same manufacturer. If the same manufacturer has sold the goods to someone else, same manufacturer, same good, had he sold it to someone else in my country, that value I will use. Sir, same manufacturer did not sell to anybody else, or different manufacturer, same article, has it been sold by some different manufacturer? So that I will do. By the same manufacturer if available, or different manufacturer if no identical goods are available. If same goods are not sold to anybody else in India, I will use different manufacturer. Able to understand? So this is what the meaning of identical goods. Tell me, what is the meaning of identical goods? So first of all, when we will start looking for identical goods, if you are not able to determine the value as per rule number 3, then rule number 4 says determine what is the value at which identical goods are imported and use that value. Sir, what do you mean by identical goods which are same in physical characteristics, quality, reputation, with minor differences that don't affect value? From the same country, they should come from the same country, and they should be produced by the same manufacturer if available. No, the same manufacturer did not sell the goods to anybody else in India, then different manufacturer. Okay, so that goods value I have to use. So that's what rule number 4 says. The value of imported goods is based on transaction value of identical goods sold for export to India, imported around the same time. Okay, next. However, they are saying while determining identical goods, exclude goods with engineering design artwork done by the buyer in India free of charge or at a reduced cost. So what do you mean by this? Say for example, I'm importing water bottle. Okay, I'm importing water bottle. So I will tell you detailed scenario to make you understand. So water bottle, if you are importing, but it is a related person, the vendor told 10,000 rupees. The importer is telling 10,000 rupees is the transaction value. Government says, no, since you are related, we will not accept it. Now I came to rule number 4. Similar article, identical good, same kind of water bottle, some other vendor or some same manufacturer or different manufacturer, same kind of water bottle, previously he has imported. Previously he sold the goods to another person in India. He sold the same goods. Okay. Now here the price was $8,000 only. And for this water bottle, when he is importing, this importer, he has did the work of design, development, sketches, plans that was provided free of cost to the exporter. This point, if you remember, we have discussed in the optional additions. In optional additions, we have seen one point. What point we have seen? Design, development, plans and sketches, if they are carried out in India and if provided to the exporter for the purpose of manufacturing, that cost will not be added. So that means when you are taking identical goods, if you take such goods for which the design, development, art sketches are done in India, that cost will not be added. That means this value is anyhow reduced. This value will be reduced. This value will be less. Why? Because government gave a relaxation here. If you are doing design, development, art sketches in India, don't add it to the FOB. So that means for this water bottle, if you take this water bottle as identical goods, the cost of this is already reduced. So it will be a disadvantage to the government, no? So that's what the government told us. When you are considering identical goods, don't consider those goods for which design development charges or sketches plans have been done in India and which are provided that free of cost to exporter. That goods you don't consider. Some other article you have to consider. Some other identical article you have to consider. Able to understand? Why? Because for those articles where design development sketches and plans have taken place in India, the price, that cost is not added. That means that value is anyhow reduced. It will be disadvantage to the government if the importer uses that as identical goods. Able to understand the logic here? So that's why they have told you exclude the goods with engineering, design, artwork which is done by the buyer in India free of charge or at a reduced cost. Understood? Clear and comfortable? Right. So that is what rule number 4 says. But here, let me give you one scenario. Let me give you one example. With that example, I will try to explain. Okay. Say for example, I am importing 100 quantity of water bottles. 100 quantity of water bottles I am importing. But that is from a related person. So transaction value I told for each water bottle, the transaction value I told 5 rupees. Government told we will not accept it. Why? Because there is a related person, price might have been affected. Now I have to come to rule number 4. What does rule number 4 say? In rule number 4, you take the identical goods and determine its value that you can use it. Now I found an identical good, but that identical good was imported in India at different quantities at different prices. Say for example, one vendor imported identical goods of 10 identical goods, 10 water bottles he has quantity, 10 water bottles he has imported at a price of 20 rupees each bottle. Another transaction is there. Another transaction of identical goods is there. Another vendor, he has imported 15 quantity of water bottles at a price of 18 per bottle. Some another vendor is there. He has imported 40 quantity of water bottles at a price of 16 each. So obviously, when quantity is increasing, price will come down. Or take for example, some another vendor is there. He has imported 80 quantity of the water bottles at a price of 14 rupees only. Some another vendor is there who has imported 95 quantity of water bottles at a price of 12 rupees only. Some another vendor is there who has imported 110 quantity of the water bottles at a price of 10 rupees only. There is another vendor who has imported 200 quantity of the water bottles at a price of 8 rupees only. So now you will get a doubt. Sir, rule number 4 has told if I am unable to determine the value as per rule number 3, I can take the value of identical goods. Sir, identical goods I am able to find out, but those goods are imported in different quantities at different prices. Which I have to use, sir? Which reference I have to take here? So now what does the act say here is? Identical goods must be sold at same commercial and quantity level. If not, adjustments are made. I will talk about it later. So identical goods must be sold at same commercial level and quantity. So they are asking you take those quantities which are commercially the same. See, when I say commercially the same, I am importing 100 quantity. Which one is at equal levels? Is 10 is equal level? No, it is very less. 15 is also very less. 40 is also very less. 200 is also very high. So what is in a close range need not be exact. They did not say exact quantity you have to take. They are asking you what? Take such quantity which is at same commercial level and quantity level. They are not asking you to take the exact quantity, commercially same. So what is commercially same here? These 3 are commercially same here. These 3 are commercially same here. Yes or no? Sir, 3 things are there commercially same at equal, more or less closer. 3 kinds of transactions are there. And these 3 transactions has taken place at different prices. Now which one I have to take, sir? Now which one I have to take? Now what does the act say here is if multiple transaction values of identical goods are found, the lowest value is used to determine the value of imported goods. So here I have 3 kinds of similar transactions, 3 kinds of similar commercially equal quantities. Which value I have to take? Lowest of the 3. Which one is lowest of the 3? 10 is the lowest of the 3. So this 10 I will take. So I will not accept 5 as a transaction value. On the basis of rule number 4, I will take 10 as a transaction value. Able to understand? Clear and comfortable? Understood? So what does rule number 4 say in a deeper manner? So they say that when you are considering the identical goods value, you have to determine other transactions which have been taken at the same level, at the same quantity, same commercial levels, at the same commercial levels and same quantity. But sometimes what will happen is at the same commercial levels or the same quantity, you might be able to find multiple transactions. In that case, you have to take the lowest. Okay, now let me give you another scenario. The same thing we will take. I'm importing 100 quantity. I will give you different scenarios to make the concept very clear. Quantity, price. Okay, so another importer has imported 10, value is 5. Another importer has imported 20, value is 20. Another importer has imported, the value is 90. Some importer has imported 85 quantity at a price of 12. Some importer has imported 200 quantity at a price of 13. Okay, whatever it could be. So say for example, price is 10. Some another importer has imported 500 quantity of identical goods at a price of 6. Now here you don't have any trouble. Why? Because at commercially same level, we have only one transaction. Directly we can use this. Like in the previous case, we don't have any trouble here. Why? Because at the same commercial level, we have only one transaction. This 12, we can use it. Okay, let me give you another scenario. Quantity, price. Okay, 10, 20, 20 quantity, 90, 90 quantity, 90 quantity at 17, 100 quantity at 20, 100 quantity at I will say 18, 100 quantity at 18. Next we have 200 quantity at 10, 500 quantity at 6. Now what you will do? I am importing 100 quantity. Now which value I have to take? Now 10 is far out of reach, 20 is also far out of reach, 200 is also not possible, 500 is also not at commercial level. But what most of the students will do now, I am importing 100 quantity. Some another vendor has imported 100 quantity at 18 rupees only. Directly let me take 18 rupees. No. Why? Because what did they say? We have to check same commercial levels at similar quantities. So even 90 is also more or less within the same level only. 90 is also closer only, no? So 90 is also in the same level only. I have to take lowest, 17 only I have to take, not 18. Able to understand? This mistake majority of the students will do. They will not test this level of question in the examination, but just I'm letting you know this thing you have to keep in mind. So you have to determine the commercially same level. Now you should not look for equal quantity. You should look for at the same level. Sir, what is the same level? That is completely your judgment. You have to use your judgment and determine it. So, but don't worry, this question they will not ask in the examination. If at all they ask it, don't in a hurry write the answer as $18 because of equal quantity. Determine whichever is commercially equal, lowest value 17 you have to take. Okay, $100 into 17, that I will use for the purpose of determination. See, but in some cases what will happen is same level is not at all available. So one vendor is there. So when I determine the identical goods, transactions are something like someone has imported 10 quantity, someone has imported 20 quantity, someone has imported 300 quantity, someone has imported 400 quantity. So there is nothing same only. At the equal level, it is not there. Commercially same quantity is not there. Then what you have to do is you have to adjust your figures for the quantity. So you have to adjust here, prices will be there, no? So some adjustments you are required to do, and then you have to take the value. Sir, how to do that adjustments and all, not relevant for our examination. So that is what the sentence they say here. If not, that means if you are not able to find the same commercial level and quantity level, then adjustments are required to be made for differences in the commercial level or quantity. Then some adjustments you have to do. What are that adjustments? We need not worry about it here. Understood? So this is what rule number 4 says. So what does rule number 4 say, guys? When rule number 4 will come into picture? So first you have to take rule number 3. You have to determine value using transaction value. If that is not acceptable, you have to come to rule number 4. You have to identify identical goods, and that value you have to take and you have to use it. Sir, if I'm not able to find any kind of identical goods, then what I should do? You should come to rule 5. What rule 5 says? Determine similar goods. Determine what? Similar goods. Determine its value, and that value you can take. Now you will get a doubt, sir, what is the difference between identical goods and similar goods? So if you look at the definition, similar goods means goods with like characteristics and components. See, for identical goods, they told same. In every aspect, it should be same. But in similar goods, they are telling not same, not exactly same, but similar, closer characteristics, not exactly same characteristics, which is like characteristics, similar characteristics, and components that perform the same function, commercially interchangeable, considering quality, reputation, and trademarks. Say, for example, I am importing water bottle, but I am unable to find any other identical good. No one else has imported the same kind of steel bottle, but someone has imported aluminum bottle. Just I am saying for example's sake. So whatever steel bottle is there, aluminum bottle might also have similar characteristics. They are also fulfilling the same purpose. This bottle is also, I am using it for drinking. That zinc bottle also, zinc or aluminum bottle also, I can use it for drinking. So whatever it is not an exact example, guys. Just I am giving you to make you understand. So if you are not able to find identical goods, what you should do is you should find similar goods. Similar goods are those which have similar characteristics and components. They perform the same function, commercially interchangeable. Instead of the steel bottle, I can use aluminum bottle also to fulfill my purpose. So whatever it is. considering quality, reputation, and trademark. It should be produced in the same country, from whichever country you are importing, in the same country that should have been imported, either by the same manufacturer or different one, if no identical goods are available. And here also same condition, it should exclude the goods where engineering design artwork is done by the buyer in India free of cost or at a reduced price. Why? Because this will reduce the value, that you should not use. And conditions are also same. Similar goods must be sold at same commercial level and quantity. No, if there are multiple transactions, the lowest value you have to use. If you are not able to find the same commercial level or quantity, then you have to adjust the price for that level of commercial level or quantity. Understood? Same, everything exactly same. But the only thing what they say here is in the rule 5, they replace the term identical goods with similar goods. So first you should start searching for identical goods. If you are unable to find the identical goods, then come and start searching for similar goods. Okay, clear and comfortable everybody, right? So let us now proceed further. So what did we see now? Rule number 3, rule number 4, rule number 5 we are done. Sir, but what will happen in case if transaction value is not accepted? I am not able to find any identical goods. Rule number 4 also I can't use it. So I tried for looking for similar goods. Sir, I am unable to find any similar goods also. One of a kind of article I am importing. There are no identical goods. There is no similar goods, but the transaction I am doing with a related party. So rule 3 I can't use. Rule 4 I can't use. Rule 5 I can't use. Then what I should do, sir? Then what you should do is, now the act says you have to come to rule 7. See, in between rule 6 is there. I will tell you in a short while of what is that rule 6. But let us talk about rule number 7. So what rule number 7 says is, you determine the value. In case if you are unable to apply rule number 3, rule number 4, rule number 5, now you have to determine the value by using rule number 7. And rule number 7 says, what is the name of the method which is used in rule number 7? So rule number 7 says about deductive value. You have to determine the value using the method called deductive value. Sir, what do you mean by deductive value? See, deductive value, the name itself says you have to derive what is the value for the purpose of customs by doing something called reverse calculation. By doing a reverse calculation. So if you are unable to determine at what value, what should be the value of imports for the purpose of collection of customs duty, then what rule 7 says is you have to deduce that value from customs. Sir, from where I will derive, sir? You have to derive it from the resale value. So if you are unable to determine what is the cost of imports because you are importing it from a related person, rule 3 is not applicable. You are unable to find identical goods, you are unable to find similar goods, then you have to come to rule number 7. And rule number 7 says that if you are unable to determine value of imports, what you do is, after you have imported the goods, you will resell it. No, either you will resell it as it is. Either you will resell it as it is, or you will do some further processing and then resell it. That resell value will be there. No, you take that resell value. From that resale value, you have to deduct whatever taxes you have paid in India. So whatever taxes that you have paid in India, that you have to deduct. Whatever profits that you have made, that you have to deduct. And after that, you should also deduct whatever expenses you have incurred after importing. So you have to do that reverse calculation. So if you take the resale value, and from that, if you deduct your profit margin, from that, if you deduct your expenses, whatever you have incurred, from that, if you deduct what is your customs duties and GSTs, whatever you have paid, when you deduct all that, by doing that reverse calculation, you can arrive at the CIF value. You can arrive at CIF value. That's what the deductive value method says. Okay. So let me give you one example to make you understand. So guys, the method is very simple. You have to derive the imported value from the resale value. If you are unable to determine directly after importing the goods, either you will resell it as it is, or you will do some processing and resell it. Take that resale value, deduct all your expenses, deduct all your taxes, deduct your profit margins. By doing the reverse calculation, derive at the value of the imports, and on that you calculate your rates of customs duties and pay that customs duties accordingly. Okay, sir, how to do that? Say for example, what I will say is, say for example, you imported some article. Rule number 3 is not applicable, rule number 4 is not applicable, rule number 5 is also not applicable. Then what you should do is, you should take what is the resale value. After you have imported the goods, when you are reselling it, what is the resale value you have to take? Say for example, my resale value is 1,18,000. My resale value is 1,18,000. When I am finally selling the product, I am selling the product at 1,18,000. Now from this 1,18,000, I have to take out my GST, I have to take out my profits, I have to take out my customs duty and all that things I have to take it out. Sir, how to take it out? See, generally, what is the process of the sale? First, imports will happen, no? CIF value. So once you have imported the CIF value, so there will be assessable value. Generally, I will tell you from top-down approach, then we will go to bottom-up approach. So assessable value will be there. Generally, how we calculate customs, assessable value will be there. So on that assessable value, what we do, see, when I say assessable value, that is completely CIF value. After adding that expenses and all, freight, insurance, after adding all that, you will have assessable value. On that, what we pay, first we have to clear that goods from home consumption. So for that, we have to pay customs duty at the applicable rate. So that we will add. And on that, we have to pay social welfare surcharge at the rate of 10%. So that also you have to add. Then you will get one figure. On that, we will pay IGST as per customs at the applicable rate. On that, we will pay GST compensation cess also at the applicable rate. So after paying all this, then the goods will be cleared for home consumption. Then after that, after we pay all these duties, customs, social welfare surcharge, IGST as per Customs Act, composition cess as per Customs Act, all that we will pay. Then after incurring all that cost, we clear that goods for home consumption. Once we have bought that goods to the factory, to bring that goods to the factory and all, we incur expenses like freight expenses will be there, or if we are making any extra process on that, extra processing charges will be there. That charges also we will incur. And after that, we will also incur administrative overheads, administrative expenses and all we will incur. And also we will incur selling expenses. So we'll all incur the selling expenses also. So then you will arrive at the total cost. To that, what we do, we will arrive at the profit margin. So we'll add our profit margin at the applicable rate. So on this profit margin, you will get the sale value of sale. So on that, once again, you have to pay the GST, no? When you are selling in your country, then also you'll be required to pay GST at the applicable rate. So then when you add that GST also, whatever final figure you get, that will be the resale value. Yes or no? So in the question, they will give you this. They will give you resale value. Now we have to do the reverse calculation and we have to arrive at this value. So what and all will be added? Once the goods reach the customs, assessable value will be there. To that assessable value, we have to pay customs duty, we have to pay social welfare surcharge, we have to pay IGST as per Customs Act, we have to pay GST compensation as per Customs Act, and we have to incur, once we have to bring that goods to our factory, we incur expenses. If we do further processing, that processing charges will be there, administrative expenses will be there, selling expenses will be there. To that, we will add a profit margin. And whenever we are selling that goods in India, once again, we have to pay the GST. And after charging that GST, whatever value you get, that will be the resale value. Yes or no? Let me tell you one example. So say for example, we got to know that resale value, the article which is getting imported, it is getting resold at 1,18,000. Now here they have given, now we have to reach here. So we have to do the reverse calculation. So first, what will be there here? Whenever these goods are sold in India, GST will be there. So this figure is inclusive of GST. Say for example, applicable rate of GST is 18%. So now I have to calculate what is the component of GST in that. So this value is 1,18,000 inclusive of GST figure. So now if I calculate 1,18,000 into 18 divided by 118. So this will be my value, right? So when you calculate, GST amount will come to 18,000. So here the value will be 1 lakh. Now we have arrived at this figure. Okay. So this is the figure which we have arrived at. Now from this, what I have to deduct? My profit margin I have to deduct. Say for example, this figure is inclusive of profit. In that I have added the profit also. Say for example, my profit margin on selling price, I maintain a profit margin of 20%. In this 1 lakh rupees, on this sale price, I have 20% margin. So if I take out that 20% margin, so 20,000 rupees of margin, I will take it out. So now if I have, now what I will have is 80,000 before taking it out. So now I have arrived at this figure, profit figure I have arrived at. Before profit, this is my value. Now I have to reduce all my expenses. Say for example, some administrative expenses, further processing expenses, further processing, administrative, selling, all that expenses comes to some 30,000 rupees. So I will deduct all my expenses. Now what will be the value? 50,000 rupees. Now I have arrived at this figure by here 50,000. Now in this, what and all will be included? In that GST compensation cess also will be there, IGST also will be there, and social welfare surcharge and customs also will be there. So now I have to exclude that component also. For the time being, now assume that there is no GST compensation cess. Generally there will be GST compensation cess also, but in questions they don't test it. Just imagine that only GST you have paid, because the calculation will remain the same. Whatever calculation we are doing for IGST, the same calculation will be there for GST compensation cess also. Say for the time being now, you did not pay compensation cess as per Customs Act. They will not ask you in the question, don't worry about it. So assume you have not paid the GST compensation cess. Then what will be the calculation? So in this figure of 50,000, what is also included? IGST is also included. What is included? IGST which you have paid as per customs. Say for example, applicable rate of IGST as per Customs Act is 5%. So this 50,000 is inclusive of GST. I'm imagining that compensation cess is not paid by you. If compensation cess is paid, that also you have to consider as included in this figure and do the reverse calculation. But don't worry, they will not test this level of question in the examination. So IGST, or let us do one thing, IGST and compensation cess both put together 5%. IGST is 5%. GST compensation cess is also 5%. So I will let us do the example in a complicated way only. So say for example, you have paid 5% of GST compensation cess and 5% of IGST. Both you have paid. So now you have to calculate that figure. What is the component of IGST? What is the component of CGST? GST compensation cess. Both you have to calculate. Both put together how much? 5 plus 5, 10%. So in this 50,000, IGST is also there and GST compensation cess is also there. So both put together how much percentage? 10%. So if we do that calculation, this figure is inclusive of IGST and GST compensation cess as per Customs Act. So which comes to total of 10%. So if I calculate that, 50,000 rupees into 10 divided by 110. Yes or no? I hope you guys are able to get these figures and all. I am considering we are doing reverse calculation, nothing else. So now if I take out that GST and compensation cess, so say for example 50,000 rupees into 10 divided by 110. So GST and compensation cess which is included in this figure is 4545. You take it out that. So 50,000 rupees minus 4545. If you take it out, the figure will come to 45,455. This is the figure inclusive of custom and social welfare surcharge. Inclusive of customs and social welfare surcharge. Now I have to take it out from this. What is the customs duty? I have to deduct these two components also, no? Social welfare surcharge and customs. This also I have to take it out. Say for example, applicable rate of customs is 10%. So in this 45,455, customs duty at the rate of 10%. And on this 10%, once again 10% will be there, no? 10% of the customs, which will come to 1%, right? Say for example, if 1 lakh rupees of value is there, on that what you pay, say for example, customs duty comes to 10%. The customs duty value will be 10,000. On that social welfare surcharge also have to pay on this 10,000. That means on this customs are 10% once again. So if you do that, your value will come to 1,000. So both customs and social welfare surcharge both put together, you have paid 11%. Yes or no? So 10% of customs and social welfare surcharge, which is 10% of customs once again. So it will come to total customs duty and social welfare surcharge both put together 11% here. So now you have to exclude that also. So this figure 45,455 is inclusive of customs and social welfare surcharge. So if you take out that component, how much is the customs and social welfare surcharge component? 45,455 into 11 divided by 111. Okay, so if I take it out, 45,455 into 11 divided by 111. So if I do that, 4505 is the customs duty and social welfare surcharge. If I take that also, 45,455 minus 4505, if you do that, the amount will come to 40,950. Finally, this is the assessable value. On this value, this will be the assessable value for the purpose of calculation of customs. So this is what you are supposed to follow in case if rule number 3, transaction value is not acceptable, you are not able to find identical goods, you are not able to find similar goods, then only option which you have is you have to determine the value as per rule number 7, which is deductive method. You have to do the reverse calculation. You have to determine the value on the basis of resale value of the goods. So how to do that? Let me give you the format here. So resale value, you have to take, from that you have to reduce first IGST, but in most of the cases they will ask you to ignore the GST also. In most of the questions I will show you some questions also, they will ask you to ignore the GST and do the calculation. So here whatever is that IGST at appropriate percentage, so that IGST value you have to reduce, that is inclusive, that you have to reduce it. So then you will get that thing. After that you have to reduce all your expenses, transport cost, further processing, sale, administrative overheads, all that you have to exclude. No, first we have to exclude profit margin. In that profit will be there, no? So you have to take the profit margin out. So after you take the profit margin, you will get cost value inclusive of all the cost. From that you have to reduce all your cost you have incurred. So then you will get one figure. So this figure is inclusive. This is value inclusive of IGST, GST compensation cess and customs and also social welfare surcharge. Everything is included here. Now from this, first I have to take it out IGST and GST compensation cess by doing the reverse calculation. So that I will take it out. But don't worry, in the question, in the exam, they will ask you to ignore IGST and GST compensation cess altogether. So you will get this figure. So from this, we have this figure is inclusive of customs and social welfare surcharge. You have to take out that customs duty and social welfare surcharge also by doing the reverse calculation. Then after that, whatever figure that has been left out, that will become your assessable value. This is what rule number 7 says. That's it, guys. Now if you start reading it, so what does rule number 7 say? Deductive value. How to calculate the deductive value? The deductive value is based on the unit price at which the goods are sold in India in greatest quantity to unrelated persons in India. So at whatever you have to take that value on the basis of resale value. Okay, whenever you are reselling. But say for example, you are selling in different quantities. You have imported 1 lakh quantity of the goods. Okay, you are reselling it, but you are reselling in different quantities. To one customer you have sold 1,000 quantity, to one customer you have sold 10,000 quantity, to one customer you have sold 50,000 quantity. For another customer you have sold the remaining quantity of 35,000. So you have sold in different quantities, and different quantities at different rates. Say for example, 1,000 quantity you have sold it at 100 rupees, 10,000 you have sold it at 95 rupees, 5,000 you have sold it at 80 rupees, 35,000 you have sold it at 70 rupees only. Sir, which resale value I have to take? They say at whatever quantity, whatever is the greatest quantity, that to unrelated persons, that you have to take. If entire goods are sold in one single lot, that resale value we will take. If it is sold in different quantities, at whatever price highest quantity of goods are sold, that value we are going to take, that resale value we are going to take. So highest quantity is 50,000 here, that price we will take, that resale value we will take. And from that, what we have to deduct? All the commission, profit, additions, or whatever expenses you have incurred in India, that you have to deduct. Cost of transport, insurance, and other cost which you have incurred in India, that you have to deduct. Customs duty and other taxes, whatever you have paid in India, you have to deduct it. After deducting all that, you will arrive at that figure. So if goods are not sold at the time of importation, the value is based on unit price at the earliest sale date within 90 days. That means you have to take the resale which have taken place within 90 days only. If some resale has taken place after 90 days of importation, that you should not consider. So whatever resale you are doing within 90 days, that resale quantities only you are required to consider. After 90 days, whatever you have sold from the date of importation, after 90 days, even if you are selling it, that price will not be considered. Whatever resale you are doing within 90 days, among that greatest quantity, whatever price you have sold, that only we will consider. If I do one illustration, everything will be sorted. If the goods are sold at further processing in India, the value is based on unit price of the processed goods sold in greatest quantity to an unrelated person reduced by the processing and other cost. Even if you are not selling the good as it is, if you are doing some processing and reselling it, that processed goods also you are selling it in different quantities. There also what we will do, highest quantity we will take, that resale value we will take. Anyhow, while doing the reverse calculation, we will reduce the processing expenses also, no? So whatever it is, if you are selling the goods as it is, at whatever highest quantity you have sold, that price we will take. After you have imported the goods, you are doing some further processing and processed goods you are selling, then also same logic, at whatever highest quantity processed goods are sold, that price we will take it. Okay, so we'll have some illustrations. Let us have a look at the illustration, you will get the better clarity. So we have here rule number 7. So let us see here. Following are the sale details of product X, being 12,000 units imported from Japan. On which date? On 1/1/2025 they were imported. You are required to compute assessable value of product S for customs duty by applying deductive method. So when it was imported 1/1/2025, within 90 days from the date of importation, whatever sales they have taken place, that details they have given. On 1st of January they have sold some quantity, on 10th of January they have told some quantity. So here they have sold 1,000 at a price of 100, and on 10th of January they have sold 2,000 quantity at 98 rupees. So like that, different dates they have given. On 19th they have sold some quantity, on 27th they have sold some quantity, on 3rd of March they have sold some quantity, 13th of March they have sold some quantity, 30th of March also they have sold some quantity. On 7th of May they have sold the quantity. See, 7th of May is beyond 90 days from the date of importation. This we should not consider. Whatever sale that has taken place on 7th of May, that should not be considered. Why? Because that has taken place after 90 days of importation, and just in the provision we have read now, whatever resale has taken place within 90 days, that only you have to consider. Now if you see here, different quantities are sold at different prices. Now we will see at each price what is the total quantity sold. Like if you see here at 100 rupees 1,000 quantity was sold. Here once again at 100 rupees 1,500 quantity was sold. So total at 100 rupees, total how much quantity was sold? 100 plus 200 plus 1,500, 2,500 quantity was sold. Then we have 98 here 2,000 quantity, here also 98, 1,000 quantity, here also 98, 1,000 quantity. How much? So at a price of 98, 2 plus 2, 4,000 quantity was sold. Then we have one more price, 101. At 101, 500 here. So at a price, only one quantity, only one sale, I guess. So at a price of 101, they have sold 500 quantity. One more color, let me use it. Then we have one more sale at 99 rupees. At 99 rupees, 500 quantity was sold. Tell me which is the highest quantity. At 4,000 is the highest quantity, and that sale has taken place at 98. So that resale value we will consider. 98 we will consider. So resale value we have to take it as how much? 98. Why? Because at that price, highest quantity was sold. Assume the expenditure incurred in India, including profits, is 18. See, directly they are giving figure. You need not do the calculation. So this is the resale value. In that, how much profit and cost is included? 18 rupees of profit and cost is included. Duty is charged on such article at the rate of 25%, including social welfare surcharge. So in the example we have used, we assumed the duty as 10% and all. But now they are giving the percentage also here. Customs duty, including social welfare surcharge, is 25%. Now they did not give any information regarding GST. That means they are asking you to ignore the GST calculations altogether. So how the answer will look like? So resale value will be 98. From that, if GST would have been given, we would have excluded the GST component, but GST they did not give. So we will ignore the GST. Then what we have to deduct? Profit and cost, both put together, they have given collective figure. So 18 rupees is the profit and further cost in India. How much it will come to? 80 rupees. Now this 80 rupees is inclusive of customs duty and social welfare surcharge. Sir, what about GST and GST compensations? As they did not give the information. No, we will ignore it. So this 80 rupees is inclusive of customs duty and social welfare surcharge, both put together, percentage is 25. So this 80 rupees is inclusive of that 25. So this 80 rupees is inclusive of the customs duty and social welfare charge, social welfare surcharge, which they have told it as 25%. So that means in this 80, 25% is already included. That means this is 125%. This is 125. So customs duty is 25. If assessable value is 100, on that 25 is customs duty, and if you add that, the total value inclusive of customs will come to 125. No, so 125. This 80 is inclusive of GST. So then, sorry, this 80 is inclusive of customs. So then what will be the component of customs? How to calculate that customs figure? So how to calculate that customs figure is 80 into 25 divided by 125. If you do that, you will get the value of 16. So whatever balance is there, that will be 64. So here the assessable value is going to be 64 rupees. Able to understand? So as simple as that. Clear and comfortable, everybody? So 64 will be the assessable value. Now how much quantity total they have imported? 12,000 quantity they have imported. So 12,000 quantity into 64. If you do that calculation, it will come to 7,68,000. So on this 7,68,000, once again, duty they have given it as 25%. That 25% if you multiply, once again, you will get this value of 1,92,000. Understood? Clear and comfortable, everybody? So this is what regarding demonstration of that provision. Okay. So I think we will have one more illustration here. So you'll find one more illustration. Yeah, this is also more or less the same kind of illustration. Yeah, nothing here. There should be one. I have seen somewhere that question. Let me show that to you. Yes. Somewhere it is there. Yeah, here if you see. RPG Limited 125 units of mineral from high seas for sale in India. So they have imported 125 units of minerals. Selling price is exclusive of duties and taxes. Freight from port to depot in India is 2,530 and insurance is 310. That means expenses whatever has taken place in India, from the port to India, from the Indian port to the depot in India. So cost which is incurred in India, 2,530 and 310. So 125 quantities they have imported. 125 units of minerals from high seas were imported. Now sale quantity. Now they are giving the details of sales. Some 80 quantity of sales are done at 105. 60 quantity they have sold it at 90. So like that, at different prices, different quantities they have sold. So basic customs duty is at 12%. Assume there is no IGST applicable for the product. You are required to calculate total customs duty as per rule number 7. Rule number 7 is what? Deductive method. So for deductive method, what we should do? Greatest quantity we have to find out. So like the way we have done in the previous table, if you start doing that. So at 90 rupees, total 130 quantity. So if you do all that math, I'm not doing all that math. So just I'm explaining the logic here. So if you start adding like we have told here, 130 quantity were sold at 90, 50 quantity were sold at 95, 100 quantity were sold at 100, 120 were sold at 105. So which one is the highest quantity? 130. So 90 we will take. So total 90 quantity. So that will be the resale price. Total how many quantities they have imported? 125 units they have imported. So 125 into 90, that we have to use 11,250 you will get. From that you have to reduce the expenses. They have given expenses, they did not give any profit information also. They have given expense related details in India. So where they have given here 2,530, 310. These two you have to take it out, 2,350 and 310, which will come to 8,410. Now this is the figure inclusive of customs and social welfare surcharge. Why? Because they have asked you to ignore the GST. They have told customs duty 12%. See, when customs duty is at 12%, on that surcharge also will come, no, 10% of 12% also will come. So if you do that, it will come to 13.2%. That is the figure, that is the effective rate of customs. So this 8,410 is inclusive of customs and social welfare surcharge at the rate of 13.2%. Now how do you calculate the customs duty and social welfare surcharge? So once again, reverse calculation, if you do 8,410 into 13.2 divided by 113.2, if you do that math, you will get it. Okay, so this will be the figure, right? Yeah, that's it. Sorry, but here in the question they have told one more thing. The selling price is exclusive of duties. You need not deduct the duties once again. Sorry, here you did not do the reverse calculation here. Once again, in the last point, you did not do the reverse calculation. Why you are not supposed to do the reverse calculation is, they have specifically mentioned in the question, the selling price is exclusive of duties and taxes. So you need not reduce, because the figures are not inclusive figures. These are all exclusive figures. Only if you reduce expenses, it will be enough. 2,530 and 310. These two expenses, if you deduct it, that will be enough. No need to deduct any customs component. Why? Because in the question they have specifically mentioned that the selling prices given here are exclusive of duties. So this itself is assessable value exclusive of duties. Directly on that 13.2%, if you multiply, you will get that customs duty along with the social welfare surcharge. Okay, so like this simple questions only they will ask. So here you have to be very careful, like me, selling prices exclusive of duties and taxes. So that's why you should not do that. You should not do that inclusive calculation. So you have to be very careful when reading the facts, whether the given prices are inclusive of taxes or exclusive of taxes and duties. That you have to be pretty careful, right? So this is what rule number 7 says. Okay, we have successfully completed rule number 7 also. So what we have seen till now, rule number 3, which says in case of unrelated parties, you can take transaction value. If transaction value is not acceptable, you have to start following from rule number 4 to rule number 9. So we have seen rule number 4. First, you should come to rule number 4, identical goods, that you have to follow. If identical goods are not there, then you have to come to rule 5, which says similar goods. Sir, similar goods are also not there. Then you have to come to rule number 7, which says what? Deductive method you have to use. Sir, deductive method is also not there. Then you have to come to rule number 8. So now we are going to discuss that rule number 8, which is calculation method. Computed value also you can say. So which is a computed value. So what is that computed value? Computed value is nothing but very simple. If you are not able to find out even this deductive method also, how you have to determine as per rule number 8 is, you have to ask the exporter to share the cost. What is the cost of the product and all? You have to ask the exporter, sorry, not importer. You have to get the details from the exporter. What is the cost of manufacturing that product in the respective country? To that, they will add their profit margins and expenses of the exporter, and they will derive at the value. Yes or no? So if you read it, you can easily understand the computed value includes cost of materials and fabrication or processing in producing imported goods in the export country, at what is the cost involved for the purpose of manufacturing that goods, general expenses and profit of that exporter, and whatever transport cost and insurance is there, whatever we have discussed in previous sessions. So that transport costs, that anyhow we will add, freight and insurance anyhow we will add. So that information you can get it. That information you have to get it. Able to understand? So that is what computed method. If you are unable to follow rule number 5, 6, 7, sorry, rule number 4, 5 and 7, then you have to calculate using computed method. In the computed method, you have to ask the exporter to share the details of cost of manufacturing and what is their profit, what is their expenses, and from that you have to calculate the value. But you have to be very careful here. Why any exporter will share his costing here? Why any exporter, why any seller will share what is the cost of manufacturing the product, what is his expenses, what is his profit margin? So generally nobody will share, no. So when you can expect that details and all is if the other person is related person. Generally when the exporter is also a related person, then he will share the costing information. If there is no related person, then he will not share, and then no seller will share the costing information. Simple business logic here. If I am a seller, why I will share my costing to others? What profit I am making? Why I will share that with anybody? So generally this will not happen unless the other person is also a related person. So if the exporter is also a related person, then only he will share the cost of manufacturing, what profit he has incurred, what expenses he has incurred, everything he will share. From that you can calculate the value. Okay, so this is what rule number 8 says. So till now we have seen rule number 4, rule number 5, rule number 7, rule number 8 we have discussed, but in between I did not explain rule number 6. See, now what rule number 6 says is, say for example, if you are an importer, if transaction value is not acceptable, if you are not able to follow rule number 4 and rule number 5, then first you will determine deductive method. No, say for example, by using deductive method, the value has come to 10 lakh rupees. And by using rule number 8, if you would have followed rule number 8, say for example, you are importing the goods from your related person only. He has shared all the costing information with you. He has shared his profit details, everything he has shared. Now, when I calculate the value as per rule number 8 using the computed value, my value is coming to 8 lakh rupees only. My value is coming to 8 lakh rupees only. So if I follow computed method, I will be able to pay less amount of duties, less amount of customs duty instead of following rule number 7. So if you are an importer and you are not able to determine your taxation value as per rule number 4 and rule number 5, generally you should come to rule number 6 first. If not possible, then you have to come to rule number 8. But if you are able to do both, you are able to determine value as per rule number 7 also, if you are able to determine rule number 8 also. But if you feel that rule number 8 is giving you better position, rule number 8 is keeping you in a better position. If you follow rule number 8, your value would have been less, you will be required to pay less duties. If that is the case, what rule number 6 says is, dear importer, you make a request to the proper officer to apply rule number 8 first instead of rule number 7. This is what rule number 6 says. So rule number 6 is not any different method. What rule number 6 says is, at the request of the importer, the proper officer can reverse the order of application. Instead of applying rule number 7 first, the proper officer can go for rule number 8 to do a favor to the importer. That relaxation has been given in the rule number 6. So if you read it, you will get the better clarity. So if you read it here, when value cannot be determined, sorry, this is not rule number 9, rule number 6 we have to read, right? If the value cannot be determined under rule number 3, 4 or 5, transaction value, identical goods, similar goods, it shall be determined under rule 7 or 8. Importer request, the order of application of rule number 7 and rule number 8 can be reversed with approval. So as an importer, if you want to go and make a request, sir, don't apply deductive value first. Please apply computed value method first. If you can go and request it to the proper officer, even proper officer will reverse the application also. First, he will calculate the computed value, then calculating the deductive method. This is what rule number 6 says. So rule number 6 actually is giving a permission to reverse the order of application of rule number 8 and rule number 7. Understood? So with this, we have completed rule number 3. We are basically talking about importing rules, determination of value of import, that rules we are talking. So rule number 3 we have completed, rule number 4 we have completed, rule number 5, rule number 6 we are done, rule number 7 we are done, rule number 8 we are done. Now we have rule number 9, which says that if you are not able to determine by using any of these methods, rule number 3 also you are not able to follow, rule number 4 also you are not able to follow, rule number 5 also you are not able to follow, deductive value method is also not available, even one more thing, last one, computed value method is also not available. Then what you should do, then we have something called residual method. Basically what this rule says is, when value cannot be determined by any of the above methods, the residual method uses reasonable means and consistent with the principles, general provisions of these rules and data available in India. So the proper officer, you can calculate the value using other methods which are generally acceptable. Depending on this, we generally call it as best judgment assessment, we call it. This we generally call it as what? Best judgment assessment. Basically using all the information available, by following all the principles which are available in India, and by using general rules, general business terms and all, using the best judgment assessment, we will use the residual method and determine the value when we are unable to determine value by any of the above methods. Okay. Now, there are some note points here. Maximum value limit. The determined value shall not exceed the price at which goods or similar goods are sold in international trade when buyer and seller have no business interest in each other and price is the sole consideration. By using this residual method, whatever value you are determining, that should not exceed the price at which goods or similar goods are sold in the international trade. So if you are at whatever price international trade is happening, like say for example, if you are unable to have identical goods, if you are not able to have similar goods, you are unable to determine resale value also, you are also not able to determine computed method, then what we should do is we will use residual method. Using whatever information available with us, by using the best principles, best industry data, we will calculate the prices. But what they are telling is, by using the residual method, whatever value you are determining, that should not exceed the price at which goods or similar goods are traded in international trade. Say for example, these goods are getting traded between China and US. So at whatever price this transaction is happening, there is no similar transaction in India. By using residuary method, you are determining the price. This price should not be beyond the price of international market. Like for example, between China and US, same kind of goods are getting sold. If the price is certain value, whatever value you are determining by using the residual method, that should not go beyond that international value. Okay, so not that relevant for the examination, just you have to remember this. So the determined value shall not exceed the price at which goods or similar goods are sold in the international trade when seller and buyer have no business interest in each other and price is the sole consideration. So in the international trade, when two parties who are unrelated, a transaction is happening them, there is some price, you know that, and by using residuary method, whatever value you have determined, that should not go beyond that international trade price. And value cannot be determined based on selling price of goods produced in India. The system accepting highest of the two alternatives, these kind of some residuary techniques you should not follow. What kind of residuary techniques you should not follow? Selling price of goods produced in India. If the same goods are manufactured in India, at that price we will tax it. That method is not a residuary method. Something else you have to use it. System accepting highest of the two. You can't say I will use two methods, whichever is higher, that I will consider as residual value. That kind of residual method also you can't use. Price in the domestic market of the country of exportation, from where you are exporting, in that country whatever price is there for the product, that I will take it as value, that is also not acceptable. Cost of production other than computed value for identical or similar goods. Price of goods exported to a country other than India. Minimum customs value, arbitrary or fictitious value, these should not be used. Apart from this, any other residual acceptable method that you can use it. Okay, so you need not break your heads on this concept, not that important from the examination perspective. Let us proceed further. Okay, so with this, we have successfully completed importation rules, valuation of import rules we have covered, and how to determine value of imports. With this, we have completed our discussion. We have 5 minutes of discussion regarding exports also. If at all you are making exports outside of India, generally, as I have told, in case of exports, duties will not be there except in exceptional circumstances, like in some goods like leather and all. For those only, customs will be payable, export duty will be payable. If at all export duty is payable, how to determine the value? If at all export duty is payable, how to determine the value? So here they say something very limited discussion. They say, see, but before we go to that exports, we have few more points. Rule number 11 and rule number 12 also we have. What is that? Let us see. Importer's declaration. The importer. So once again, before we go for the exports, two small points are there regarding imports. Let us try to cover that also. The importer must submit a declaration providing accurate and complete details regarding the value of imported goods, including relationship between the buyer and seller, basis of the declared value, conditions and restrictions, cost not included in the invoice. Basically, whenever goods are imported, what will happen is on self-assessment basis. Like in GST, the SSC himself will determine the amount of taxes and he will deposit. No. In the same manner, whenever the importer is importing the goods, he will do the self-assessment. He will do self-assessment. What is the value of the goods? What is the relationship between buyer and seller? What is the rate of customs duty? He will calculate and submit that information to the customs authorities. So that's what they say. The importer must submit a declaration providing accurate and complete details regarding the value of the imported goods, including relationship, basis of declared value, condition, cost, everything. He will determine the value and tell to the customs authorities, sir, this much value of the goods I have imported, this much customs duty I am required to pay. Okay. So now once you have declared the value on self-assessment basis to customs authorities, now what will happen is whatever value you have submitted, that can be either accepted by customs authorities or even they can reject it. Sir, when they will have a doubt, whatever value I have declared, when customs authorities will reject it. So very simple, when the significantly higher value of identical or similar goods, you are saying the value of your import is only $10,000, but similar goods are identical goods, others are importing at $12,000, then definitely customs authorities will get a doubt. Similarly, you are getting abnormal discount or reduction in price. Somehow customs authority is getting a doubt that you have told very high amount of discount. You are telling that you have got some $2,000 of discount, which is not acceptable. Might be you are playing to reduce your taxes. Or special discounts are for exclusive agents, or you are trying to say that I got a special discount, sir, because I am a special agent. Then also customs authorities will get a doubt. Misdeclaration of goods description, quality, quantity, origin or production. Might be at the time of calculation, you have wrongly described the goods, wrong quality you have done, wrong quantity you have added, then also customs authorities may reject it. Non-declaration of relevant parameters like brand, grade or specification, some information you are hiding, then also customs authority will reject your declared value. Or fraudulent or manipulated documents. If the customs authorities find that there are some fraudulent documents, this manipulated documents you have submitted, then also customs authorities may reject your value. then what will happen? So doubt about declared value. If the proper officer doubts the truth or accuracy of the declared value of imported goods, they may ask importer for further information or documents. If doubt remains, the value cannot be determined under transaction value. So first they will ask you to share some information. If the customs authorities are not happy with that information, then they will say, we will not accept the transaction value. Follow rule 4 to rule 9, they can say. So importer's right to be informed. Proper officer must inform importer in writing of the grounds for doubting the declared value and provide an opportunity of being heard. Quite common, even in GST also we have seen. If someone is taking a decision against you, first they should inform you and they should give an opportunity of being heard. Mechanism for value rejection. This rule provides a procedure for rejecting the declared value when there is a reasonable doubt. If rejected, the value is determined according to rule number 4 to 9, which we have already seen. Acceptance of declared value. Declared value is accepted if the proper officer is satisfied about its truth and accuracy after inquiry and consultation with the importer. So first they will ask you the documents. No, if you are able to provide the minimum of documents, if you are able to satisfy him with the supporting information, then he will accept. If he is not accepting with the information whatever you have submitted, then he will reject it and he will ask you to follow rule number 4 to 9. That's all. Then we have something called interpretative rules. This all you can ignore. Why? Because all this I have covered as a part of my general discussion. As a part of our explanation, I have covered all these points, or if at all not covered also, these interpretative rules are not at all important from the examination perspective. They are linked to various aspects which will be tested at the final level, not relevant for the CMA inter level. So you please ignore that interpretative rules. From these rules, whatever important things are there that we have already covered. So ignore all this part, interpretative rules. Next, okay. So now let us come to exports. How to determine the value of exports? Let us see it. So export value related rules also there. Rule 1, short title, commencement and application. These rules are called customs valuation determination of value of export rules. They came into force on 10th of October 2007. They apply to export of goods, blah, blah, blah. Ignore. No question will come from here. Definitions also you ignore it. What is transaction value? What is the similar goods? What is identical goods that they say? Now let us come to rule 3. Same like rule 3 for imports only. Determination of method of valuation. Generally, transaction value is preferred method for valuing exported goods. However, if the buyer and seller are related, then they don't accept transaction value unless you prove that that relationship has not affected your price. Same like rule 3 for imports only. So determination by comparison. The value of the export goods will be based on transaction value of like goods, like similar goods, exported at or about the same time to other buyers in the same or another destination country, with adjustments for factors like date of export, commercial levels, quality, composition, design differences, freight and insurance cost. That means if you are unable to determine using transaction value. So in case if you are unable to determine the value using transaction value, then you have to follow rule 4 to 6. Rule 4 says what? Identical goods. If you have to find out identical goods or similar goods, that value you have to determine that you can use it for your goods. If rule 4 is not permissible, you don't find any similar goods or identical goods, then you follow rule 5, computed value. Your cost, your profit margins, your other expenses that you have to add. So cost of production, manufacture or processing of export goods, charges for design or brand, amount of profit. On cost plus basis, you can determine. So first we will find identical goods. If that is not possible, we use computed value. If that is also not possible, we use residual method. Once again, best judgment assessment we will do. Using all the information available, we will determine the prices. Like the way importer is declaring the prices, exporter also will declare the value. And here also, like the way proper officer will have the right to reject the declared value in the case of imports, similarly, proper officer will have a right to reject the declared value of exports also if he finds any suspicious things. Okay, so that's all, guys. And one more thing here, in the case of, there is one more important point I would like to say. See, imports are taxed on CIF value. For imports, relevant value for determining customs duty is CIF value. But for the purpose of exports, relevant value for the purpose of determining export duty is FOB. So this you have to remember, not that important. If at all, they might ask you in MCQs or MCQ statements, they might ask you. That's why I'm telling. For imports, the relevant value for determining duties is CIF value. For exports, the relevant value for determining export duty is FOB. Free on board value is enough. You need not add that freight, insurance, all that need not be added. Exports will be taxed on FOB basis. Imports will be taxed on CIF basis. And if you remember, for imports, what dates, which exchange rate we will take, whatever exchange rate which is given by CBIC, that we will take, and whatever rate that is prevailing on the date of submission of bill of entry, that we will consider. Sir, for the purpose of exports, whose exchange rate we will use? Once again, CBIC's exchange rate only we will use. The exchange rate on which date we will take, sir? Exchange rate on which date we will take, sir? So that will be here. At the beginning, I did not explain that point. Now I will tell you. So exchange rate prevailing on which rate we will take for the purpose of valuation. Exchange rate. Yeah, see here. In case of export, we will take shipping bill. Where it is? Yeah. Whenever you are doing exports, the rate which is prevailing, whenever you are submitting a shipping bill of export. So like the way for the purpose of clearance for consumption, we submit bill of entry for imports, no? Similarly, when the goods have to cross our country for the purpose of export, we submit something called shipping bill or bill of export. So on that date, whatever exchange rate is there, that too given by CBIC, that rate we are going to take it. So very simple, you have to mug up these things, nothing else here. For the purpose of imports, you will take whatever exchange rate given by CBIC on the date of bill of entry. For the purpose of exports, we will take exchange rate which is given by CBIC, which is prevailing on the date of bill of export. Shipping bill or bill of export will be there. So whenever that shipping bill or bill of export is submitted, on that date, whatever rate that is given by CBIC, that rate we are going to use it for the purpose of conversion. That's it, guys. So nothing specific here. So now we have final few things. We have one small discussion I would like to do here. What is the everything we know? Only one thing we have to understand: what is the relevant date for the rate of duty and the tariff value of the imported goods. So this is one thing we have to remember. So what is, first I will talk about import. What is the relevant date for rate of duty and a tariff value? Rate of duty or tariff value. So what is the, at which date we have to take it? Okay, right. So let me give you one simple thing here. Say for example, I'm an importer. Okay. So I ordered the goods. There is an exporter in US. This exporter dispatched my goods on 5th of January 2025. Okay. Now this goods reached, this we call it as entry inwards. The ship has arrived at the port Vizag. Here I have to clear. The ship has arrived at the Vizag port and entry. It was permitted to unload their goods at the Vizag airport. That we call it as entry inwards. That date was, say for example, it was on 25th of January 2025. Then what happened is, once the entry inwards has happened, I submitted bill of entry for home consumption. I have submitted my bill of entry for home consumption as on 30th of January 2025. I have submitted my bill of entry for home consumption on 30th of January 2025. Now, why I am telling you this date is, say for example, I am importing mobile phones. The goods which I am importing is mobile phones. Recently, between the countries of the world, these trade wars are happening, tariff wars are happening. Recently, like we have seen that Trump is playing with the tariff rates. So many changes have taken place. When the exporter has dispatched the goods, on these goods, the customs duty, the effective rate of customs duty was at 10%. When the goods have reached, whenever the customs port has given you the clearance to unload your goods, that we call it as entry inwards. On that date, the customs duty was 15%. But within 5 days, whenever you are submitting the bill of entry for home consumption, as on that date, the government has once again increased the customs rate. Here they have made it as 20%. Now, whenever you are clearing the goods for home consumption, you will have some value. Say for example, you have determined the value to be 10 lakhs. You have determined the value to be 10 lakhs. So on this 10 lakh rupees, customs duty should be paid at which rate? What is the relevant date for tariff rate? What is the relevant date for tariff rate? Which date of which rate you have to take? Whether I have to take 10%, whether I have to take 15%, or I have to take 20%. So here what they have told is, whatever rate that is prevailing, whenever you are submitting the bill of entry for home consumption, at that point of time, whatever rate is prevailing, that rate we will take. So I have to tax it at 20%. On this 10 lakh rupees, whenever I'm clearing it for home consumption, I have to multiply effective rate of 20%. By that, you will get to know what is the value of the customs duty. Understood? Clear and comfortable? So now let me extend this example. Let me extend this example a bit further. There is a person in India. There is a person in US. He dispatched the goods on, let me take the same example, same dates here, on 5th of January 2025. Entry inwards. That means the ship has reached the airport, Indian airport, and they have got the permission to clear, to unload their goods at the port. So that date was, say for example, on 25th of January, they have reached. Now, immediately when the goods are unloaded at the port, this person did not submit the bill of entry for home consumption. So what he has done is, he has sent the goods, he has submitted bill of entry for warehousing. He has sent the goods for warehousing. So on same day, say for example, on 27th of January 2025, he submitted a bill of entry for warehouse. Okay. Now from the warehouse, he cleared the goods. So first goods will go to warehouse. Then he submitted bill of entry for home consumption on 1st of February 2025. See, in the previous example, what did I say? He has dispatched, the goods have reached, and immediately the importer has submitted the bill of entry for home consumption. But here what happened? The vessel has arrived. First, he submitted bill of entry for warehousing. From the warehouse, he submitted the bill of entry for home consumption. Now I will tell you rates. Here the rate is, here the effective rate of customs was 10%. Here the effective rate of customs was 15%. When that's cleared for warehouse, the effective rate of customs was 20%. When ultimately from the warehouse, when they are cleared for home consumption, the effective rate of customs was 25%. Say for example, value of the goods which are imported is 10 lakhs. Value of the goods which is imported is 10 lakhs. So on this 10 lakh rupees, to calculate customs duty, what rate I have to multiply? What rate I have to multiply? They say whenever you are submitting the bill of entry for home consumption, not whenever you are submitting the bill of entry for warehousing. Whenever you are submitting the bill of entry for home consumption, at that point of time, the rate of customs was 25%. On this 10 lakh rupees, at the rate of 25%, you have to calculate your customs duty. Able to understand? Clear and comfortable? Let me tell you one more thing. This point I have already explained. Now I will tell you what is a relevant value, relevant date for determining value, I will say. Okay. So say for example, I am importing the goods. I am importing 1 CR worth of goods. How much? 1 crore worth of goods I have imported. So now the goods have reached, the vessel have reached. Now what I have done is, first I have transferred the goods to warehouse. First I have transferred the goods to warehouse. When the goods are lying in the warehouse, I sold these goods to another customer. I sold these goods to another customer. I did not clear for home consumption. Whenever the goods are still lying in the warehouse, I sold that goods to another customer for 2 CR. Now finally, say for example, Mr. A, originally he imported. He sold the goods. He submitted a bill of entry for warehousing. When the goods are lying in warehouse, he sold the goods to Mr. B for 2 crores. Now, when Mr. B has to clear for home consumption, finally he is submitting the, now Mr. B is submitting an bill of entry for the purpose of clearance for home consumption. Now, on what value he is required to pay the customs? On what value he will be required to pay the customs? Will he pay a customs duty on 1 CR, or will he pay customs duty on the value of 2 CR? So here also they have told that the relevant date for determining the value will be the date of clearance for home consumption. Whenever you are clearing the goods for home consumption, what is the value? Importing you have done for 1 CR. But when you are clearing the goods for home consumption, at that point of time, what is the value? Sale has already taken place for 2 CR. No. So here the value will be 2 CR. Now I will tell you rates also. Say for example, when the customer has dispatched, rate is 15%. When they are cleared for home consumption, 20%. When they are getting cleared for when they're cleared for warehousing, 20%. When they're cleared for home consumption, it was 25%. What rate I have to multiply? On this 2 CR, whatever value which is prevalent as on the date of clearance for home consumption, at the rate of duty which is relevant when it is time for clearing for home consumption, that I will consider. So finally 2 CR at the rate of 25%, that value of customs duty will be required to pay. Able to understand? Clear and comfortable, everybody? So one simple thing we have to remember, what is the relevant date for rate and also value. So whenever you are submitting the bill of entry for home consumption, at that point of time, whatever rate is prevailing, that rate you can take, that value you can take. But here once again, the customs authorities have given a relaxation. Say for example, you are importing the goods by way of a vessel. You are importing the goods by way of a vessel. Now generally what will happen is, the goods will reach the port, then you will submit the goods for, then you will submit a entry for home consumption. But you all know that, but sometimes what will happen is, customs authorities will make a delay. These goods, this importer, he is having a urgency for these goods. He's having a very urgent requirement for these goods. Sometimes customs will get delayed. So what he has done is, he has the ship has not yet arrived. The ship or vessel or aircraft has not yet arrived. But what this person has done is, since the goods are, he's having a very urgent requirement for the goods, the ship is still in transit. So what he has done is, he submitted the bill of entry for home consumption on 25th of April. On 25th of April 2025 only, he submitted bill of entry for home consumption. But at that point of time, the entry inwards did not happen. The vessel did not get the approval from the customs port to unload their goods. It has not yet reached. But what he has done, he has submitted the bill of entry for home consumption even prior to entry inwards. Actually, ship arrived. Entry inwards has actually taken place on 30th of April. So even before entry inwards only, sometimes there will be provisions, the customs authorities will allow you to submit the bill of entry. So here what happened is, generally what will happen, first entry inwards will happen, then bill of entry for home consumption will be submitted. But there is also a case where you can submit the bill of entry for home consumption first, later entry inwards can happen. So in that case, which date I have to take? Say for example, on 25th of April, effective rate is 15. But when entry inwards, when actually the vessel got the clearance for when vessel got the clearance for unloading their goods is on 30th of April. On that date, effective rate is 25%. Which rate I have to take? Generally, what I told previously, I told that effective rate will be the rate which is prevailing as on the whenever you are submitting the bill of entry for home consumption. But here it has started creating trouble for many people. So what the customs authorities ultimately told is, bill of entry for home consumption or entry inwards, whichever is later. This is what simple provision. I told you all the background logic, but ultimately what they have told us, if this is the case, so anyhow, even though he submitted the bill of entry for home consumption on 25th, ultimately he will take the goods into the India on 30th of April only, no? Ultimately, he will take the goods into India, inside India, he will bring the goods only on 30th of April. Then what is the purpose of applying the customs duty of 15% here? So that's why what they have told is, let us make one rule. What they have told is, what is the effective date for the purpose of rate and value is whether the bill of entry for home consumption or entry inwards, whichever is later, on that date, whatever rate that is prevailing, whatever value that is prevailing, that we will take for the purpose of calculation of customs duty. That we will take it for the purpose of calculation of customs. Understood? This is what the final provision. So ignore all the background discussion. You remember one simple thing. So what is the effective date for the purpose of rate of duty, and that is tariff rate and value? So you have to take when the bill of entry for home consumption is filed or when entry inwards has taken place, whichever is later, that date will be considered. On that date, whatever rate is available, that we will take. On that date, whatever is the value, that we will consider for the purpose of calculation of customs duty. So this is what the final provision. So here it could be confusing. Here it could be confused. Here, this is what the detailed explanation. I have explained the background, but one simple logic you can write alternatively here. So what is the summary from this? Either bill of entry for home consumption or date of entry inwards, whichever is later. That rate and duty will be considered. Okay. That is what the summary. See here, we have some examples also. If the bill of entry is presented on 10th of October and the aircraft arrived on 20th of October. So bill of entry is at 10th of October, but entry inwards happened on 20th of October. What is the relevant date for duty and value? The relevant date will be whatever duty that is prevailing on 20th of October, whatever value that is prevailing on 20th of October, that we will take, because whichever is later. So here, how students will get confused is exchange rate. When it comes to exchange rate, whatever rate that is prevailing on the bill of entry, whenever you are submitting bill of entry either for home consumption or warehousing, on that date, whatever exchange rate is there, that you have to take. But when it comes to what is the effective rate and what is the value, here you have to take what is the date of bill of entry for home consumption or what is the date of entry inwards, whichever is later. So here is where students will get confused. So you often try to apply wrong things. For exchange rate, there is some effective date. For determining what is the rate and value, there is some different date. So these two dates you have to remember. So how they will pose a question is, let me see whether any question is there. Generally, they don't ask this deep. Majority of question will come from majority of the times question will come from valuation only, and here and there simple things only they will ask from customs. So, but anyhow, I'm telling you, even if at all they want to test advanced things, I'm just letting you know. Somewhere I have seen it. Just let me see whether I can show you. Here you have see it. Here you have see it. So just I will explain part of the question. Date of bill of entry. Date of bill of entry is 24th of October. On that date, basic customs duty is at 10%. Exchange rate notified by CBEC is 100. Whereas date of arrival of aircraft, that is entry inwards. Entry inwards is 20th of October. On that date, basic customs duty is a 15%. On that date, exchange rate is 97. So now I want to answer which rate you will consider. What will be the rate? What will be the percentage which you will consider? Which exchange rate you will use it for the purpose of calculation? First, exchange rate we will see. When it comes to exchange rate, whenever bill of entry is submitted, on that date, whatever exchange rate is prevailing, that exchange rate we will take. So here, first if I write the facts here, bill of entry has happened on 24th of October. On that date, customs duty is at 10%, exchange rate is 100. Whereas entry inwards happened on 20th of October. On that date, it is 15%, exchange rate is 97. First, exchange rate. Which exchange rate we have taken? When it comes to exchange rate, they did not say whichever is later, no such complications at all. When it comes to exchange rate, they have simply told whatever rate that is prevailing on the date of bill of entry. So exchange rate, this we will use. Exchange rate, what we will use? 100 rupees of exchange rate we will use. When it comes to duty, they have told for the purpose of effective duty, whichever is later, bill of entry or entry inwards, whichever is later. Which one is later? 24th of October is later. On this date, whatever rate is prevailing, whatever duty is prevailing, that duty we will take. So 10% we will use it. So exchange rate we will use 100 here. Since bill of entry is later, this 10% we are going to multiply. The same thing even you will be able to find it in the answer. So see here, 10% customs duty they have taken for the purpose of calculation, and exchange rate 100 rupees they have taken. Okay, so like this they might try to confuse you by giving exchange rates on different dates, by giving the duty rates on different dates. Let me see whether anything else is there. Any other example is there? That's it, I guess. Yes, here we can do. Once again, similar kind of question is there. Date of bill of entry. So first I will write bill of entry is 25th of April. 25th of April they are saying. And on this date, the basic customs duty is at 10%. On this date, customs duty is at 10%. And what is the exchange rate? Exchange rate is 85. Very good. Next, entry inwards. What is entry inwards? 21st of April. On this date, customs duty is at 20%. Exchange rate is 90. Okay, first let us determine what is the exchange rate. See, exchange rate we will take whatever is prevailing on bill of entry. On the other hand, so which rate of duty we have to take? Bill of entry or entry inwards, whichever is later. Which one is later? 25th of April is later. So on this date, whatever rate of duty is there, this we will use. So effective rate of duty will be 10%. Exchange rate which we will use will be 85. Now, just in case, let me change the facts here. If I change the facts here, if I say instead of this, entry inwards has taken place on 29th of April, what will be your answer? What exchange rate you will use? Exchange rate, no difference. We have nothing to do with entry inwards. Exchange rate, we will always take whatever is prevailing on the date when bill of entry is submitted. So this will be the exchange rate which we will use. Now, when it comes to rate of duty, bill of entry or entry inwards, whichever is later, 29th of April is later. So whatever duty that is prevailing on entry inwards, that 20% we will take. So here we will take 20%. So this is how you need to determine what is the effective date for duty and what is the effective date for the purpose of exchange rate. So that's all, guys, from the customs part. Apart from this, nothing else we have. Everything we have covered. This all things we have already covered. Exemptions, baggage and imported goods, you need not worry about it. This we will see at the CMA final level, now not relevant. Social welfare surcharge I have already covered in my introduction itself. In types of duties only we have covered. So IGST also we have seen when IGST will be payable and all things we have covered. So this is what the entire customs discussion is about. In all that, what is going to be very, very important is types of duties is important to some extent, and final valuation is very, very important. That to import valuation, many a times they ask a question. Even we have solved so many number of questions, I think you would have got the comfort on this customs part. Okay, so that's all for now. Bye everyone, all the very best for your coming examination. Take care, see you.